time, and now, of course, he has spent quite generation lender which you are transforming. So, any experience you want to share in that?
As they say, life has come a full circle. So I think a couple of things which I see, see with a smaller company or with a fintech, the ability to take risk is much higher, and the ability to take alternate sources of data, etc. Because that's the way the newer companies have learned how to do business. Whereas in the older companies, you're looking at what you have done traditionally. So this what's that Marshall Goldsmith book? What got you here won't get you there. It's clearly the way we work is very different. However, at given I think the forums that you all are doing, the kind of literature, and thanks to Google, so everybody today has a Google feed which is coming to them. So even the traditional companies are now looking at what are the sources of friction in each part of the journey. So part of the work that we are doing here, and thanks to the experience with ICICI and with the fintech that I worked in, we're looking at all sorts of areas where there's a friction. Traditionally, if I was an old school banker, I would have done, how can I take a scanned copy of this document? How can I provide a portal where I can update it? In today's world, having worked in a fintech, you're looking at how can I eliminate that data to be needed. And because India has such a beautiful infrastructure where you have account aggregators coming in. On the customer side, there is a lot of things that you can do and actually find out the credit limit of a person. So it's a massive transformation that's happening today.
Absolutely. And aided by the fintechs in the country which are coming in, it is going to be much more faster and much more agile. That is also a very interesting thing that is happening. I have a risk manager sitting next to you, and he's from Tata Motors Finance. And when all these engagements are happening with fintechs, and on one side, the bigger technology companies are getting into the agile world of fintechs, there is a lot of risk also associated with it. Come one circular from RBI banning the credit line, everyone has to go back to their banning the credit line to be issued to credit card. They have to go back to their drawing boards to make a new strategy. Come one, circular about banning the Chinese app, which are surrogate using your NBFC licenses to do raw credit. Again, there is definitely a risk manager's play coming in. So what is this constantly evolving kind of risk paradigm in this fintech driven world in NBFCs, and how are you insulating organizations?
See, I think it happens in across all segments that law takes some time to catch up with the changing societal and the customer and the technological paradigms which keep changing. The same thing is happening here also. Risk management also has to catch up. I think so we will also keep learning as to what's happening. But fundamentally, I think what is most important is that in the lending business, what I believe is that the lending business risk management is the core. Technology can be at the forefront, risk management at the end. No amount of technological advancement deployment should compromise the core, essential, traditional risk management norms or capabilities. And I'm not talking about regulations. Regulations is a different paradigm. The core essentials of risk management that should not get compromised. So that is, I think, the biggest risk when you get into a technology led engagement or technology led processes. And that, as a risk management professional, you have to, as an organization, you have to be very careful, because you can expand business, you can get superior expense, you can reach where no man has reached with the use of digital. But unless you apply a sense of common sense, unless you have a core traditional conventional collection mechanism in place, unless you understand the business of the customers beyond what is there on data, I think those are the essential things which should never get compromised when you adopt technology in a faster manner.
So
To, yeah.
basic business fundamental has to remain, and the risk also has to be fundamental. Ultimately, all the technologies are building blocks above the existing fundamentals. That is essentially what you speak, right? And have you been also using technology to manage this risk?
Yes, of course. See, you can. The advantage is with the use of technology, with the use of technology, your processing capabilities, the availability of data, all that is fundamentally increased. So it has made risk management much more easier, much more granular, much more better. So today, most of our businesses or credit decisions we do is based on scorecards. It's based on automated decision making. So that thing is there, but the lending business is much more beyond that, right? So there is cyclicity of business. There's a vintage curves which happen. Today, everybody would be very exuberant that the business is growing at 30%, 40%, 50% year on year. There's all early days. So unless you have the core things in place, that should never go compromise. And in fact, that should go hand in hand with the use of technology.
Excellent. I want to come to Shekhar with couple of more very interesting questions. But before that, since you are talking into the area of risk, Aishwarya, you have been a CFO. Would you like to actually share some thoughts from a CFO's perspective on these risks?
Actually, love and echo what he said right now. Risk, yes, there's a lot of data around it now than earlier. We are able to get that data through multiple APIs, multiple connectivities to multiple platforms, because the kind of ability to get the data is the challenge, or was the challenge a few years ago. Now that we have the data, underwriting it is about how can we, fast track it to such an extent using AI and ML and bring in, uh, I would say, more automated kind of risk modeling. Like at Kinara, we have more than 120 parameters with a data science engine which runs at the back end and evaluates each and every customer's ability to repay the loan, right? But at the end of the day, all the underwriting in the world is just probabilities, right? It's a probability of whether the customer will default, and if he defaults, hence what is the pricing I need to get from the customer so that I can manage the risk. And
Fantastic.
it moves into the collection game after
Wonderful.
that.
Great. So let me come now to Shekhar. Shekhar, you have been from the business side for quite some time. You have seen the business transform in different aspects from the front office to back office. And today, a lot of automation is happening in the back office, and a lot of that is being pushed to the front office to create better experiences. How have you been seeing the change in the front office and the back office in this respective
See,
segment?
basically, as we have evolved, the industry goes through its own motions, right? So, tech, the way people are being seen, you can see it in two ways. One as a disruptor, the other as an enabler. So, we see it as an enabler. The moment you start seeing as a disruptor, that's when the problem arises. Once you start seeing as an enabler, whether you're talking about fintechs or anything, you can use various models to fine tune it. Now, coming to the back office, front office question, yes, the need of the hour is for not only seamless integration between both these teams, but also in looking at how to serve the customer better with the integrated suite of product. So, for example, when the pandemic had hit, right, one of our key businesses is gold loan lending, and obviously that mobilization was key because not many customers would be coming to your doorstep. I mean, you had to go to them. So that's why we devised an indigenous plan where the back office team, which was doing the entire processing, valuations, appraisal of the gold, we devised a very creative proprietary appraisal kit. And they had to accompany our front end team, the sales team, and we used to go door to door and do the appraisal then and there and appraise the gold and deliver the monies online fully in an integrated automated format to the customer within a matter of minutes. So that was some innovation that was brought between the collaboration caused by front and the back office teams. So I think tech is one area where both these need to be savvy about at the same time about the objective of the customer.
Wonderful. And ultimately, tech also ensures one more thing, that while all the wires and all the confusions remain down below, hidden below, and on the top, it is looking smooth and experiential to the customer. I can see that tech guy smiling there, speaking about his experiences. Abhijit, you have seen it all. You have seen data evolving. You have seen data sharing happening, a lot of things happening with the play around data. Any new interesting aspects of how the data has evolved in the last few years? Can we have a mic to Abhijit, please?
No, no, I think I was just looking at, while all of it looks beautiful, it's like that duck which is swimming, and it's so difficult to maintain all these interactions, on a technology platform. But what's happening currently is that there's a lot of focus on, what I see is companies are looking at getting external data, but there is also a need for us to look at what data you already have. So I keep recollecting this. One of my bosses told me when I was handling data analytics in one of the previous companies that most data analytics people actually look for unstructured data, data outside of the organization, but there are gold bricks within your company which you don't look at. Yeah.
Absolutely. Bagal mein chura, gaon mein dindora.
Correct.
So, excellent. So let's get to one more important aspect. We are talking about, of course, Rohit, would you like to add something from the data perspective, since you are playing so much with data with the API, data protection, data sharing, and data privacy. All these are very important. And of course, you have to ensure the right data with the right person. How is technology playing a role there?
So basically, one first point is you have data, but how do you triangulate that data? How do you make sense of that data? And what Rohit Tikku also said, that traditional, you have the data, but the traditional, because credit is not a new business. I think it is one of the oldest, 5,000 years or 6,000 years. That traditional sense should not be gone. The data has to reflect that in scorecards that you're preparing. So that's one use of data. How do you use that data? Second is how do you protect that data? Because during transit as well as when it is at a database, it has to be secure. So data security is one of the biggest aspects. Even in co-lending, when you are sharing data between the NBFC and the risk that the bank is underwriting, the bank would like to know what risk I have underwritten, right? So that data protection is a very, very big thing. So the data has to be protected, and all norms. There are many norms. There are, I think, even our customers that we see have very, very strong CISO offices, and they drive in the security aspects, the vulnerability, penetration testing. All of that has to be there. You cannot do away. And then all like your there are certifications that help you achieve some of these things, these controls like ISO 27001, 1718, SOC 2 Type 3. These are some of the controls that are needed, and we have to ensure that we abide by all of these things.
Wonderful. Thank you so much. Now let me go to the collections perspective. You have been in microfinance. The biggest problem is definitely collections. And for you, I think microfinance has innovated the way collection is done for that matter. How has the pattern of collections changed in the last few years? And how has it been evolving now?
See, at the end of the day, right, collection is getting money back from the customer is a core of the lending business. Giving money is easy. Getting it back from the customer is the hardest part. And so collection eventually becomes the core of any lending business. What we are seeing, right, is that, and our experience tells us that it's extremely important to have that physical touch with the customer. The moment you lose that touch with the customer, you ain't going to get your money back. Right? It's been proven worldwide that whatever analytics you do, whatever you try and do digitally, if you're going to lose touch with the customer, chances of you getting money back during tough times is going to drop. For us, collection has, I would say we are at the early stages of easing the mechanisms of collection. Our customers are, they all have bank accounts. We are seeing early signs of them using bank accounts, but most of them still live in the cash economy. So they generate their income in cash. And so from a mechanism perspective, while we have all the tech to collect money via UPI, mandates, eNash, etc., eventually the customer needs to get the money into the bank before we can take the money from the customer digitally. Uh, so that is, I think, we are at the early part of that journey where pandemic has begun to get the customers familiar with the idea of digital payments, become comfortable with the idea of digital payments. Right? Obviously, the government has done a tremendous amount of work in terms of making sure that the Jandan actually gets used, DBT is being done in the customer's bank account. But the next, I would say, step change for us will happen when the customer starts transacting with each other digitally, where they start getting the money directly into the bank account. Until then, we've got a ton of technology, we've got a ton of analytics which tell us when the customer is looking risky, when are we looking at, when at a portfolio level there are things, at a geography level there are things that we need to start focusing on. And the technology is assisting us in our physical collection process. But eventually getting directly touch-free collection, I don't think is ever going to happen. But for our microfinance sector of customers, the next step change is going to be when the customer starts seeing money in her bank account.
Wonderful. Any thoughts to add from the housing finance perspective?
Yeah, see, from housing finance perspective, ours is a secured business, but still collections is as important as the business, because ultimately, if you can't collect, I think we don't have right to lend. So collections with the use of technology coming in, and it starts not after the customer bouncing and you go back to customer and then collect. It starts when the portfolio is built. There's so much of data science, data intelligence available. We analyze the portfolios, then we have the pre-delinquency management. Today, with the use of all the tools available, we get what is good with us, what is bad outside, or vice versa, and it's more predictable that who is going to bounce now. Now, the game of probability, which you mentioned, it is now in fact more predictable, and we have a set of customers that this will go very smooth as a green channel, or this there is which will have a bottleneck. So strategies are planned accordingly, and of course the touch base is important. Ultimately, if he had to give money, he would have given in the first go. So definitely one has to reach out to the customer to get the money. But collections is also, the business has eased out over the years, and so is the collections also, with use of tools, with use of strategy management, and I think it's a smart collections today.
Wonderful. Wonderful. Great. So collections perspective, definitely any business that is not collected is not done. So the fundamental, like Rohit said about, the business is that ultimately even risk fundamental or collection fundamental has to stay. How you do it is something that you innovate, and how you make it easier. Even our friend Abhijit was talking about a lot of friction points, and consistently people are trying to remove the friction points, especially in the NBFC business. I remember reading a book called as The Goal from Eliyahu M. Goldratt long ago during my management classes, and that talked about the theory of bottlenecks. Okay, typically even in any business, including NBFCs, the bottleneck is the friction. So, Shekhar, how have you been looking at the organizations removing the frictions in the business?
See, that's a very good question, especially in today's times with co-lending and BC and what have you, right? I mean, that's where the most of the friction comes in when you have to deal with an outside external party. The friction is also internally when you have to smoothen out the workflow. So you have to look at a two-way process. One is using tech and going back to the drawing board to see how fast you can crunch the lead time it takes to get the product to the customer in whatever geography he or she may be in. Mm-hmm. The outside problem lies with that, especially like I said, coming back to the example of fintechs. Let's say you're partnering with the fintech, and the reason you're partnered is because you might be lacking a product suite that you don't have, but you would like tap geography, and the fintech has that product suite. So it's a perfect marriage, right? The problem starts when you start delivering it to the customer, because your systems should be able to talk to the fintech's partner. That is where we had to undergo a lot of iterations, and over a period of almost 24 months, we were able to fine-tune only those players whose DNA matches ours. When Rohit was mentioning about risk profile, that's very important. It's not a matching of technology, The most important thing is to match the risk profile. I mean, am I going to lend to the same set of customers that the fintech is lending to, and vice versa? If there's a mismatch in that, no technology or nothing can save you from that. So that is number one, to match the DNA to almost 70 to 80%. Second is to match the tech readiness. The fintech, some of them may be very highly evolved, whereas the NBFCs or banks or financial institutions will take time to assimilate that technology into the overall system. And that is where we only look for like-minded partners, both from a risk profile to a technology-enabled profile, so that we can make sure that there's a smooth interface in between using a third-party app and make sure there's a smooth interface and we can blend it.
Wonderful. Thanks a lot, Shekhar, for that. And Rohit, you have been into the risk management space, and you have seen a lot of. There is constantly a tussle between the business and the risk when it comes to any financial services business, and I am sure you must be also going through the same on a regular basis. What kind of strategies can organizations or are organization thinking in this fintech world today to eliminate on one side the risk, but at the same time ensure that the business is also happy and have that kind of experiential customer there? So how are risk management teams looking at working? Because business has to come for everyone, be it for the risk or for the business or for the technology. How are you looking at those things? Can we have the mic for him, please?
When I moved into the risk function, my erstwhile managing director told me, in fact, he asked me as to what makes a car go fast. So I said maybe a good engine, a good driver, good power, good torque. He says no. What makes the car go fast is good brakes. Because then you have the confidence that you can go as fast as possible, and in case there's a problem, you can apply brakes. So he said the role of a risk function in a lending company is that only, that you have to enable the car to move fast. And that is the role, I believe, at least we in my organization, that's the role that risk function is taking. It is helping the growth of the organization, because we are at the forefront of designing new products, coming up with new policies. I'm not just the risk officer, I'm also the chief strategy officer of the bank, so of my organization. So we, as a risk function, takes the opportunity to identify new opportunities, to identify new growth opportunities, what you can do better. Because we are at the best position to understand the risks. Today, the risk is not of that what you should not do. The risk is not doing something is the biggest risk. Not looking at the opportunity is the biggest risk.
Absolutely.
So that is the mindset with which we approach the business.
In fact, I would add one more thing: not getting caught by the cop is also very important for driving down faster to your destination. Great. We will just wrap up with one quick question. I think Abhijit, you have been from the technology side, and Rohit, just one minute. What is that technology evolution that both of you see, which will take the NBFC business or the business of lending or the business of financial services to the future? What are those three technology points that you think will make a lot of sense? Technologies of the future.
Hi. So I think first, and India is doing very well in this regard, is completely moving into open APIs, and the accessibility and the consent-based accessibility of data, things like account aggregator, consent-based GST data that we can gather. So there are things that are happening there, but a lot of segment, for example, SCP, SENP, there is a lot of other things that need to be done, because for them the kacha pakka records are still there, right? So that friction needs to be removed. I think that is one area that the government probably needs to work towards. The second is, once you have this data, the data will fly around quite a lot, right? Because now with co-lending, NBFCs are partnering with PSU banks, and quite a lot of PSU banks were earlier left out when the private banks were making a retail book. So they are now coming into the fore. So how do you basically ensure that the partnership does not break, because it has been a start and story with co-lending. It started in 2012, then 18 and 20. I think finally it has taken shape. The systems can't evolve that fast, right? So how do you ensure that the systems with the banks and the NBFCs talk to each other over APIs and do that very efficiently? So I think that will be one of the crux. The other thing I think would need to happen is, like NBFCs pushed the banks in 2010 to 20. I think the fintechs are going to do that, and some alternate companies like Ola, Uber, Swiggy's may be selling financial products at your doorstep, right? So those are the things, those are the collaborations I see as future, and
Wonderful.
some of those things I think we need to.
Excellent.
Yeah.
Abhijit, quick one from you,
Yeah,
because
so-
we have got 3.58 minutes
3.56
only.
now. So I'll say, there are three trends which I see. So one is, this whole digital highway, or, 5G network which is coming in. Yeah?
Absolutely.
Especially coming from housing, I think what we all completely ignore is that the way the national highways are coming up, the infrastructure, it's very important for housing to come up. So, if let's say Mumbai to Navi Mumbai road is a beautiful road, and you can, traverse the distance in 20 minutes, all of a sudden housing comes up. So you see in some of the states, even between, let's say, Lucknow and Kanpur, the way the highway is there, look at the kind of properties that are coming up there. So I think that's the second big change which is going to happen in the country. I think the third big change which will happen is the privacy norms, I think, which you also talked about. The privacy and the need for privacy will push adoption of technologies like blockchain, etc., as we move forward.
Wonderful. In fact, I think there is a very strong talk about how the co-lending space is also developing. I could not take up a lot of questions that I had planned, but I think co-lending and how blockchain can play a role in co-lending, especially when there are too many lenders, is also one another thing. I was reading one very interesting nomination by Shriram Housing, where they have used blockchain to identify a proper credit rating for the customer, and it is being shared to all the ecosystem of that particular company, where every dealer and distributor is using that blockchain to get their credit worthiness, and using that they are lending it without any risk to their customers. So very interesting use cases, and I think organizations are experimenting with many such kind of things in the future. Great. I think I had a very interesting conversation with all of you. I wish we had a lot more time, but then when the clock is ticking, we also have to ensure that we have to do it on time. But feel free to engage with us. Any one quick question from the audience? Great. Audience is helping me to set the session on schedule. So great. Thank you very much, everyone. I take pleasure in thanking every one of you on my behalf uh, 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 to join this session and take it to the next level. May I request the Manoj to please come on the stage. Manoj is the editor of Banking Frontiers. May I request Manoj to kindly come over and hand over the token of appreciation.
Ladies and gentlemen, a big round of applause for Mr. Manoj. Thank you, sir. Thank you.
Shikhar.
And just a small note for all our leaders. You would want to open up this box because it has a beautiful caricature of you. So how about we whip that out for an amazing photograph? Sir, I would request you to actually open, sir.
Please do stand there. We'll
Mr.
take a
Shekhar,
group photograph.
request you to open the box and see there's a
You
beautiful
should open that
caricature of
box.
you.
You
In
should
that box
open that
itself,
box. You will
open the
find it
box.
nice.
Please open the box right now. Which reminds us, for all those leaders who are feeling left out, why isn't there a caricature for me? Very, very good. You'd be very happy to know this. RA Networks is doing a free caricature at their stall. So kindly rush if you want to share the same pride, which we're very sure that you are. So there is something about, sir, I completely agree. There is something about selfies. I completely agree
Something
with that.
that
You
you
could
can
have
keep
the
in your table.
highest definition camera right in front of you, but
It was waiting. Excellent. Just, just a quick selfie. Just a quick selfie. Yes, everyone is there. Thank you very much. One friend facing us. Yeah.
Deepika.
Thank you very
Fantastic
much.
leaders, ladies and gentlemen, a big round of applause for all our amazing, power-packed panelists right there. Of course, had to be with the moderator being Mr. Babu Nair. Fantastic, sir. Thank you so much. Thank you so much.
So I would also like to announce the arrival of Mr. Shaji, who is the guest keynote guest today, and he is also arrived. So just informing you of his arrival.
Thank you, sir. Great, great, great. Okay, so from just letting you know, we've got our keynote speaker come in. Thank you so much. Ladies and gentlemen, for our next segment, we have the super powerful, the brave, the bravado here to help you unlock the power of total experience and fast scaling NBFCs. Let's give it up for Mr. Sudipta Mukherjee, Senior Vice President Sales, Lead Squared. Mr. Mukherjee, what a pleasure to have you with us. Of course, before you start, one small question, waiting for your super short answer. One short question, waiting for super short answer. So, if you were, did I say were? You are a superhero. So, being a superhero, what would you say is your superpower? Yes. My God. If I was in that position, I'd be crying right now. Beautiful answer, Mr. Mukherjee. Completely agree. Mr. Mukherjee, wait for my resume, which will come in very, very soon. Fantastic. Thank you so much, Mr. Mukherjee, superhero himself. Stage is all yours. Thank you.
Thank you, Nikita. Mr. Babu and BF team, great setup. Should we wait for a few more minutes? The seats vacant, or we can start? Okay. Oh, sure. Okay. So we've taken a slightly different approach to present today. We have actually considered Gartner research, Gartner study, which talks about total experience. Now, we are in a NBFC conference, so using this for NBFC, but I think this is relevant for any organizations, whether it is financial services, non-financial services, tech, new age, in today's world, the total experience, and I think we'll go through it more. Next slide. This one. So yeah, I was talking about total experience. This is actually taken from a Gartner study, Gartner research, which talks about 4 key elements: customer experience, employee experience, multi-experience, so multi-tools, multi-factor experience. And if you see here, some of the touch points that is there that are relevant in today's time, both for a customer as well as for an employee. So it's actually both ways. If you see the way the diagram is presented here, So we all know that if you, I mean, the common saying goes by many business leaders, if you have the right people, the right talent, the right employee to service your customer, and if you can keep your employee motivated, they'll take care of your customers very well. So a lot of customer focus, while it happens and it is absolutely important and relevant, I think that focus on employee experience or the employee focus is equally important. I really believe in this, that if you have the right set of team member motivated, they'll really take care of your customers well. So as per Gartner study here, it says 25% or by 2024, organization providing total experience will outperform competitors by 25% in satisfaction metrics. Those who actually do the CX and EX, the customer experience and employee experience really well. 6 reasons why NBFCs, and again, this is, as I said, not just relevant to NBFC. I think this is for all of us here, NBFC, non-NBFC, tech company, new age, traditional company, everyone. So some of this data. Hello. Yeah. So 60% of large enterprise will use TX to transform their business model, achieve world-class customer and employee level. 80% of the employees in FinServ business would prefer remote working, making EX even more critical. I mean, this is Gartner study. Not sure about when this was done. So 80% remote working. Some food for thought for the leaders here. 400 plus employees globally shows 80%, 82% respondent believe that great EX employee experience will relate to great customer experience. This 400 is from an independent research agency, but I'm sure this number is way, way, way higher, and I really propagate this. 32% of customers will discontinue using services from a brand they have been loyal to just one bad experience. This is, I think, not my generation, but like slightly younger generation. This might be true. I might have a little more patience than some of us. But the new digital age, the new age user or new age customer, I think if you have one bad experience, they switch over. It is really, really true. PwC research has shown this. 60% of interactions are digital channel. We'll all agree. This number will keep growing. It has grown over last decade or so. 82% of top performing companies survey report focus on human experiences around digital and tech. Absolutely very, very critical. I think it's a point which is together mentioned. Implementation of total experience, TX. This is the fourth element. Strategy takes time. So I am very sure all of us here are at some stage of adoption with one of the factor, and all the four factors are important. So it is important to start early because it takes time. Areas of value creation in CX, EX, and UX. I will not go through all the points. You can have a look, but just some of the important ones from the customer side, identifying and prioritizing the right customers. The panel before we spoke how identifying the right customers, collections, lending is relatively easy. Collections are the most important. So the example that Rohit gave of car and the brakes, wow, what an example to remember. And then many other points, leverage data to automate, cross-sell, upsell. I think many organizations do it. That's the need of the hour. Super app is one such model, one such experiences where most companies are building on. Employee experiences, identify and retain the right talent. I think this is the third time I'm mentioning. Most important. I mean, even for my business, I think more than 50% of my work is done if I have the right team, and we all spend a lot of time. Still, there is huge gap. Still, there is huge gap. I mean, dearth of good people and the right people for the right role. Incentivize proactiveness, communication, feedback, some of the other points. The UX focus on uni-channel experience, build low touch point user journey. All this very, very important for a user. And this is for some of our friends here who are from the tech solution business. Gamification, making the user more adoptable to your tool, very, very important. Because I mean, one of our in our business, CRM decisions are again relatively easier, like lending. Adoption was in the collection side, related to collections are very, very difficult. So if you have the right tools, you can make your user more successful. The adoption is anyways going to be higher. Digitalization is critical to great TX, total experience. Of course, digitalization is the key. We took actually this report from Gartner study again for this slide deck. Think composable. This is especially important for large organizations, traditional organizations. In the previous meeting, we saw new age as well as traditional organization. Erstwhile, we have seen traditionally large organizations depend on one or two tools, making it more less agile. All the technologies dependent on one platform. I would not name any. But what we have seen in today's fintech and our customer place is that this modular approach, composable approach, really, really helps go fast, implement something very fast. Implementation of a tech tool or a CRM tool or any other tool is very, very important. Decision making is relatively easier. So I think that composable approach that, and my team and I can speak more while you can visit our stall, booth number 11, is this composable approach that our platform has taken. So again, continuation of composable business applications. Below you have legacy platform. Some of them are traditionally large platforms versus new age tools like us, and there are many others in the business as well. We try to depict various functions, various use cases, sales execution, workflow, customer servicing, how a composable approach will really help your business. So just one slide. I don't want to do selling. Hate doing it in a conference, but I'm a sales guy. Can't do much there. Just one slide on how we are approaching and how our platform is really adopted this composable theory. While you see some of these offerings that we have, that can be picked by customers separately, it can be picked together as well. So if there is a requirement for marketing automation or a mobile CRM, those can be all plugged in, integrated with different tools. So that's how we approach, and we have seen a huge success and adoption rate. So give customers what they require, match their requirement, rather than just give them the entire platform. So that's been our approach and our learning, and we have seen success both at our business growth as well as the adoption at the client side. So a little bit about, this is not selling Lead Squared or platform, this is just about Lead Squared as a company. We recently turned unicorn. In total, raised about $188 million. The last round was $153 million. A little bit about the company, 1,500 employees, 11 years, 2,500 plus enterprise customers, B2B enterprise customers. On a daily basis, we have roughly about 500,000 active users of our platform in India and globally. Platform is multilingual. It is beyond English, Hindi, regional languages. Very important for NBFCs, where you focus on tier 3 cities, rural areas. Any interest, please drop by to booth number 11 to speak more about Lead Squared. Some of our awards and our key investors, I'll not touch upon more. So that's all. So short presentation, but please do visit us at booth number 11. Worth mentioning, we are Make in India platform, absolutely made for India by Indians. Why it is important is that we believe we understand the ecosystem, we understand the user, the psyche of a user, what will be important to them, and we focused a lot on the user experience. That has helped us gain a higher adoption rate. So we'll be happy to, my team and I will be happy to speak more while we are there today. Thank you very much. Any questions I can definitely take up? Only one question.
Ladies and gentlemen, we've got time for one question. Anybody? Manoj sir. Yes, yes.
Yes, Mr. Agarwal. To make the platform more meaningful and powerful. So two points there. One is our implementation turnaround are amazingly very low in complex setup also, and we've done so many implementations during the pandemic era, all remotely, literally in 2 to 3 weeks time. And I would really not want to name customers, but I'm talking about even large enterprises. I'm talking about various financial services, insurance, lending, really 2 to 3 weeks. I think that being a very good feedback and a support from our customers, because they were stuck. They were stuck because suddenly something that has struck all of us, nobody was prepared for it. And to get the business going, it was very important that they have the right tools, and the tool is implemented very fast and can be actually implemented remotely. So that is one. The other is the adoption. I kept mentioning during the presentation is that for any tech tools, whether it is CRM or ERP or anything, post implementation, the adoptions is very, very important. If the users don't use it properly, it is not worth investing. And after 2 3 years, the customer as well as you figure out that it is not a good deal. Our adoptions are very high because and we deal from users who are very new age, 12th grade pass to very qualified wealth manager or investment banker. So that's the span of user. A user who's from a gig economy to a very traditional or very sophisticated user in the banking wealth management space. So that's where our platform has really been able to scale and adopt. Is I think these are two out of many other points, success points where we have seen success.
Fantastic. Thank you so much, Mr. Sir, we've run out of time. Can we take one question? Okay.
Yes.
Yeah, we'll take this. This is our last question. Yes.
Yes, sir.
So we'd love to know your name, which company are you from, and what's
My
the
name
question?
is Sudhakar Malpe. I represent a finance company, Kauri Capital.
Good morning, Sudhakar ji.
Good morning. It is fantastic to hear you because you're out of 123, you're 108 unicorn. That means, it's
you very
something great achievement in
Thank
India.
you.
Today's, in spite of that one, we must give him a big hand. Sir, my question is very simple. You mentioned about the rural reach. How do you reach the unreachable in this given circumstances of past 2 years of COVID and next 10 years? Thank you.
Great question. Very, very important while we focused on India business. So I would say that our customers reach the rural area. So fortunately for us, the customers are our customers. We are in B2B business, rather B2B2C. Our customers are people like all of us. So for us, our customers are within tier 2 or tier 3 cities max. but our customers. So our users are even at a rural India. Somewhere there is network connectivity also very poor. So the platform is actually able to, the user is able to use the platform with zero network. Just that in 48 hours you have to come to network zone. I think that's a great value add because network is really poor, and that is something that we have really worked upon. And multilingual capability of our platform. I think these two really helped us, our users, even at rural India. And great question, Sudhakar ji, is because lending business is moving. Right. Thank you very much. Thank you.
Great, fantastic question, sir. What a line! Reaching the unreachable, fantastic, absolutely amazing. And on that note, we'd like to call in Mr. Manoj Agarwal, Group Editor, Banking Frontiers, to kindly come on up and present our very own superhero, Mr. Mukherjee, with a token of our appreciation. Ladies and gentlemen, a big round of applause. We get it. Lunchtime is near. A couple more hours, but yeah. Yes, sir. So Mr. Agarwal presented Mr. Mukherjee with a caricature of him. So ladies and gentlemen, if any of you, what does any of you mean? I'm sure all of you want this for yourselves. Of course, this is not me. This is, before the shave, sir. So if you want a caricature of yourself, there is RN Networks waiting for you. Go to their stalls, get a free caricature right here, right now. And on that absolutely positive note, let's move on to our next segment. My God, for our next segment, it is none other than the guest of honor himself coming in. So ladies and gentlemen, with a big round of applause, we would like to call in a big round of applause, ladies and gentlemen. Our guest of honor, Mr. Shaji Krishnan B, Deputy Managing Director, NABARD. Mr. Shaji Krishnan is an inter-ally in charge of refinance to financial institutions, including NBFCs. Mr. Shaji joined NABARD as DMD on May 21st, 2020. Prior to joining NABARD, he worked at Canara Bank. Various capabilities of 26 years, and the most hard-hitting point is in Haryana, Uttar Pradesh, Gujarat, Kerala, and Karnataka. Can we have Mr. Krishnan to kindly come on up? Mr. Shaji, stage is all yours. Thank you so much. Thank you so much. Shaji sir, before you get started, just one small question, waiting for one small answer. You traveled, you've stayed in Haryana, Uttar Pradesh, Gujarat. This is as north as it gets. So what was the biggest culture shock for you going to the north? So just one liner on your biggest culture shock.
Yeah, that question leads me to my beginning of my career when I was posted in Haryana. That was in a rural village in, I don't know how many of you have heard, Faral, that is in Kaithal district. Hisar, many of you would have heard, and Karnal would have heard. This district is between these two. So I was literally plucked out of the college, planted in Haryana. Of course, I am a Keralite. So it was a culture shock. It was a climate shock, food, language, and what else you want? Everything.
I think enough said, sir. You have your eyes. We can see the pain in your eyes, sir.
But I enjoyed. And in the end, even though my banking career started there, after 4 years, it was a very enriching experience for me. I learned managing a branch. That too, within 6 months of my joining, it was a rural branch. Even those who are from Haryana was hesitating to go to that branch. So they got a Bakra type of person from south. So nowhere to go. It was in 1994.
My God, my God. I mean, these are the stories which we find to hear. So fantastic. Thank you so much for sharing. And we'd now like to call in Mr. Babu Nair to kindly come on up and present Sri Shaji Krishnan V with a token of our appreciation. Ladies and gentlemen, a big round of applause. Shaji sir, thank you so much for your time and your presence and making this a superstar session. Stage is all yours, sir. Thank you so much.
So, good morning, and thank you for the nice introduction and also the question. And of course, first of all, my apologies because I was traveling a lot. In fact, yesterday late night I reached here. Since I have committed to this and it is near to our office, NABARD office is near. Last 1 week I was not in office, so there are a lot of official commitments. Still, I'll try to do justice to whatever is assigned to me. I will talk about NABARD and NBFCs. As I have titled it, Partners in Progress. NABARD is an unlikely partner to NBFCs. I know that because we were little hesitant in the beginning because our DNA is meant for assisting public sector in terms of development. Development in the sense, NABARD, everybody will take it as synonymous with agriculture, but we have moved. Of course, our roots are in agriculture, but we are moved agriculture to MSME and other activities in rural areas. Now, NABARD, as the last one, rural development, National Bank for Agriculture and Rural Development. Rural development is what we are now focusing on, and we now realizes that we have to take people out of agriculture into other activities in rural areas so that the per capita income in rural areas will increase because that rural in growth is very stark and it is likely to create social strife. We realize that because 30% of the people who are in urban area, they are producing almost 70 or having income of around 70% of the national income that's shared, whereas the 70%, nearly 70% who are in rural areas are having access to only 30% of the income. So it is a skewed one. So we realize is that we need to take a lot of numerous people are now dependent on agriculture in disguised unemployment. So we need to give them proper employment and proper income. So in that count, of late, we have taken certain steps and we have realized that whatever public sector setup we have in the rural areas, public sector banks, regional rural banks, and for that matter, cooperative banks, they have not, rather, they have done a lot of things, but still, a lot of things, there is an unfinished agenda. Almost 30% of the people in rural areas are not having proper access to credit. Mostly they are depending on informal sources. Our NAFIS, that is NABARD Financial Inclusion Survey, the first round of survey in 2017 revealed that, and now we are doing the second round of survey, and we hope that the things will be better by now. Now, having said that, because we were partnering with mostly RFIs, we call it as RFIs, that is Rural Financial Institutions, that is cooperative and regional rural banks. And then we slowly expanded to rural branches of public sector banks and then to private sector banks, because that is the progression which we had. Even if you see that the financial inclusion, whatever activities have been done by RRBs and public sector banks, which are complemented by private sector banks, but still, as I said earlier, 30% is still not having proper access. So there, NBFCs will come in. If we really see cooperative banks, rather primary agriculture credit societies, which everybody is now ready to write off because of their poor, whatever baggage we had the last 100 years of their existence. So cooperative societies came into being in 1904, more than 100 years to almost 120 years. They are now having their existence here, but they have done certain works. They were the original NBFCs. I can say that non-banking financial companies at the time when the terminology was not there. A group of people in distress came together. So that was a participative capitalism type of thing, that they themselves put capital and put up an institution to serve themselves. And it was a response to a distress. As if you see the history, industrialization created a lot of distress in India in the rural sector because raw materials were sucked out of India. And as a result, famines happened. Money lenders came in. lot of issues were there. So sector responded with the cooperatives. Now you may be knowing that Government of India is trying to revive the cooperative sector. The recent announcement in the budget of a massive computerization of cooperatives at the cost of around roughly around 3,000 crore will be spent on around 65,000 entities, which are very active now, which we plan to expand it further to another 1 lakh to be added. So this project is being spearheaded by NABARD. So a warning. So we will be having a rejuvenated cooperatives at the ground level to compete with NBFCs, maybe in 1 year hence. So the sector should be ready to respond to the competition, and we believe in competition, healthy competition to happen, so that the customers should benefit. Talking about competition, RRBs were meant for rural sector, but they, aped rather their parent, that is the commercial bank. Their schemes were all copies of commercial bank schemes, whereas they were actually meant for innovating in the rural areas, responding to the localized needs. That is why they are local banks being set up in rural areas, that too headquartered in underdeveloped districts, but they didn't do the justice. So that's why NABARD also realized that no, we have to move away from public sector to private sector, and that is where we are now. We realizes that the NBFCs have got a significant role. They are having innovative products, and they are most importantly, they are pricing in risk properly. Whereas commercial banks, because of mandated lending or because of social banking type of things, they are not pricing the risk properly, and as a result, the NPAs which are there are not being are not being covered by proper provisions, because risk cost is what which is very important when it comes to going for provisions for whatever activities you are doing, and then the cost of operations. So when we compared recently the cost of operations of an RRB with that of a public sector bank, and that also with the industry as a whole, that is the banking industry, even though the net interest margin of RRBs are better than the banks, the commercial banks, but the cost of operations is eating into all this net interest margin. That means the net interest margin which they are generating is not sufficiently reflecting the risks they are taking. Whereas in public sector banks, there is a scope for cross subsidization. Private sector bank, there is a there's a possibility of not doing enough in the rural areas, that which is very evident in the financial inclusion aspects. Almost 95% of the financial inclusion activities are done by public sector banks plus RRBs, whereas the inclusion activities which is done by NBFCs are not properly documented at the government level. But then through surveys and all, your efforts are evident. So that is where we thought NABARD should support. NABARD is the development bank of the country, and we want our niche area is where the government sector and the commercial sector in between is the niche area where the development bank should function. We have to wean away the dependency of the people on the government to that of a sustainable commercial sector. That activity, that is what the development activity, which involves some sort of a grant, some sort of credit enhancements, some sort of subsidized financing, and then capacity building and such other activities. And we also try to lend directly to NBFCs, which I'll be catering now. So we started little late. We realized that in 2007, NBFCs were included as a eligible institution for refinance. Refinance in the sense, as far as NBFCs is concerned, though we term it as refinance, whatever funds you are raising from commercial bank and from NABARD, it's not different. So only the term it is refinance. But we were little strict, because first time we were dealing with the private sector. So we told that only AAA rated, top notch NBFC should come, and evidently no disbursement took place. But in 2014 we modified that. Credit rating were relaxed, and even for MFIs also we relaxed the credit rating, and quantum of refinance was increased to 85% for AA rated companies. And then in 2015-16, we started long-term refinance, which is 3 years or more. And in COVID, during COVID period, Government of India also mandated NABARD to go for that an additional standing liquidity facility to improve the liquidity aspects in the financial system. And as a result, we further relaxed the entry, the hazard, or rather the hurdle rate for NBFCs to enter into NABARD's refinance eligibility arena. So now, triple B rated NBFCs, smaller NBFCs also are eligible under the adjusted that additional special liquidity facility. Now, this is the way. So we have not done badly. Our CAGR in disbursement is 65%, and number of clients started with 30. Now it is 68. Of course, it's over a period of say 5 years, or rather 4 years, active years. So last year we disbursed 9,320 crores. The 18-19 was the peak period where 12,765 crores were disbursed. We were moving ahead, but then the COVID stuck. 20 it dipped, and again the amount is looking brighter. So this shows that we are not negative to the sector. We are there to support the sector, and you can see the reflections in the outstanding as well. The outstanding, it is not only to agriculture, because we in the rural non-farm sector is which is important. So microfinance sector is comprised of around 28% of our refinances to that sector. MSME 29%, others 16%, and agriculture is 27%. So agriculture, the share may go down because the base may go up. So we think with the rural agro processing sector, which is looking up, we will be very active in that area as well. If you see the RBI's definition of agriculture, many of the agro processing activities are now agriculture. So banks also will be actively lending to the sector. So you are also already there, where assets are getting created through your efforts. Now, non-farm sector, which we call other than agriculture sector in rural areas, is what we call it as non-farm sector. We are engaging with partners. NGOs are there, MFIs are there, NBFCs are also there. So here, mostly we are into capacity developing of the rural people. Training can be there, some grant assistance can be there, livelihood activities can be supported. So here now I feel that NBFCs can partner with NABARD, because you if you can identify the borrower and improve want to improve their skills, or an existing micro entrepreneur who wants to scale up, wants to have some sort of a development, then you can always come to NABARD for some assistance with your partners as well. So you may be partnering with a lot of other NGOs and such other things. So you can ask them to come to NABARD or you can facilitate also. Slowly, we have started with at least 2 or 3 NBFCs are being supported through this mode. Last year, we started this activity of providing grant as also for directly assisting for the skill development. Then we have a Catholic Capital Fund also for. Sorry? Yeah. So I'll be going fast. Some 2-3 slides only. So now Catholic Capital Fund is one thing which you can also think about. Some startups or some entities who need assistance. We have actually assisted at least 4 such entities. Now, for FY 2022, what we plan is that the union budget has already mandated NABARD for expanding the refinance, and we will be now disbursing credit. We have targeted close to 9,000, around 12,000 crores, 13,500 crores to be given this year. It is almost 30% above the achievement last year. And we have made certain policy tweaking also. We understand that some distress will be there in the balance sheet. So some improvements during the year also will be taken care, not the audited financials alone. Now, future, we are setting up a back office for the rural sector through this PAX computerization project. Whatever capacities we are building, we will be using that to leverage to help other institutions which are in the rural areas, some sort of a plug and play thing, some common IT infrastructure also on a cost sharing basis we can offer to you. We are setting up a data warehouse which will be used for rural credit registry. Then livelihood activities, which I told earlier, which will be sustained. And then we will be partnering with SFBs, banks and NBFCs to solve the regional imbalances. So wherever credit starved districts are there, we will have active involvement in those districts. And then you might have heard about ONDC. We are now in the process of helping our partners in the onboarding to ONDC, the digital platform, e-commerce platform. There, we will be helping the entrepreneurs to find better avenues for or better market their produce, thereby increasing their income. That will come in handy for you to improve your clientele base. Your clientele base financial health will be improved. These are the things. I am open to any questions in this regard, and I also would like to reiterate our commitment to NBFC sector, having recognized its importance in the sector. Thank you.
Thank you so much, ladies and gentlemen. A bigger round of applause for our guest of honor, Mr. Shaji. Thank you so much, sir. What a pleasure to have you. And I would request Mr. Manoj Agarwal, Group Editor, Banking Frontiers, to kindly come on up and present a guest of honor with a token of our appreciation. Thank you. Thank you so much. Great. From one amazing session to the other, for our next segment, we have, wow, the future is here. Very futuristic leader. Exclusively for you, we have Mr. Aman Kajaria, Senior Director and Head, NBFC Consumer Durables, Insurance, Skid.ai. Can we have Mr. Aman on stage with us? Mr. Aman has consciously given our audience members 2 or 3 minutes to just take a long deep breath. Got it, not a problem. Oh, that's Mr. Aman right there. Yeah, please do, not a problem, not a problem. So till then, audience members, we have a question. Of course, you know the trend at Banking Frontiers, we ask our amazing leaders a question to get to know your, the tech side is what we see on stage, but we also want to know you better as a wonderful human being that you are. So question to Mr. Aman was, for which we actually want our amazing audience members to help him out, is what is that one tip that you would want to give anybody who wants to transform their life? Because the session that Mr. Aman would be talking on is transforming collections in NBFCs with voice AI. So we just pick up one keyword. So anybody who wants to, sir, so I will count on you for everything. Can we have a mic given? Mr. Aman, not a problem. You are covered. Take your time. We have our amazing audience members helping you out. Yes, sir. One tip to transform life.
Yes, it has to be more solution based. Collection, for example. So whatever funds is given to the public, it should be insured. So in case if they're not been able to pay it back, it can be claimed from the insurer.
So that would have been a wonderful answer if Mr. Aman was asking the question. So something non-tech for me. One tip to transform life. What was that? One thing that you did.
Transform life?
Yes.
In general, you have to interact and connect with everybody. So one way or the other, you get the solution.
Wow. Beautiful, beautiful. Sir. On the spot, you can take my job any day. Thank you so much, sir. Thank you so much. Anybody else? So one bit. The question is, what is that one tip that you would want to give anyone to transform? Sir. Wow. My God. That's a beautiful answer. Sir, what's your name and which company are you from? Oh, fantastic. This too shall. Sir, जाता ही नहीं है ना पर. I am waiting. I am hoping. If the CRO of Skid.ai himself is saying, I believe that, sir. One day, absolutely. Thank you so much. Thank you so much. Mr. Aman, your CROs helped you a lot. Okay, good, good. So, stage is all yours, Mr. Aman. Thank you so much. And we would actually want you to come on up and give a big round of applause while audience members gives it to Mr. Aman. Mr. Aman, a big round of applause for audience members. They really, really came to your rescue. Thank you so much. Mr. Kajaji, stage is all yours. Thank you so much.
I think is it better now? First of all, yeah, really thankful, guys. I'm so sorry. As Ganga, my boss, keeps saying the Murphy's Law, it is bound to fail when you don't want it to fail, right? So that's what's happened. But with that note, I'm going to ensure that I'm going to make up for this. Just hold on to this. In a few slides, there's going to be something that's going to make you smile. Till then, just bear with me, and we'll see how it moves from there. Okay. So I'm Aman. I lead the NBFC and a couple of other verticals for this company called Skid. What Skid does is, I'll come to it in a few slides, but let me talk about two trends, or rather two problem statements that are very common to most of us today, okay? One of them is collections. I'm sure you would have heard so much about collections, and today NBFCs dread collections. In fact, in one of the recent meetings with the CEO, they told me that NBFC is not about lending. NBFC is not a lending business. It's a collection business. Because it's like a tap. You open the tap, you can release as much money as you want. But to get that money back into that bucket is a big challenge. And therefore, today NBFCs face that problem a lot. And these buckets that you see, pre-due, bucket X, 1, 2, is something that you'd be very familiar with. And you would have spoken to it. Heard about it a lot, and been around this for a long time. And unlike wine, right? The bucket calling or the loan sort of don't become fine with age, rather they worsen with age, and that's one of the problems that we are solving for, which I'll come to in a while. What are the challenges? Some very obvious ones. There's a high dependency on the humans. These are non-scalable because you can't be calling the customer at the time that they want to that they want you to interact with them at, and also more often than not, what we also understood is customers are called when they get into the harder bucket, when they have missed the payments in the grace or much after that. But if you want to call up the customer, remind him about the payment, and also get his feedback whether or not he's interested to pay, is he going to pay, when is he going to pay, and things like that, that's very difficult right now because of the cost that gets involved. Now think about it. Someone who's taking a small loan of 1,000 rupees and an agent ends up calling and spends 15, 20 rupees or 30 rupees for just to remind the customer does not make commercial sense, right? And that's one of the challenges, and of course, lack of persistence. So some of these are very obvious problems that I'll not speak about, but you would have heard about it time and again. Let me just go off track and talk about another trend that's emerging around us clearly, which is around voice. Voice in general is the most natural medium of communication, right? I mean, I would prefer to use voice over any other means of communication to express what I'm trying to say. A gesture or by typing it out, etc., etc. Rather, I would just speak out a few words and tell you what I feel, right? And that sort of is creating a revolution around us with all the devices that you see: Alexas, your cars, your TVs, fridge, even your contact centers today are all either already powered by some form of technology or in the process of getting there. It is started with some basic HANA questions, some basic FAQs. But the way that we see it, it's going to probably replace humans also to large extent, right? And that is visible with what some of these largest tech companies. So if you look at the 5 out of the largest 5 technological companies out there in the world today, the Microsoft, which is investing in Cortana, Apple, which is investing in Siri, Amazon, which is investing in Alexa. I can just go on. All of these are investing big time in voice because voice is the future of any form of communication between not just humans but also between humans and devices, and probably between even two devices going forward, right? That's how the whole ecosystem is evolving. On that note, let me just play a small video and tell you what we do at Skit and how are we trying to solve the two use cases and the technology that we just spoke about.
You have reached your ex-girlfriend's line. Kindly state your inquiry. Yes, this is Neha's customer care provided by Skit AI.
AI, you're using AI to break up with me. Okay, come on, Neha, stop
I'm
this.
more effective and efficient for seamless breakups and other hard conversations.
Hard conversations. I'm great at hard conversations, okay? I'm so easy to talk to. First of all, Neha, if you break up with someone, have the decency to at least call them or send a message.
Message from Neha. It's over.
Wow.
Thank you for calling Neha. Say one to get back. Say two to move on. Thought as much. You are now blocked.
Huh? Hello? You know what? They say your best friends are there for you, even if your girlfriend breaks up to using AI. Rampal? Okay, you won't believe what Neha did. She breaks up with me. Guess what? Using
Hello, you
AI.
have reached your ex-best friend's line. Kindly state your inquiry. Kit, transforming customer experience with voice AI.
Who's saying that?
All right. Anyone out there, I mean, the younger folks who are keen to use a solution for breaking up with your partners, do feel free to reach out to us. Yeah. But honestly, I mean, that's not what we do, but we do something similar. So the technology that you saw there, that Kenny, who is the famous comedian speaking to in the background, is the technology that we built for enterprise and for the contact centers, okay? Where your agents, thousands and hundreds, and that X number could vary depending on the size of your organization. That can get replaced with this technology that you just saw in this video. Now, what I'll do is I'll play a real example of how this technology today is being leveraged by banks, NBFCs, and multiple other such similar verticals like insurance to have that conversation between with the customer and to enable collections on a large scale. Can we play the first audio?
नमस्ते, जी से कशिश बात कर रही हूँ। क्या मेरी बात विकास तोमर जी से हो रही है? हाँ। जी, आपकी जी का 3,941.0 रुपए का EMI पेमेंट 10 मई 2022 को ड्यू है। इसके लिए आपको अपने बैंक अकाउंट में पर्याप्त बैलेंस रखना होगा ताकि समय पर पेमेंट हो सके। क्या आप बैलेंस मेंटेन कर पाएंगे?
मैम, मुझे 2 दिन का टाइम मिल सकता है। मैं बीमार होने के कारण नहीं कर पाऊंगा।
क्षमा करें, हमने आपको दुखित घड़ी में संपर्क किया है। क्या आप मुझे दोबारा कॉल करने का समय बता सकते हैं?
आप मुझे कल कॉल कर सकते हैं।
जी, कोई बात नहीं, मैं आपसे बाद में संपर्क कर लूंगी। आशा करती हूँ आपके यहाँ सब जल्द ठीक हो जाए। अपना महत्वपूर्ण समय देने के लिए धन्यवाद।
All right. How many of you are surprised by what you just heard? I mean, yeah, exactly right. So could you imagine a technology being empathetic to a human being, asking them about, if they're okay, when would they make the payment? And if the customer would have said, I'll make the payment by tomorrow, the bot is actually going to call the customer back tomorrow at the time that the customer wants to receive that call and, sort of take the conversation from where they left it off here, probably by saying, hey, I hope things are better now. And is this the right time to talk right now, right? So that's the kind of impact that the technology or as we call it, the voice AI or the voice bots are creating today. And mind you, this is not just in Hindi or English, but even the other regional languages, particularly in India. The 4 South Indian languages and then Marathi, Gujarati, Punjabi, etc., can all be deployed to sort of support your customer base across the country. So that's what we do at Skit. A little bit about Skit, I'll just sort of with the whole premise of and the problem that we're trying to solve. A little bit about Skit. We have about 30 million in funding. We have from some of the premium investors out there. This is slightly old, but we are on a 450 member team. Very recently, we've also sort of set up shop in the US, New York, Washington, and other places apart from India. In India, we are there in Mumbai, Delhi, Pune, Hyderabad, Bangalore, with offices in all of these places. We automate close to, again, this number is slightly old, but we automate close to 10 million calls every single day. This could be both inbound, where a customer reaches out to you for some form of interaction, where he could call up and say, "Hey, मुझे balance ही बता दो मेरा, or how much is outstanding? Can I get a receipt for tax purposes or whatever it is?" As well as outbound, where you can call up the customer to welcome him to to sort of taking the loan, or you could do the KYC checks there. You could do feedback there. Of course, collections being one of the very important use cases. And like I was saying, across the customer journey, from pre-purchase to acquisition to customer service to retention, all of this can be automated using this voice AI technology that we just heard. How is Kit really good at doing it? We go live in less than 2 weeks. So we are an out-of-the-box application where you decide what problem that you want to solve. For example, within collections, let's say, if you want to remind the customers before the due, the script is very different. As you get into the harder bucket, the script changes from mildly threatening the customers to then really threatening the customers by legal lawsuits, etc. Right? So the script changes, the customer response changes, and based on that, we have built out-of-the-box applications which you can pretty much instantly in less than 2 weeks with all the integrations just go live. And a little bit about the technology, we have our in-house technology that we have built to support all of this across multiple languages that I mentioned. And we optimize, and one of the problems that we've learned is if you can get that contactability with the customers, much of your collection problem gets solved. So what we also do is ask the customer, of course, about when is he going to pay or not. And then if he's not at the, like you've heard in the audio, if it's not the good time to talk, then you ask him about another preferred time, so on and so forth, do an auto call back at that time, change the language automatically based on customer's preference, which today may or may not be possible with the agent interaction that's happening at your call centers, right? So that's a little bit about some of the USPs. I'll try and keep it short, so I'm just skimming through the slides. We have a booth right outside, so feel free to, yeah, please. This is for yeah. So in fact, we started off about 5 years back with that exact use case. So today, if you talk to 2 out of the 3 largest banks in the country, not sharing it here on the platform, but I can share those numbers. And 2 of the 3 largest private banks, they are live with our solution. And today, when you call up their customer care number, you're going to talk to a voice bot. So you can go and say, hey, I want to know, like I said, I want to know about my balance, or I want to buy a new card, I want to block a card. The bot on the other side is going to say, okay, let me help you. Can you validate your card details? You can punch in the card number, etc. with the DTMF. It's going to verify that with all the integrations that are there in the backend, and then help you through that whole process. So we are a technology company which can solve for any use case, wherever there's an agent interaction that's involved, whether it is inbound, like you said, in the case of help desk, or it is outbound. So today, if you call up the largest airline in the country, among the 2 other largest mobile companies, etc., all of them are already live with our solution and using this really well to cut down on the agent interactions that's there, and to improve the resolution on the call, which today, think about it, right? When you call up a bank, you have like 5 levels of IVR menus. You press 1, then you go to the whole menu, you press 2, then you go to the whole menu and press 3. You can just cut it down and say, hey, I want to know about my bank balance. So you're actually saving probably good 90 seconds and you have a better experience. And of course, we keep joking this internally. Today, you can find a cab in 5 minutes, but you cannot get through to an agent in 5 minutes. That's the problem that we're trying to really solve for all the organizations that we work with. Okay, so yeah. Yeah, absolutely. I mean, those are not constraints because that depends on your telephony systems and the other systems that you have in place. What we do is we deploy a piece of software, which is a bot, a smart software in the backend to understand what the customer says, interpret it, form a response around it, and then play it back via the same channel or the telephony systems that you have in place. So we're going to sit behind your existing systems and integrate with your systems in the backend. So some numbers, we're running short on time, so some numbers on how we sort of create impact for various use cases. And also, right, you may ask me, okay, all of this is good. How do I sort of implement and use your systems, right? Right from designing the flows to running these campaigns on the outbound side, to also looking at to doing an audit and listening to the bot and customer interactions that have happened, to of course looking at the analytics. All of that can be sort of seen on our platform. and we are more than happy to integrate with your current LMS systems or CRM systems, pretty much all the systems that you have in place. And we already have all these integrations there, mostly for at least for the larger systems that are there currently in the market. So with that, I'll just play one last audio to refresh what we just sort of what the technology that I just spoke about, and with that we'll just conclude and take it offline. Can you play the second audio?
नमस्ते, शिश बात कर रही हूँ। क्या मेरी बात विघ्नेश सावंत जी से हो रही है? ये कंप्यूटराइज्ड आवाज बंद कर पहले और किससे बात कर? हेलो, किससे बात कर रहा है? हेलो, बात कर रही हूँ। कृपया बताएं क्या मेरी बात विघ्नेश सावंत जी से हो रही है? किससे हो रही है? किससे बात कर रहा है? अरे कोई पूरा पेमेंट कर दिया। अच्छा, क्या मैं जान सकती हूँ आपने कब पे किया था? 4 तारीख को। सेकेंड EMI और थर्ड EMI करने का है, वो अभी अगले मंथ है, जून में। ओके, मैं आपका पेमेंट हमारे सिस्टम में चेक कर लेती हूँ। अपडेटेड पेमेंट स्टेटस के बारे में हमारे एजेंट्स आपसे जल्द संपर्क करेंगे। अपना महत्वपूर्ण समय देने के लिए धन्यवाद।
So that was a small clip where the bot asked the customer if the payment was done. He says, first kar diya maine, second third nahi kiya, but I'll do it. The bot says, okay, let me just check in the backend because some of these payments do not happen real time. We didn't have the data. So bot says, okay, let me just check in the backend, and our agent will talk to you at the right time. So yeah, with that we sort of conclude. I'm well within time. Thank you everyone for being waiting around for at least the first few minutes and being patient there. I hope it was worth it. Thank you so much.
Absolutely. Thank you so much, Mr. Kajaria. Wait with us. We will also have to ask you to be with us and wait with us for a little more while. Mr. Kajaria, wow, was that even real? Those audios, right? And the AI being very sympathetic and empathetic to the listener. Contrary to my family, absolutely. But when you started talking about taking legal action, it was like, oh, finally, now I can relate. Fantastic. We'd like to call in Mr. Manoj Agarwal, Group Editor, Frank Frontiers, to kindly come on up and present Mr. Kajaria with a token of our appreciation. Ladies and gentlemen, a big round of applause, especially from our amazing sponsors and partners.
Thank you so much.
Great, thank you. All right, so for our next batch, panelists, all set? Give me a thumbs up. Great. Okay. So, ladies and gentlemen, for our next batch, we've got the Get Set Ready panel discussion. A very fast tracking innovative strength growth with fintech edge. Okay, so this is the topic, and we've got an amazing panelist all set. Just letting you know, leaders, as in when we take your name, this is a very small question. We introduce you, you answer, super short answer only, okay? So we're going to start off with our moderator, Mr. Sushil Zargaonkar, partner, EY India. Mr. Sushil, so of course the topic, kindly come on up. The topic you'll be talking on is fast tracking innovative growth with fintech edge. So the question is, what is that one thing that gives you an edge over everybody else? Full bragging, just one quality that gives you an edge. Oh, the EY brand. Yeah, I'd be saying the same thing if I was at EY. Thank you so much, sir. Thank you so much. Kindly take a seat. Next leader is Mr. Aditya Agarwal, Head Business. We Rise. Wow, Mr. Agarwal, kindly come on up. And what is that one quality which gives Mr. Aditya Agarwal an edge over everybody else?
For me, I would say for our organization, it's the entire effort that the entire team is making. Like everybody is gung-ho about the solution that we are solving, and that's giving us the edge.
My God, so how humble are all of you now? Then from next onwards, you have to only talk about yourself. Thank you so much, sir. Thank you so much. And next leader is Ashwini Kumar, General Manager, India Empire Financing. Mr. Kumar, strictly speaking from Mr. Ashwini Kumar, what is that one skill that you have that gives you an edge over everybody else? Wow, brilliant. Thank you so much. Our next leader is Mr. Sandeep Sonpatki, Chief Business Officer, Lending Cart. Sandeep, sir, what would your answer be? Great. Thank you so much. Sir. Thank you so much. Our next leader is Mr. Anil P. Napala. Sir, you'll have to help me out with the very interesting surname. So I think that gives you an edge over a lot of people. So our next leader is Mr. Anil, the founder of VV5. Wow, sir. What gives Mr. Anil the edge over everybody else? I agree. Could
You're
not
very
agree
lucky.
more, sir. Could not agree more. Our next leader is Dr. Jasmine Gupta, co-founder and CEO LXME. Lakshmi. Wow. Wow. It's such a Gen Z way of. Yes. Dr. Gupta, let me answer what gives you an edge is creativity and innovation. How about that? Yes, and confidence. Fantastic, Dr. Gupta. Thank you so much. Our next leader is Mr. Vaibhav S. Joshi, co-founder and CEO. Easy Pay. Joshi sir, what would your answer be? Oh, passion and zeal. Wow, fantastic. And our last leader for our brilliant panel is Mr. Gangadhar, the Chief Revenue Officer of Skate.ai. Gangadhar sir, let me answer. Coming to rescue. Energy, yes, fantastic. Leaders, I mean, what a brilliant set of panel that we have. Stage is all yours. Thank you so much.
Thank you. Am I audible? Okay. All right. I think the panel today is about fast tracking innovation growth with the fintech and how do NBFCs leverage that really to grow their business, accelerate the transformation, and improve the customer experience overall. I believe post-pandemic, the markets are recovering. We've seen consumption grow. The demand for credit is growing as well. And that's really triggering the NBFCs also to evaluate different business models. And many of these are led by fintechs. Prior to the pandemic, most of the digital transformation was restricted mainly to the large NBFCs, but that's changing now because after pandemic, the digital adoption increased significantly, which now means that NBFCs also are changing their business models to cater to the changing demands of the customer. The traditional products have now transformed into specific products for specific customer segments, be it education, be it MSMEs. Gone are the days when we spoke only about personal loans or basic two-wheeler or consumer durable loans. So we'll talk about how fintechs are enabling this change and how this is actually helping NBFCs create an edge for themselves in the market, at the same time bring innovative products to the customers. And I'm going to start with you, Jasmine, on the Lakshmi concept, right? How are you leveraging fintech, social media, digital data to attract this new specific segment that you're catering to, and what are the product offerings that you are able to build out of this digital data that you get from the fintechs at the same time, your integration into the ecosystem?
Yeah, thanks. I think so. Lakshmi specifically, as of course mentioned, that it has a connection with Goddess of Wealth because we are creating India's first neobank for women, where we are integrating wealth tech, banking tech, lending tech, payments tech, all into one single platform.
Right.
And making money management extremely easy for women.
Mm-hmm.
And why do we do that? The reason is we've done a survey through Access My India. And through the survey, we realized that women, of course, 50% of the population of the country, it's a big market and a big
Absolutely.
opportunity. And women specifically have remained financially excluded for a very, very long time.
Financial literacy part as well is something that I believe
Right.
is important.
So that's where we started, that there's a big gap in the market. Women are not comfortable. I mean, we have the Grow, Zerodha, and all the major platforms for wealth, for for the general platforms. But the women population on those platforms is just 10%. So why is it that women are not feeling comfortable about getting into these platforms? So I think we realize that there's a big opportunity here that we need to get into. And as you rightly mentioned, it starts with financial literacy. So on our platform, we have women. So it started as a Facebook community. Now we have communities on Instagram, we have communities on Twitter and all the other social media where we have covered. And women, when they join the community, the first thing they get to see on Lakshmi is, how do I learn finance? So we do financial boot camps, we do a lot of workshops, we do gamified learning. So you play housey and you learn money. You play Wordle and you learn money.
Interesting.
So that's the gamified version of learning where women find money and finance very interesting. And I think that is the first step that women take towards, taking charge of their money.
So, the social media plays a very critical role in
Social
your
media is the first starting point for the women to get into. The second point is that they start learning finance. And the third point is, how do we make it easy? So first is educating them, and second is making their financial journey extremely easy. So while there are 400 mutual fund schemes in the market, I think any woman who wants to start the journey will be it's very difficult to make sense of the entire market, right? So we have curated portfolios. Okay, your goal is child education. Just go and invest in child education portfolio. It will take care of everything, because there are 4 or 5 mutual fund schemes forming that portfolio which will help you achieve that goal. Your goal is tax planning, your goal is retirement. I think we have those very, very specific portfolios which cater to the various personas of the women. And I think that's what is very, very, very innovative.
Right.
Yeah, because on one side you are making them learn, you're making them educated. Second time, you're making their journey extremely easy. And then you are offering them a lot of other products so that it is a one-stop shop for them, and they need not go anywhere for the debit card or for the savings account or even for the personal loan requirement. You have it all on your Lakshmi platform. And this is very important. And I think the way neobanking has taken up, I think the fintech industry has revolutionized in the last 2 years. And I think every neobank brings with it a very different sourcing strategy.
Absolutely.
So for us, for example, community is the most important sourcing point.
Brilliant.
Right? When I launched NeoX, when I was on the other side of the world, I was into Equitas Bank, and I was instrumental in launching NeoX, which is the first neobank in the country, and I think the fastest growing neobank in the country. I think the acquisition strategy, the sourcing strategy was very different because it was targeted towards millennials and the Gen Z. The direct to customer acquisition worked really well. Having said that, I think innovation is not just required in the product offerings that you're offering, not just required in the sourcing strategies that you are applying, but it is also required in the fraud management and getting the right customer in.
Absolutely.
Because that is also, I think, extremely important when we go digital.
Absolutely, absolutely. Thank you very much. Now, in fact, taking the point on digital sourcing, Aditya, you have a very different model as well. Jasmine mentioned a lot about sourcing from the social media, which is primarily digital people who are digital savvy. How does that change when it comes to distribution-led model, especially in the tier 2, tier 3 cities and towns, where people may not be very digitally savvy and social media may not be the prime channel of acquisition? How does that change for you?
So to answer that, what we have built at Hira is primarily we also understand that we are trying to solve financial services for people living in the smaller towns. So what we can, if we categorize the traditional, how we categorize India 1, 2, 3, mine is the lower segment of India 2. People who are living in small places like Dharwad, maybe 50 kilometers outside Dharwad, maybe 20 kilometers outside Hooghly. That's my customer segment. And for this customer segment, this is a very large customer segment which has been ignored. At one side, we have people going after millennials, the tier 1, the cream of the cream. The other side, the banking, the entire banking ecosystem has gone to microfinance.
Right.
People earning about 5,000, 6,000 rupees. But the lower middle income, the lower middle class of India, earning anywhere between 10,000 to 30,000 as a family monthly, that's been ignored. And that's the customer segment that we go after. And this customer segment is literate, but not literate. They are not savvy enough to use technology, or they are not comfortable enough or trust the technologies.
Exactly.
enough.
So in this particular case, how does fintech play a role for you and help you enable efficient operations
Yes. So
and
what we have
reach a larger
created,
scale?
so what we have created is something of a social distribution model. The closest comparison that I could make probably is a Misho of financial services,
Okay.
where we are creating social micro entrepreneurs. So let's take the example of LIC. LIC has 15 lakh LIC agents spread across the country. You have you have small wealth advisors, you have CAs, you have uh, employees of cooperative banks. All of these people already have a captive network of individuals around them. So we onboard these individuals as micro entrepreneurs. We onboard people who are CSE agents, for example, uh, who become the face of the organization on the ground.
Right.
And these people are these individuals are the people who source for us, and these people are savvy enough, and we invest a lot into teaching them these technologies. But where we have created this difference is, we do not have a single member of sales team.
Right.
We do not have a single FOS person in the company.
Okay.
The entire management, the entire ecosystem management, the entire training module is all done digitally. We only have a centralized team which takes them through the entire onboarding journey, how to use the customer app, how to use the partner app, the social partner app, how to do the entire sourcing. We give them the technology solutions. We give them digital visiting cards. We give them digital QR codes. We create their own websites. We provide them access to create, to send, to do their own marketing over social media. We give them customized materials in their own names,
Brilliant.
wherein they are able to create a difference in create a name for themselves.
Mhm.
And in the small span of time that we have, we have about 25,000 active agents in pan India right now, without a single FOS person.
So you're basically not only helping financial inclusion, but you're also helping create small entrepreneurs.
Yes, absolutely.
In this. Brilliant, brilliant model. I would just like to take that conversation further. And Sandeep, you've worked on the, you worked in the consulting side of the business as well. We've seen a transformation happening from a perspective of what NBFCs were offering. The platform play is a mainstay now. People just don't want to restrict themselves to a particular set of product. They want to bundle products together. They want to engage the customer on an ongoing basis, because it's not only about one product and the relationship is over. You want to acquire good customers, build the relationship, and grow that pie. How are you using technology to build this platform, and what are some of the ecosystem learnings that you've really brought into the play when you are building this out for Linka?
Absolutely. I think first thing to consider is the fact that, like, you know, as a topic of conversation today, right? Like, how do we bring in with fintech edge? Normally, banks have taken, you know, would, because of regulatory challenges and others, would have taken a longer time for evolution.
Absolutely.
I remember in the US, we were trying to pitch machine learning for, you know, origination models. And that is very hard because it wouldn't pass the regulatory test. So first we needed to educate them and all. A fintech ecosystems allows for us to speed track the environment and the industry ecosystem itself. And that is where a lot of, you know, like IDFC is going on a similar model like ours. It's not just the unserved or underserved. Like, we are giving education loans, no cosigner, no collateral education loans based on forward earning potential of the student. Now, in that kind of an ecosystem, you would see that we are also able to do psychological profiling and understand the customer behavior. At the end of the day, grassroots of lending is only two concepts, right? Time immemorial.
Yeah.
One is ability to pay and intent to pay.
Right.
So more data we are able to acquire, more information we are able to acquire, that gives us a better opportunity to serve the customer with curated products, right? For example, I remember when we were trying to underwrite for a particular bank as part of a consulting journey, and we found so much data. One of the things we found was people who were getting this, you know, for the car floor mats, there's a specific cleaning product. The guys who got that, they had the highest correlation for sticking as a, you know, best credit borrower. So I mean,
But
like,
the challenge is, getting the data right in the first place. Building out the correlation is very, very important. But the problem I find is the data is not available, or if it is available, it's not structured. So how do you sort of overcome that?
actually, if you talk to data analysts and data scientists, they are increasingly saying, I want unstructured data, because they're wanting to go and explore this as in so many different
Right.
dimensions, of course, within the regulatory purview as much as possible. And they're getting more creative around that also. It's very important. See, if I know, like if I say, okay, this person has taken an education loan, I'm going to just mass market you with, okay, do you want accommodation there? Do you want a credit card there, debit card there? That's not going to work. I'll be spending so much. My customer acquisition cost is going to increase so much. So if I am able to build a customer profile, I can say, okay, this person needs an unsecured credit card versus this person who can afford a secured credit card versus this person who can afford an unsecured credit card, so on and so forth, right? And then you build more innovation around it. Like there are people who probably are going for auto loans right after graduating from school. So we probably don't even have identification. As far as your question about data, right? The boundaries are slowly breaking down, right? And that's where the fintechs have played a part, because they are democratizing data across so many different platforms, so many different sources. Right now, I can say, like, I remember Facebook when they had come to our office one time, they had said that, you know what, we can provide you data for your underwriting. I know we couldn't have used it for underwriting, but within 3 or 4 degrees of freedom, I could say that based on somebody's photo, whether they have a gun in their hand or a beer in their hand or a teddy bear in their hand, I know exactly what is the correlation of whether they're
which is something that the banks may not be able to do ever.
Exactly.
Right?
But it will give me an edge over collections. For example,
Interesting.
skip tracing, right? Rather than do manual skip tracing, now we are going into the world of bots finding the best correlated segment for skip tracing. I can minimize the effort of research. I can minimize the effort of trying to figure out, who is the best person to call. And fintechs, they have data across so many different companies at the same time. They're able to, that's why democratize data. Even if you can't use the native data, at least they can make composite,
Composite use
analytics
out of it.
data out there.
Absolutely.
That is where the transformation is phenomenal, and now banks are also jumping into it, right? So that is,
I think I think the evolution of the partnership model is essentially the genesis of what you just sort of mentioned.
Exactly.
I think it is supposed to grow, and we'll see how this is going to transform, because student ecosystem is a very niche segment where the parents also have a significant stake, and you will have some guarantors, or probably have a collateral also coming from them. And how do you automate some of those from a perspective of, say, land registry records, or for that matter, even data around the assets that they have? How can you use that to improve your funding line, and as you go along, build a longer, because you first help him get into the first university, then if he wants to do masters, you again want to fund him. You don't want to leave him as a customer.
absolutely. And beyond that, a neo-banking concept, right? They are at some point going to take a car and a home loan and all of that stuff. It just builds over there. So many ancillary things can also come about that, right? And the beauty of it is, being a no collateral, no cosigner, we started off supporting only the unserved and the underserved. But now we are seeing students are coming to us and saying, you know what, this is the Gen Next, right? They're like, I don't want dependency on my parents.
Absolutely.
I know when I went to the US, it pinched me that my father had to put collateral for a bank to get it. But now students are like, I'm able to be free out of that, even if the parents can afford it. So that is the whole thing, right? Like now you have to do that profiling to understand the customers and curate content and products based on that.
Fabulous. Sandeep, to your point as well, because you operate in a similar setup. For example, lending card is also in a similar business. How do you see this space evolving? Have you seen any product bundlings that have come about? Because we've heard about people catering to a specific segment. You don't have a segment-specific product line, but you have a platform that runs across. How do you see this coming along?
Sure. Yeah. So in fact, I'll also for the point that you raised earlier, right? Because of the pandemic, a lot of things also have changed over the last couple of years. And that's what we've seen, right? Because when we started our lending journey, we started back in 2014-15. Over the last 8 years, our focus has primarily been on unsecured loans for businesses, right? And what we realized was, especially with the RBI guidelines coming in for co-lending, right? That really helped NBFCs and banks partner together and bring complementary skill sets, because there were NBFCs like ourselves, which were very product specific, very customer segment specific. And we had built deep expertise in that. Whereas what banks had done was they have really cracked the infrastructure space, where they have created branches across the country and they're able to mobilize capital. But they may not be very product specific, but they're more generic in that sense, right? And that's where the co-lending arrangement really worked for us, because we brought the product expertise, we brought the segment expertise, and the co-lending partners, the banks, really brought us the capital for us, and we are able to, it's a win-win for everyone. Now, what we've seen is that as we have matured in the co-lending model, and that's where we see the future now, is the same lenders are now coming back to us and saying that, okay, lending card, you have a phenomenal network towards the merchant side and the unsecured lending side. But hang on, that's not the only product we operate in, right? As a bank, we have education loans, we have secure lending, we have LAP, we have, so they have multiple products to disburse. But again, they may not have expertise in each of them. That's where they want to partner with multiple fintechs who bring in that product expertise, right? And that's where we realize that as a platform, what we can do is we can help connect these different fintechs who bring various expertise on one side, which is on the originator side, and we work with the banks and lenders to provide that capital to those lenders. So that's where we see the market evolving, and that's where the product bundling and where we're saying that leveraging the same network, the same distribution arms, can we source multiple products and get, because the customer today also may require multiple loans, right? You have a merchant who may either want an unsecured loan or any kind of financing which can get them. They can give out their gold for gold loan, or it could be a LAP product. Basically, they're looking for financing today,
Absolutely.
right? And we have to meet that financing need of the customer. So they are product agnostic and try to make sure that whichever product that is appropriate, and we are able to do the risk profile of the customer and allot it to the right lender who can take that risk. And that's where we see the future.
Vaibhav, coming to you, you play in a unorganized space, and your tagline says organizing the unorganized, right? How do you look at the unorganized sector, and is fintech actually helping this unorganized sector come into an organized setup and really bring value to them? You obviously offer a whole array of services that go beyond lending, right? And that also allows people in the tier 3, tier 4 areas also to get access to financial inclusions, be it bill payments, insurance, be it cash withdrawals, micro ATMs. How is it that you feel this industry will change or evolve with fintechs coming in? And do you see a collaboration with banks becoming more deeper as you go along?
Definitely, and that's the reason somebody like me has actually left a banking job and come on the other side of fintech. So for those of you who don't know, I used to be the Chief Digital Officer at Equitas Small Finance Bank, and prior to that, I was the country head digital banking at Yes Bank. And now I'm on the fintech side of things. So yeah, answering your question, now coming to that. So what we are trying to do at EasyPay is we are trying to create a MSME neobank, an embedded finance, neobanking platform. And see, I feel that unorganized sector in India, especially the MSMEs, which is the second largest employer in the country, has tremendous potential. And both banks, NBFCs, whether it's PSU banks, private banks, small finance banks, payments bank, cooperative banks, and then NBFCs, they have been largely neglecting this segment because majority of the financial institutions have been focusing on the secured or the structured part of the clientele. So everybody has products for corporates, everybody has products for SME, people have products for MNCs, governments, your retail consumers are serviced in a branch model. But what about that micro retailer or a retailer who has his day-to-day requirements? He has been there at his shop or his thela for the past 30 years, but then he doesn't have enough collaterals, and he's the one who often ends up at the mercy of these loan sharks. Okay, and even for the smallest of the things, it is just recently, some 4-5 years back, that with the advent of UPI, now we see QR codes at least at the shops, and we are still talking about urban. If you go to tier 2, tier 3, tier 4, you will realize the type of transactions that happen at these shops. Almost everybody in the village knows that one village grocer. Almost everybody in the village knows that one village panwala, or that distributor that is there. And that shop today has become an ATM counter by the way of a micro ATM. So AEPS or micro ATM has really taken up speed over there. Okay, that shop has become as a bank counter for a cash deposit. So there is a product known as domestic remittance or domestic money transfer. You can just walk into a shop and deposit money. So on an assisted model, minus that SLBC model, not barring the old SLBC model, the urban BC model, financial model has picked up, and DMT, AEPS services have picked up. But having said that, still the essence of financial inclusion for that particular MSME was still missing. So that is why we said, hey, let's do one thing. There is this MSME who is transacting. Day on day basis. So whether he sells, he's a grocer, whether he's a mobile store, whether he's a cloth distributor, he has some kind of inventory churning, he has some kind of income coming.
Yes.
Now the income may come in the form of cash, or it may come in the form of digital, and 80% of it comes in the form of cash. So digitize that part first. Once you have digitized that part, give him a whole plethora of services, starting from payments, digital CASA, lending, wealth stroke insurance, and digitize his ledger. So
Absolutely.
a digital khata book. When you do this entire plethora of services, that is what we are calling the MSME Neoment. Now I want to touch upon a couple of points that my other fellow panelists were talking about, and you were asking them about data points and so on. Okay. Now let's understand that 95% of the 70 million MSMEs in India are actually falling in the micro segment. When I say micro segment, they are all small MSME retailers kind of.
Absolutely.
Okay.
The merchants, basically.
The merchants. Now, I used to be at Equitas, and I'll tell you how we used to do microfinance over there. So we would have a last mile guy. He would walk into a shop. It can be a thela. He would, start underwriting. He would say, there is one table. It looks to be worth 7,000 rupees. There are two chairs. One chair, one leg broken. The chair seems to be worth 750 rupees. There is one gas, 1,500 rupees. There is one cylinder, 450 rupees. He would do he would create a
The
list,
assessment.
and then he would say the total comes to 35,000. I think this guy is worth 15,000. We are okay to, underwrite and lend him 15,000. This is what happens at the ground level. This is what a small finance bank does. And this is a fact. Now I am saying let's digitize this.
Yeah.
Okay, what is stopping us from digitizing it? Maybe a bank won't, but a fintech would definitely do that. Now, when we digitize this, okay, when we started the process of doing this, so how I onboard my customer is I do a very unique video KYC. Unlike banks, whose video KYC is, with liveliness check and all those things. So I tell him, so my agent actually onboards him. We have captured his data points, and then we tell him now, go to the rear camera. He switches to the rear camera. We tell him now, show us your shop. So he will show the shop.
You do the digital underwriting, table hai, cylinder hai.
No, so hear me out. Hear me out. What we are now doing is we are integrating Web 3.0 over there. We are integrating very intelligent AI over there to understand what kind of inventory he has in his shop.
Yeah.
At the back end, my algo also calculates the probable cost of his inventory, which actually then we map it to the geography pin code he is in, to the type of footfalls he may be getting, because we also have his digital agent. Then we create a proper baikata of that guy. At the back end.
This is real innovation,
Okay.
grassroots level innovation.
And this is when he's doing this, we are capturing this. So there is something that happens real time. There is something that, my AI works on the video. And when my AI works on the video, it creates a profile of that particular guy. Post that, what we do is, we take his permission when he downloads our app that we are going to read his SMS, so on and so as per regulator. So we actually construct his bank statement at the back end. When I construct his bank statement, understand he has not uploaded the bank statement in my app yet, but I am constructing. Basically, I am trying to understand what are his revenue lines. Okay, I understand if he has an electricity bill, if he has how old it is. That gives me the data point that he is the owner of a house or the owner of a shop. That means he has property. Okay, how old it is, what area is in, urban, rural, tier 2, tier 3, tier 4. What is the type of electricity bill payment is making. That helps me understand whether he has a refrigerator, whether he has an AC, whether he has a TV. We break down all those things. Then we do his social media scrumming. We understand that, whether he has been on Facebook or Instagram for how long he has been there. Okay, so that gives us profile. So basically the complete alternate database profiling we create. And then I'm telling you around 90% of my customers are new to credit. So their credit is minus one. CIBIL is -1. And my only recourse on, deciding how am I going to underwrite his alternate.
But the interesting part is, you've done so much of innovation around onboarding a customer or bringing him in. How do you also look at transacting? Because when we talk about MSMEs, the engagement typically tends to be a little more longer. You would want to be engaged with him on his day-to-day transactions. Like for example, a bank would look at a merchant from a very different perspective or a different lens. You would look at offering him a OD, you would look at offering him a card, you would look at offering him an insurance. How do you then use, because it's a very small merchant by the size, how do you basically then engage on a transaction level with him?
So our foot in the door is essentially payments. So first thing we do with the MSME, what we have been doing till now is, we give him AEPS as a product. So the moment he gets AEPS as a product, he starts transacting. See, there is a lot of cash coming into that guy. He has to dispose of that cash. If he goes to a bank to deposit that cash, bank is going to charge him CMS charges.
Yes.
Above a certain amount, the bank is going to say that, boss, I'm going to charge you 100 rupees, 150 rupees for every 10,000 rupees you deposit. So to avoid that CMS, we tell him that you start becoming a micro ATM cash out point first of all. That has been our acquisition strategy, and with that we have close to now 2.5 million registered users. Okay, close to 4 million app downloads. And once he starts doing that, then what we do is, now my neobank gets launched in Diwali, so my hook completely gets changed to a digital CASA. So the moment he downloads the app, the first thing I will prompt him is to open a digital current account. Now what happens is, we all know, to open a current account, it is a 4-5 day process. You have to fill a plethora of forms. There is a relationship manager.
Absolutely.
Okay, I am giving a digital current account in 15 minutes. You download the app, sole proprietor, you can create that entire journey. 15, 20 minutes max, your account gets created. The moment that account gets created, that becomes the hook. Now what happens is, his banking, his receivables, his payables, everything starts happening through that. Now this is the same guy who may also be buying goods from a HUL or a Marico or a Patanjali or a Pepsi or somebody. So his distributor, whenever the distributor is raising invoices on this guy, is ordering, that invoice is generally now the distributors or super distributors send it through WhatsApp. So what we have also integrated over there is, we have a technology where that invoice is read, and that immediately that particular, payable comes under his payables.
Very interesting.
Same thing if he has a receivable that is coming in. Okay, then that also we have converted over here, and there we have, I'm actually talking to Gangadhar on that as well. We are innovating something on the voice part, so that,
which is what we'll like to hear from Gangadhar as to
Yeah.
how we can do that.
so there what happens is, his receivables that he has from his customers, that are also recorded over there and then converted into data. So
That
payables
should give
is-
you a in-source for lending on basis of his receivables as well.
That is one of the data points. That is one of the data points. Other data point is his business, then the alternate data that I said. So CASA becomes one point. And then what we also do is, we are giving him investment avenues like digital gold. We are giving avenues like stocks. Okay. Now a tier 3, tier 4 guy may not know how to invest in stocks. We have digitized it for him. Lending. What kind? Does he need a credit line? A recurring overdraft kind of a credit line? Or does he need a business loan? Sachet insurance. Does he want a fire insurance for his particular
Interesting.
shop?
Very interesting.
Mediclaim, term policy, all those things are inside.
In fact, interestingly, on the panel itself, if at all, we've heard a lot of business models. I could see, a couple of business models coming together to create another proposition altogether. For example, I think this ties in very well with the Lakshmi proposition, right? If there is a woman entrepreneur who's running a small scale shop, the whole proposition sort of takes it to the next level. Moving to you, Gangadhar, how do you see, so we moved from, the keyboards, the mouses, the touch screens, now we're talking about voice AI. How do you see voice AI really bringing the experience to the next level? Because from a digital adoption perspective also, and we spoke about rural markets, I think voice can still play a significant role in achieving financial inclusion. How do you see that?
Yeah. Before I delve into it, on a lighter note, thanks to Vaibhav, I'm going to turn off somebody reading my SMSs. I was not aware. I must have given access to a dozen apps. That
You're forced.
can
Every
I
time
read
you
your
download
SMS?
this, you're forced.
I've always been thinking that they only read their SMS. I didn't know they can read all my SMS. Okay. So email at least, I don't know, at least SMS I'm going to turn off for a dozen apps today and leave probably one there, which is actually, a lot of data privacy, because we are giving access to our data.
Right.
Okay. So back to our business. See, today I think it's a fantastic thing. We have seen, most of us at least here, seen barring some millennials here, 20 years back to get an education loan, I had to take 3 of my uncles, aunts who have a government job to go and sign, and go and pick them, all of them, in a different auto, and take them to bank and get a loan done. Today, we have moved to an age where the access to credit to a large millions of people is at a fingertip.
Yes.
Thanks to the mobile networks in our country and the number of SIM cards we have sold, everybody has a phone in the hand. Now, all my friends here want to sell, and there is already telcos who have sold SIM cards to them. And now what next? Now that you have sold a loan, now they have 100 questions. They want to bombard you with so many calls every single day. A 10,000 rupee loan, today, any NBFC, any arbitrage, you borrow, you lend, you make 3%, 5% net money on top of it, because you have a borrowing cost. Now, customer who has to pay you 350 rupees EMI saw an SMS which came, some charges. He calls you.
Yes.
That call is costing you 50 rupees to address.
Because
Your
that's
entire
the
profitability.
instinct. You saw a charge, you want to call and find out what it is.
Because now you have large number of customers, especially in the NBFC space, with a slightly smaller ticket size, you do not want them to call you ever. Because if they call, your entire profitability on the business is gone in the 3 calls.
Yes.
So we work with customers to see that how businesses can deliver customer experience at the same time not burn bigger hole on the pockets. So we started working with banks a couple of years back, and country's top 3 leading banks started off with an inbound automation, where we believed that a lot of human agents today sitting in call centers, whom the organizations have grown like 20x over the last 10 years, 15 years, are not adding any value to most of the calls. Not every call, most of the calls. What does it mean? They're behaving like a machine. You call them and say, मुझे मेरा statement नहीं मिला है. Sir, I'm very sorry. मैं आपको help करता हूँ. क्या आप mobile number confirm कर सकते हैं? You already know. You want your next response. All of us is, I'm calling from the same number. You can't pick my number. Now you gave the number. They asked you the same set of questions. Okay, sir, I've sent you by an email. It costed the bank 38 rupees. Now we said, if a man is working, if a call center agent is working like a machine, can I actually replace that with a machine itself and let the man do more where real human intelligence is coming into play, and can we solve bigger problems? And today we have 50, 60 plus customers live in various industries, various use cases. Coming to the NBFC, like earlier panel I was listening to, NBFC's only job is to collect money. Lending money, they don't even need people. Lending money to you
हो जाता है. हो जाता है वो.
हो जाता है. Because there is always people wanting to get money. Collecting money is where every intelligence and power, AI, tools, everything is required, right? And we are today looking at that, like a lot of customers want to pay money back. A lot of customers who are borrowing, given to natural human instinct, most people at least, do not want to not pay back. Most people we are seeing, at least with our experience in collection with telcos, where we are doing crores of calls for prepaid or postpaid customers, where with a nudge, 1, 2, 3 nudges, money is coming.
Yes.
So at 1/10 the cost of a human agent, we are able to help customers recover 80-90%. 10-20% sticky accounts are always there, so we are seeing in NBFC space a lot of momentum using voice bots in vernacular languages, Tamil, Telugu, Gujarati, Bengali, multiple languages. One is for lead qualification, one is collection, and then upsell, cross-sell, documentation, and various use cases we are seeing where NBFCs adopting automation in using voice. One interesting, I know the time here. One interesting thing what we are working also is something called voice cloning. By next year, most customers will have an access where you bring your own artist, or like Sushil can be an artist. We take Sushil's voice for 10 hours and create a voice bot which will speak like him for eternity. So like that, every customer will have his own voice identity.
You were worried about somebody reading your SMS. I'm worried about somebody taking my voice and making calls and authenticating on my behalf at a bank, which is going to be very risky. So we'll have to think about how voice while
artist. Yeah. Yes. So we are thinking about is artist. Like somebody want to get Jockey Shroff's voice on the every welcome call. I think that is the future of voice tech. And I think overall this is just not an India phenomena. We are seeing the similar interest in multiple countries because cost of calling is high in every country. If India it is this much, in the US we are seeing $8 they're spending for every PTP. You call a customer to get a PTP or an RTP,
right.
You're still spending $8. So that's the area we are trying to help a lot of NBFCs to get scale without burning a lot of money. And the best part is that in 1 hour, if you can reach out to 2-3 lakh customers with one single click, you have 8 hours of the day left to do better things.
And the customer experience. For example, if Bebo was to launch this, Bhidu paisa aa gaya. Okay, I think.
Sorry, I just want to add.
Yeah, sure.
Like, innovation and creativity, they always come first. After that, the regulation, ethics, morality, you get into that aspect.
Absolutely.
So somebody will come
Somebody
back
will
and
say,
"Ye scam ho raha hai, how do we protect it?"
Protect
right?
it. And then you find solutions for that, like any life cycle, right?
Exactly.
Last, I know we are short on time, but Anil, we want to have some snippets from you specifically on the regulatory side. You touched upon regulatory right now. You've launched a subscription product as well, and we've seen in the last few months there have been a lot of regulations, especially around the BNPL side. How do you think the regulation is going to impact the innovation that you're doing, especially on the product side? Because you're essentially be able to offer a credit for an underserved or unserved customer, which is not a regular product or a mainstay product on most of the NBFC's books. How do you see this impacting your business, and how have you transformed using fintech your business model itself?
Yeah, we are Vivify, and our main product is FlexPay, which is enabling credit access to underserved and unserved customers. We are talking about customers with incomes less than 30,000 rupees, customers less than incomes of 10,000 rupees. More than a third of our customers have an income less than 10,000 rupees. And these are customers who, in the traditional world, never got access to credit from bank or any NBFC. So when we innovated and we started to offer credit, we had to give the credit in a fashion that these customers can make sure that they can pay back. So one of the main features of our product was flexibility. We call it EMI free. So any customer can repay when they want, how much ever they want, without any penalty. Even if you want to pay off a loan in 2 days, we allowed that to the customer. And that's kind of flexibility. When you're talking about financial inclusion, it will not come without product innovation.
Right.
And that's the kind of innovation we did. And we early on took a very conservative approach back 3-4 years ago itself, that we will always do it on balance sheet with an NBFC license. Now, obviously, fintech ecosystem and some of my partners here have evolved without having to take a license and have partnered with banks and NBFCs. Now, a lot of the new digital lending regulations that we have seen from RBI kind of address both aspects of it. The main thing that triggered this whole thing was the Chinese, the illegal lending apps, irrespective of the origin of the country, have caused irreparable harm to end consumers with the exorbitant rates and also coercive collection practices, sometimes with an NBFC partnership, most times without. So there is a need for the regulator to bring in a lot of protection to the consumer. And the digital lending rules that have been proposed by RBI are a step in the right direction, and that provide that protection to the consumer. But RBI is also looking at a larger picture, which is the systemic risk. If you are lending off balance sheet, there is a certain amount of risk that never gets captured, whether it's an FDLG, if it's a corporate guarantee or a fixed deposit. So RBI's rule is yet to be out on that aspect, but the regulation is trying to stem some of that systemic risk that could come from off-balance sheet.
So while, yeah, so
And on top of it, with respect to models like buy now, pay later, some of these models are very innovative, but at the same time have been existing forever. Like consumer durable financing has been existing forever. But when you call a product a payment product and not a credit product, and are not reporting to credit bureau, you kind of are withholding a lot of important information, which is important for the entire ecosystem and the environment to continue to lend responsibly. So any of these regulations that we are seeing from RBI have always been, I think, are focused on ensuring customer protection and reducing systemic risk. And it is only going to provide guardrails for innovation.
Absolutely.
Innovation will continue to happen. Regulators will always catch up.
They're
So
supporting.
I think
Absolutely.
that balance is always going to be there. I always commend our regulators, and I've always said India is a country which is has regulator and government-led innovation.
Absolutely.
Be it UPI, be it Aadhaar, be it account aggregator. These are all regulator and government-led initiatives.
And I think this will fuel a lot more innovation.
Yeah,
I
I'm
think the
sure
fintechs
this
will
is
always stay ahead
this is
to
going
give
to
you
fuel a lot more innovation for our country. So I think it's a step in right direction, and we all will learn around it and get better with it.
Thank you very much. I think this was a wonderful panel. I know we only had one question each, but that is because of the lack of time. We'd like to have a discussion offline if at all anybody wants to engage. And I hope new business models come out from the panel here. Thank you very much.
Great. Thank you so much. Thank you so much, ladies and gentlemen. A big round of applause for our amazing panelists. And Sushil sir, just letting you know, the only reason you showed your apprehension to your voice being used is why Gangadhar sir had to alternatively ask Jackie Shroff. So you should think about it again, probably.
He's going to come out definitely.
Okay. I would request Mr. Manoj to kindly come on up, Manoj sir, and present our amazing leaders with a token of appreciation. To our leaders henceforth, as much as I hate to just barge in, and we'd love for you to continue, we're actually really running short on time. So henceforth, once the timer's off, you'll see me stand on the stage. My apologies. LSA. Great. Thank you so much. Thank you so much. Thank you, leaders. Absolutely amazing. Okay, so for our next segment, we have a leader, a young blood leader indeed, who's taken over the world with his creation. Let's give it up for Mr. Agnish Banerjee, CBO, which is Chief Business Officer of Data Sutram. Mr. Banerjee, kindly come on up. There's a small question waiting for a very small answer from your end. Audience members, by the way, Mr. Banerjee here has to be the youngest person in this room. Let me tell you, age we can discuss later. So, Mr. Banerjee, your very short question for which we want a very small answer is, so you're super young. What advice would you give to other young entrepreneurs on how they have to brace themselves for a very tough adventure ahead? Just one golden advice.
Impossible is nothing. That's
My
all.
God.
That's something I heard long back, and that has stuck to me from my school days, high school. So impossible is nothing.
Yeah,
If you can dream it, you can achieve it.
My God, we see that. Hence, in a room filled with such pristine leaders, you've come in. Thank you so much, Mr. Banerjee. Stage is all yours.
Thank you. If I can have the tech on. Just. Yeah, hello, check. Good afternoon, everyone. Thank you for having me here. Thank you for hosting such a wonderful event. A quick introduction from my end. My name is Agnish Banerjee, and today I'm up here representing my company, Data Sutram, as its founding team member and its chief business officer. Very quickly, we are an alternate data company working with various NBFCs, various banks, and as a whole, the BFSI sector, helping them boost their productivity, their customer acquisition models, etc., for the last 3 to 4 years. One second, yeah. Here's a brief history about the young team. As you can see, it's not all young, and I would be naive to say it's just us. We have 50 plus more members in the last 3 years, and here's a brief history about the various investment rounds that we have raised till now, and also a brief history, just a few names of clients that we have had the privilege to work with till now. Now, there's something I always start off with every talk that I give, is that just like she mentioned, here's what some of you might be thinking. Like, in this beautiful event filled with industry leaders, experience of more than 100 plus years, what is this 20-odd-year-old kid, maybe just out of college, what does he know anything about NBFC and the banking sector as a whole? To which I would say you're absolutely right. Me, with regards to the NBFC sector or the banking sector as a whole, you would probably run circles around me if you get down to the nitty-gritties of it. But what I do very humbly consider myself to be sort of an expert at is data. To add on to that, actually not just data, but how to empathetically work data for all my customers, to understand their problems and truly get data to work for them, I would say. Here's a picture that actually prompted us to start our company back in third year of college. We just went through this on a Google search image, and we were baffled to understand that how true this actually is. That every kind of data that we have right now is either underutilized or from some traditional source, or very, very unstructured to make sense at all. So how do you make sense of this information? Like, if there's 90% of the iceberg just left to be discovered, there's a huge market need over here, right? Now, what is alternate data as compared to traditional forms of data, I would say? If I started a traditional data vendor or a company which deals with solely traditional forms of data, I would have someone stand over there. That one person would try to count each and every person here in this room, would actually try to understand from how they behave, how they talk, what their affluence class is from, and maybe just derive from that on how much loan capacity you guys have. What I would simply do is, in 1 second, try to understand this magic device which is with all of us. Just for context, we calculate and curate around 157 million smartphone level information each and every day to understand people as a whole, what they do, where they go to, what their shopping patterns are like, etc. Here's a brief background about how our entire cycle works. We have, from our third year of college till now, we have over 250 plus sources of information from which we get data from. They are our partners. We buy data off of direct vendors, etc., to cover the entire data lake as a whole. Through this, I have information, as I mentioned, on 157 million smartphones to categorize human beings out of it. Through this, I have information on over 6 crore plus SMEs, MSMEs, and merchants. I know what kind of footfall they get. I know what kind of transactions are happening around them. And as a whole, I know exactly what is the loan capacity and the intent to pay back for each and every SME or business out there. Now, I like to keep the entire ethos of my company very simple, because data as a whole, I feel personally, I might be wrong, is very complicated right now, how it is portrayed. So I simply say I give you information on 2 fronts. One is people, and second are places. So if I understand what kind of shops are there in a certain place and what is the behavior and the transactions happening around that shop, and if I understand who the customers of these shops are, as a whole, I know where my ideal customer base lies. That is the ethos I try to follow. Now, I took the liberty to actually take a screenshot of our own platform for this place over here, Sofitel Hotel, BKC. Here you can see, when I mention place level information, I have mapped out for a certain lat long around that hotel, what kind of SMEs are there, what type of SMEs. I have their name, I have what footfall they get. I can also additionally get exactly what transactions are happening around them, etc., etc. I've just added a few data headers here. To add on to that, for the same place, I can also understand people level information. Now, each box that you see here, I'm sure that you currently get information based off of every pin code. What we have done here, ladies and gentlemen, is that we have taken the entire country and we have broken the country down into small 100-meter cubes of land for you to analyze exactly what is the demography pattern of an individual who lives there, what kind of affluence class they come from, what is their rough income class like. And this is a snapshot of the smartphone level information that I spoke about. Now, I don't capture any PII level information. I don't know your name. I don't know your number. I am absolutely GDPR compliant. I work with companies abroad India too. But what I do is that through smartphone usage, where that particular person is going to, where they're shopping from, I can categorize and I can understand and I can carve a human being out of it for me to know exactly who your ideal customers are. Again, keeping it very simple. Now, the product that we just launched very recently is called Sales Intelligence. Now, what is Sales Intelligence? Traditionally, we know that a lot of NBFCs, a lot of banks, etc., they have huge field teams that they deploy to actually acquire more customers, acquire more merchants as a whole. The problem that I've seen happens with that is that everyone or anyone at the top level who's actually thinking to acquire customers from a certain zone, they are at the mercy, absolute mercy of the field team's bias to know who their ideal customers are. How do you know that there are only 8 merchants in a certain geography? How do you know that who the ideal merchants in that geography are for you to target? This is the problem that we recognized in the industry for us to come up with this application over here. As you can see here, now what you can do is that the national sales head or whatever or whoever that person might be, very simply, you get a detailed report of each and every city and out of which what ideal cities you should target. You can evaluate top pin codes for you to go to, and you can identify your ideal business line in that zone. You take in all of that information, then for the ASM, what we do is that we deploy the live platform of which I just showed you a snapshot of. Now the ASM will analyze each and every grid and figure out their resources, figure out exactly how many people to deploy in a certain zone, and figure out exactly who the ideal SMEs are for you to target in that zone. Next comes the area sales executive. Now, very simply, he or she has a distinct list in front of him or her for them to go to a certain area, target a certain SME, and now they know what the business potential of each and every SME is with regards to the effort, the time, and the money that they're spending on this particular zone of land. Here are again a few nitty-gritties in terms of what kind of data headers you will get with our application. The SME name, the SME number, what kind of footfall you get. Additional to that, I've just added a few pointers here. As you can see, you get their GST data, what kind of transactions happening around that zone, many more. As you can see here, first, the step 1 of the entire process is to study the catchment and figure out which of these zones are particularly your hotspots for you to actually target to. These can be pin codes, these can be lat longs, these can be grids here in this case. Now, once you've analyzed and fixed on your zone on where you want to expand to, you get, just like that, a platform deployed to you where you know how many merchants are there, how many resources you should plan around these zones, and exactly how much business you can expect. So I'm kind of telling you how much business you should expect from a zone even before you traveling to that zone over there per lat long in the entire country. Now, for the last mile activation, you get the merchant name, the merchant number, and each and every data header that you would want in and around that merchant for you to onboard that merchant as a client. Adding on to that, we can also help you to identify fraud and for risk analysis of each and every merchant or any N2C customer that you want to hand out loans to. How do we do that? Here's a brief snapshot of one customer that I've picked in. This person has no credit history. This person hardly has any bank book that he or she maintains. So how do you know how to analyze this loan? How do you know exactly how much loan to hand out to this person, right? That's again how my data lake overall will help you here in this zone. I know exactly what kind of market concentration this particular shop has in that entire zone. How? I know exactly what kind of transactions are happening in and around that store. Adding to that, I can correlate it with what kind of footfall this store gets. Adding to that, not just what or how many footfall, but what kind of footfall, who their ideal customers are, what is their background. And then overall, I will give you a brief on what their intent, capacity, and stability is in terms of you handing out that loan to this particular customer. Here are a few other use cases and clients that we have worked with on this use case. We have helped the likes of Hitachi open up 10,000 ATMs in a zone. We have helped RBL Bank, we have helped IIF, and a few other use cases that I've humbly worked with all of my clients. Now, our main goal here in this company is to improve upon the rapidly expanding financial inclusion structure of India. We hope that the incredible boom that the entire sector, NBFC sector, the fintech sector as a whole has had in the last 5 years, we only can facilitate that growth further 10 times, 20 times, maybe 100 times. That is what our ultimate goal here in India is. Adding to that, I'm very proud to share that we recently have been recognized by Forbes 30 under 30. Why I added this slide is that back then in my third year, I could not have imagined in my wildest dreams that we would get a Forbes feature, but thanks to your entire sector here, thanks to each and every individual here, companies in this sector, we have managed to fulfill our dream here in this case. So thank you guys for that. And lastly, I would like to end with, thank you so much. Lastly, I would like to end with a very famous Steve Jobs quote that touched me till now. Ladies and gentlemen, the ones who are crazy enough to think they can change the world are the ones who actually do. We have a booth outside. Feel free to come and say hi. Thank you everyone for having me. Cheers. Have a good day.
Did we read that right? Forbes 30 under 30. The only way I can come anywhere close to Forbes if I pick up a magazine and start reading it. But fantastic! Wow, Mr. Banerjee, an absolute pleasure to have you, ladies and gentlemen. A bigger round of applause. My God, Forbes 30 under 30, right in front of you, Mr. Banerjee. Come on up again, and we would now request Mr. Manoj Agarwal, Group Editor, Banking Frontiers, to kindly present Mr. Banerjee with the token of our appreciation. All right, so there's been a slight change in plan, and we now request Mr. Sumit Kumar, Director, Digital and Technology Consulting, EY India, to kindly come on up, Mr. Kumar, and present Mr. Banerjee with the token of our appreciation. Thank you so much. Thank you. Thank you. Okay, so ladies and gentlemen, moving on very quickly to our next panel. My God, we've got the industry best here to discuss all about data, the new oil in the business. And of course, leaders, you know how we work at Banking Frontiers. As and when we introduce you, there's a very small question requesting for a very, very small answer from your end. So, leaders, if data is the new oil, but thank God it's not as expensive as oil. So, what would you say are some funny, innovative alternatives that you can think for traveling with exorbitant prices of diesel and petrol? सवाल ये है, tell us an alternate to traveling without your diesel and petrol. So we're going to start off with Mr. Sumit Kumar, Director Digital and Technology Consulting, EY India. Mr. Sumit Kumar, apologies for putting you in a spot. Okay, so I mentioned it was to be a small question, but okay. So can you name some innovative alternative to oil? Radio. Wow. What? Wow. Okay, I'll take that. Why not? Why not? See, if it's alternate, you can also say teddy bear, because anything that is alternate is alternative. Right? Understood. Fantastic. Our next leader is Mr. Piyush Gupta, Chief Data Scientist, PayU Finance. Mr. Gupta, सवाल ये है, alternate to diesel, मतलब, automobiles use oil, right? So we want a funny, interesting alternate to automobiles who use oil. Wow. Okay. Wow. Okay. I completely agree. Our next leader is Mr. Rudra Biswal, CTO, Arthan Finance. Mr. Biswal, waves ले हो गई हैं, आपका इलेक्ट्रिक व्हीकल भी हो गई. What would your answer be? Walter. Okay. Our next leader is Mr. Siddesh Sardesai, Chief Technology Officer, MK Global Finance Services. Mr. Sardesai, water, waves, electric, all out. What would your answer be? Alternate to? Yes, yes, yes. Next leader is Mr. Dipesh Karki, co-founder and CTO, Len Den Club. Mr. Karki, what would your... I think we've run out, but there's one thing remaining. And cheaper as well. Yes, as free as it is, or even walking. Okay, get it. Fantastic leaders, stage is all yours. Thank you so much.
Come on. Okay. So we spoke about digital, key tenets of digital, looking at things outside in, looking at streamlining processes, looking at reimagining customer journeys, removing friction, utilizing data, and that's what we are here to talk about. So before I do that, I'll leave the floor to the panelists, right, to introduce themselves, the firm they come from, the role they play, and what are they passionate about.
Thank you. My name is Piyush. I'm Chief Data Scientist. Can you guys hear me? All right, perfect. My name is Piyush Gupta. I'm Chief Data Scientist at PayU Finance. So I manage the data science, data engineering, and analytics teams at PayU Finance. One of the things that we have talked about quite a lot today is about financial inclusion, and I think that's one area that I'm super passionate about. I think I'm the original follower of the book Wealth of Nations. I really believe that for any nation to grow, having credit penetration and having access to credit for a citizen when they need it is really, really important. So yeah, I'm looking forward to that particular thing in my career right now.
Hi everyone, this is Siddesh Sardesai. I come from MK Global and I look after the technology at MK Global. What I'm passionate about is basically, as my title goes, it is technology. I keep on, I'm interested in the latest technologies that are there, the emerging technologies. I keep on reading articles about them, and also like to experiment certain things back at my organization.
Rudra?
Hello, my name is Rudra Biswal, and I am a CTO at Orphan Finance. So, Orphan Finance is a new age NBFC. We started sometime in 2019, and we are more focused into this business loans, small and micro business loan. So it's been a fantastic 3 years journey that we've gone through. Of course, out of that 2 years, this Corona pandemic has already taken away from us. But then now we are not looking back, and see the focus at Orphan Finance is, of course, since it's a new age NBFC, of course, the technology. We try to drive everything through technology, and of course data. So today's topic is also it's very relevant. So I'm looking forward to interact with you.
So hi everyone. First of all, thank you so much for being here. I see the crowd is quite good enough that despite being lunchtime, you all are waiting here. Thank you so much for listening to us. I am also hungry, so post this we all will rush there. All right, coming back, I'm Dipesh, co-founder and CTO of LinkedIn Club. LinkedIn Club is India's leading peer-to-peer lending platform. So we started this idea in 2015, where we thought that there's so many financial transactions that we do with banks, NBFCs, even with the local money lenders and all, right? But then there are not many digital transactions available. It was not available back then. So our first challenge was to bring entire customer set to a digital platform through a physical mode, wherein we wanted to make sure the majority of the transactions happens in a digital mode. Of course, there was a huge challenge bringing the trust with the customers back then. But then, as on today, just like Rudra mentioned and other co-panelists mentioned here, we have 100% digital lending platforms, wherein you get an opportunity either to borrow a small ticket size loan of even as low as 2,000 rupees through our platform, and up to 10 lakh rupees, right? At the same time, you can also make an investment and earn a double-digit return through our newly launched product called FMPP. I'll talk more about it in a future discussion, maybe. About my passion, I'm more coming from the technology background, right? I'm more passionate about digitizing the finance further. So currently, like I mentioned, right, we've moved from physical to a digital, but I want to take it as far as to the extent of metaverse and the likes of it. Let's see how financial, games go there. So that's my passion.
Thank you. Suresh, I'll start with you. My first question, right? How is the customer experience changing with the advent of emerging tool and technology? How do you see it?
All right. So I think last 2 years it has been quite transforming in terms of the customer experience. Because everyone has gone through a lot because of the COVID pandemic. Things have changed. The working styles have changed, and what we have seen or observed is that the customers have become more patient. They have become more experimental, and they want so basically they want to try the services and products more. They want to spend more time with whatever products we give, whatever services we give, and they are more they want to be along with us in that journey, which means that the customer experience is now turning to be more like an immersive experience. Whatever products we give them. Earlier we used to do small presentations, and they used to simply take it up. But nowadays they give more feedback. They want audios, they want visuals, they want more details of the products that are there, and they want to experiment as well. They want to test as well. I mean, see, we come from a broking background, broking industry. Earlier we used to provide custom mobile apps and trading terminals to the customers, but nowadays the customers are developers also. They want to develop their own trading platforms. They want to integrate with us, which means we have to give them more APIs. So accordingly, with the changing customer experience, we are changing our technology landscape as well.
Rudra, my question to you, just the other way around, right? How is technology shaping up to deliver better, superior customer experiences?
Yeah, so I think these days I would say that everybody puts customer first, right? So you have to have that customer centricity. Then only you can survive in the market. You can survive competition. Okay. So uh, so first, want me to respond to this?
Go ahead, go ahead.
Okay. So okay. In the customer centricity, I think in the financial services, especially, there is a huge change in the in the outlook of the customers. They always want, and they have become demanding, as you was also saying that over a period of time, they become more tech savvy. They are more engaging. They want to engage with all this on the digital touch points. So things have changed to a great extent. So data, of course, plays a very key role, and technology definitely is the key for any. If you have to drive customer centricity, data is the key. So nowadays, what people do, they of course don't keep the data in silos. They pull data from all the sources. Like we also do that. So we have a lot of touch points from which we get a lot of information about the customer. Then we curate it, we process it, and extract a lot of insights out of it. And finally, we also then now technology has developed to that extent that the automatic actionables also are created out of it. So that is how we can provide a very good immersive experience, as Siddesh was saying. And of course, in our business, it's again, I mean, uh, we have to think from the point of view that the customers are in tier 2, tier 3 city, but still they are very tech savvy these days. So how do we engage with them? We have created our solutions, and the way we engage, because the touch points are our frontline officers who go to the field, they source leads, they source applications. So how we can make those touch points very engaging and very frictionless, and for the customer it will be totally hassle free. So that is how we have developed our solutions. And these days there is a fintech environment where you can leverage a lot of these services through which you can provide a very good customer experience. So we are leveraging those services, and then just trying to see that customer is happy. They get their loan with a very limited turnaround time, and the purpose with which he has taken that loan finally materializes the dream, whatever he has.
Yeah, definitely. These days, everybody has an expectation. Financial services result into equivalent services as we get from other non-financial services. So my next question to you, Piyush, right? Data-led innovations. Data-led innovations. What are the use cases that you've seen being implemented across the industry, right?
Yeah. So actually, at this point in time, all financial institutions, and not just limited to big banks, but NBFCs, Fintechs, and in fact, including regulatory bodies, are using data, ML, and AI in like a variety of ways. Some of the most common ones that you would have heard of and you would have seen in your experience of using these apps and these services would be specifically for usage of AI and ML, can be like process improvements, like video KYC, where we can do facial recognition, uh, process improvement specifically in terms of customer point verification. You don't need to go to the customer's house anymore. You can basically take geolocation data and ensure how confident you are about that data. Utilization of big data for credit decisioning, not just depending on a single and simple CIBIL score, prevention of fraud, improved and enhanced security specifically for your transactions, identification of any irregularity, and not just at a customer level, but imagine for you, it might be just 5 rupees in your account, but that happened to 10,000 customers in the same area at the same time. So all of these things are now sort of powered by an ML. One another area where there's a lot of focus specifically for machine learning is on personalized marketing. So does Sumit see the same message that Piyush sees, what Siddesh sees? I can actually show the message to be contextual, it can be geotagged, it can be anything else around that. But one additional area, and this is something I touched upon in my introduction as well, where there's some phenomenal work happening is, I would say, it's financial inclusion. And especially for a country like India, where where digitization is still a fairly recent phenomenon, where access to internet only happened after the mobile revolution in the last few years. And penetration is still very low. Like we can keep talking about how we are able to give access to NTC customers and this and that. But if you look at the number of customers who are potential customers versus number of people who actually have meaningful data on bureau based on which you can give information out, the credit penetration is really, really, really low. So there is a great opportunity here to push the boundaries by using state-of-the-art AI and ML techniques, so that financial inclusion not only remains a dream but becomes like an achievable target. And another thing there is around financial inclusion is it's not just about the timing of it, right? Like today I need to buy a fridge, and if I get that EMI after 3 months, then it's not useful. So maybe I'm inclusive from that perspective, but I'm not inclusive from at the time of the need. One last thing here is that I think we also need to be aware that there is a need for a constant and open dialogue between regulatory bodies as well as financial institutions. See, these are new technologies. There are basically unfounded impacts that these things can have. I'm sure all of you must have heard of Apple Card. Like Apple Card was launched by one of the largest global technology companies, Apple, in collaboration with Goldman Sachs, which is again one of the largest global banks that you can find. But even the most basic functionality of it, let's say a credit line functionality for that card, differs based on whether you're a male or a female, even though you may have the exact same financial data. And it's not that their algorithms are wrong. It's not that gender is differentiating factor in the algorithm. It's that their underlying data itself is biased. And because of that biasness is creeps into the product as well as the services experience of the customer. So there's a very urgent need, in my opinion, specifically to have a conversation between the regulatory bodies as well as financial institutions, so that this collaboration can result into how we see financial inclusion going forward.
Well said, Dipesh. Just a continuation, right? What are the different use cases of artificial intelligence, machine learning that you've deployed within Lending Club, where you see significant benefits originating from them?
Thank you for the question, Sumit. So I think before moving to how we are using it, I'll just add a bit to what Piyush mentioned just now. So see, when we study computer science, we say that data is a crude form of the users footprints that are available in the digital space. Right? It's the information that you drive out of it that creates the difference. Right? Information is well architected review of a customer or a persona of a customer that you're building in a digital space. So the problem with the entities in today's date is that they have access to n number of data, but I don't think many people have cracked this mojo of building a valuable information out of it, because of which there are a lot of use and a lot of misuse also, which push the regulation in order to make sure that you get the data, but get the data when you are about to make sense out of it. Just don't randomly collect data in order to make the customer feel insecure, because the larger part is not just data, it's about privacy of the data, right? So that was the concern. So with that in mind, right, we at Indian Club are quite wary about the type of data that we collect from the customers, either directly or through partnerships or whatsoever. Nevertheless, we do interact with customers. We do tell our customers on hey, these are the type of data that we'll be taking from you in order to make sure that we build the right kind of experience for you, because it is required to build that custom experience for the customer. So first use case that we tried to solve using data was to make sure that we are identifying the right kind of customer, and we are able to understand the right kind of income to obligation ratio, to make sure that we're not over leveraging the customer, we're not giving them more credit, right? So this was the first use case that we solved, followed by another use case wherein we wanted to make sure, hey, although I'm saying that I'm trying to identify the income obligation, ratio of a customer, there are many customers that try to dupe the documents that they provide to us, right? So we did a good amount of work on fraud checks, and we had already discussed in the backstage about some of the frauds that we had mentioned, right? So there are instances wherein big bank statements do come as a fraud. And see, machine learning is technically human teaching, right? So first, human need to learn these things. So we did spend a good amount of time in order to understand how do you identify a PDF document that has been forged in order to provide as a bank statement and all, right? So those are the instances that we've been solving since a while. Currently, now that we've pretty much sorted on that side with regards to credit underwriting and fraud checks, now we are able to fine tune our customers, borrowers base to a greater extent. And as on today, we say that our default rate is less than 4%, and the default adjusted return that we are giving to our end customers is between 10 to 12%, right? So that's why we innovated our other part of the product using data. So we've been offering a variable kind of a return to our investors, wherein this is a general propensity for customer, wherein if you are getting a good experience, you don't talk about it. But if the experience is not so good, you choose each and every platform that is available out there to lament about it, right? So we wanted to move away from it in order to give a good experience to our customer. So that's when we came up with this product called FMP, wherein we leverage data to make sure that whatever the graph of the customer is during that course of tenure, in order to earn that return of 10 to 12%, if it is going up, hey, maybe you can export a little bit of high risk profile to this customer. If it is going a little down, maybe put some safe loans, right? So we do have scoring of loans, we do have categories of loans, and then we do exposure of these loans based on the performance of that particular investor's return. So with that, we've been able to, so we launched this product recently, but we've been doing this pilot since almost 10 or 11 months or so. So we've been able to see that we are able to achieve this return for investors for almost about 99 or 99.5% of our investors. So that's how we've been leveraging data. Now, there's another interesting use cases that we're trying to solve, wherein we do have a lot of customers, interacting with us in vernacular languages. And me just adding a lot of people in our office space is not the solution for it. So that's something that we realize with time, that human beings will not be able to, cater to the kind of load that we are handling and the way we are growing. So that's when we introduced, NLP-based calling and interactions with our customers. Now today, there are computer bots that call 50 to 100 customers per minute in order to make sure that you're building a good relations, good reminder with the customer, good interactions to make sure that they are paying their EMIs on time. And you will get an alert saying, hey, this customer has a propensity of delaying the EMI. Do you want to change the interactions? And my collection head do look at that data and then takes the next action based on the information that has been received. And also do cross-check of the interaction that has happened in this duration in order to make sure whether the machine is working as we intend to work or not. But then the results are really surprising and really interesting.
And is the data good as well? Because we heard in the morning session, right? Only for data to the extent of 40% is good. The 60% of data is noise.
Of course, absolutely. So like I said, right, you need to know what is the kind of information that you are building, right? So I'm not saying that we are 100% or we are right at that, but then we do fail, we do learn, and we do learn from other failures also, right? So that's how we've been growing. Of course, more than 60% of data are definitely good and not even useless. So in our case, we always intend to bring this number to as low as possible. I don't want an information of a user wherein the user may have ordered something from Zomato, and that may or may not be relevant to my credit profile. So I don't want such type of information, because I want to make sure that the customer is also feeling safe while sharing the data with me.
Sure. With the regional parameters, right? Because now the banks are riding upon the AI framework. Additional data, more data, right? So you have data. you're generating more data of the operations that you're doing, right? Now comes in additional data. It would definitely improvise the experience, the journey, right? Are there any consequences, any negative, positive, the way you see it?
Yeah. So first of all, I think A is a great step forward for us to go towards open banking. But as they say, with great power comes great responsibility. Here, you're talking about a single framework that has access to hundreds of millions of accounts, the data within them, as well as for hundreds of millions of users. So the most obvious one challenge that I would see in this is obviously around security. See, financial institutions are built on trust. You go to HDFC Bank or you go to ICICI Bank because you have an inherent trust that, hey, this bank is not going to dupe me out of my own money. And similarly, the services are also built on trust. So data security is a big issue. And because of it, I would see the adoption of this particular technology among different players to build innovative products, to build innovative services, and to build sort of seamless experiences is where we will have the linchpin. If we can get a critical mass of people adopting this, if we can get a critical mass of people who are ready and willing to share this data to avail certain services or certain products, then I think we would be able to achieve the objectives of the AA framework. But security and adoption is what I would say are the first two things. See, this is still a very nascent thing right now, right? It's not really reached maturity. So I think there's going to be a lot of innovation from the market to build products that can sort of inbuild that trust that we are looking for and inbuild that security. And hopefully with that, we'll see a better adoption of AA framework for all the services that we're seeing right now.
Okay. Better adoption, more data, probably better predictability.
Exactly. Better predictability. But see, that's what I was saying, right? So when you have a single framework where all the data is there, even a small error can result into negative experience for that particular customer. Imagine, like on credit bureau, if somebody reports your DPD or days past due wrong for your credit card, suddenly your score drops, everything else associated with it goes for a toss. So a single framework will always have issues where the data quality and security will always be paramount. So I think that would be one area we need to keep in mind as we are developing this.
Any challenges that you foresee, Vidhu?
Challenges, definitely, I agree with him that yes, data security is a challenge, but equally, I am also quite bullish on this. As a financial information user, I will be very bullish on this. This will be very helpful to us. Only problem I see that customer initially will be very hesitant to give his consent for a longer term at least, because there is also a consent where I can get his consent that I can draw his statement of account every month, so that I can continuously monitor his details. That is one, I think, sharing an OTP where RBI and all other banks, they promote this through their SMS concerning the customers that don't share your OTP with anyone because it's a secure one-time password. So that's the basis through which the customer is going to give his consent, as well as once he gives his consent, we can draw his statement of account. So for us, definitely as an information user, we can underwrite loans looking at his bank statements, analyze statements, because there are also now these service providers, technology TSPs, not just the account aggregators, but in the ecosystem now there are lots of TSPs who have also joined in. They're giving you a very analyzed statement. Though the framework set up by RBI is looks to be quite robust, the data will not be stored or used by the intermediaries like the account aggregator or the TSPs. It will be only passed on to the information user like an NBFC or any other people who will be looking at his looking at underwriting a loan. So I don't see much problem from the customer point of view, but there will be initially, I think, hesitancy. They will be hesitant to share their details through the OTP. That is the only thing.
The hesitation, yes, definitely, right? How is my data going to be used?
Yeah.
Okay, what in comments, right? So on data privacy, data management, innovation, right? How do they all come together and deliver and and can potentially deliver superior, better customer experiences, right? Better products, better services. How can financial institutions, NBFCs target better?
So as rightly pointed out by my fellow panelists is that the crux of data privacy is the customer consent that is happening. And that also ensures that about the digital trustworthiness of the organization, where how the organization, what kind of measures they put in, so there are, as as we looked at earlier, basically there are two types of data, right? One which resides within the organization, the one which resides outside the organization. So about the data that resides within the organization, how are we managing that data? What kind of encryption policies we are putting, what kind of anonymization policies that we are putting, what kind of governance we are putting. So all of that determines the digital trustworthiness of the organization. And based on that, the customers will then share their data with their organization, right? I mean, if, for instance, if a bank asks me to provide my data, I would first check which bank it is, whether I have an account in that bank or not. I mean, with this account aggregation happening, that is something which is, one crucial point that we have to address. The second thing is about, the data that we get externally, right? I mean, looking at my industry, there can be like market data also, right? I mean, we are looking at
The authenticity may be poor as well.
right. I mean, if, for instance, we are looking at broadcast, right? I mean, we are looking at the exchange data, stocks data, right? How are we processing that data? How are we analyzing that data? How are we generating the insights out of that data, which can be then fed into the trading algorithms that are there? I mean, so processing of huge amounts of data and deriving insights out of it, and then storing and managing that data in a proper way is something that we are constantly at work.
So I take his point as well, because the way Dipesh said, right, data, you have data. So the way you said, right, internal plus external, what do you do with data? How do you take dimensions of the data, convert it into information, right? And how do you intend to use that information? Any comments that you have, Dipesh?
So, there goes this famous saying, right? Don't take toffees from unknown. Don't give toffees to unknown is also equally important statement, right? So if I don't know the customer, I'm supposed to interact with that customer through a digital wall. And if I don't know the customer, how will I serve that customer? So what I mean to say here is that data is definitely important, right? And like I mentioned in my earlier point, building information out of that data is even more important,
More crucial.
right? And there are type of data that you may or may not need. Doesn't matter where you walked last night, right? Or what food you ate, right? Or which disco do you go for a party, right? It may or may not be relevant to my business. I should be making sure that if I'm taking someone's data, I should be handling it with utmost care, right? See, to a certain extent, of course, I'm taking the data to build a person out of that person. But at the same time, there's so many news around, data mishandling, data leakage. We have to make sure that if we are taking someone's data, we are the custodians of that data. We have to make sure that it's equally protected as if you're protecting that person. It's equivalent to life of a person as on today's date.
Leaders, we've run out of time. My apologies for bringing this up. It's just that we've run out of time. As much as we'd love for you to continue, yeah. So if we can have a last bit.
I thank my panelists who've joined us, right, in sharing their insights with the colleagues. Thank you.
Fair enough. Thank you so much.
Thank you so much. Thank you so much. And just speaking on what Mr. Dipesh had to say, do not give toffees to everyone, but don't even take it. But right now we're so hungry. Mr. Karki, for a fact, we will. Fantastic session, leaders. Absolutely amazing. Ladies and gentlemen, a big round of applause for our amazing panelists. And on that note, we request Mr. Manoj to kindly come on up, sir. Mr. Manoj Agarwal, the group editor of Banking Frontier, to kindly come on up and present our panelists. And just an announcement for our lovely audience members, we will be having our lunch right now. We see that a lot of you have already had the lunch, but for those who haven't already, the lunch is open, and we would request you, Deepika, when do we start? 2:15. Oh, wow. So Deepika has given very strict instructions to wrap up your lunch and come on up at 2:15. We have the amazing Mr. Manoj Agarwal waiting for a equally amazing segment with all of you. Thank you so much. And meet you soon.
In this evolving digital world, customers want robust applications which work seamlessly on the web and mobile. The potential cost of an outage due to the failure of a key application server.
Whether you are a small or a large-sized organization, multiplication of laws and regulations, leading to endless instructions and guidelines, has made compliance cumbersome, time-consuming, and inconsistent, which may lead to penalties, loss of trust, brand image, or even business. For a decade now, we've changed this by building an action-based, centralized compliance registry, automating the compliance reporting, bridging the knowledge gap, ensuring increased visibility for the management, thereby promoting a compliance-oriented staff, approach, and culture. What's next? Reintroducing Sermo. Now we are Sermo Next. Much like Next. New look, new user experience, intuitive dashboard with charts. More flexible and customizable in reporting hierarchies. Improved performance with enhanced scalability, enabling a robust compliance culture.
Do your borrowers face a long wait time while you assess their applications, leading to higher drop-off rates, fewer approvals, and lower earnings? Introducing Finezza. We are an integrated SaaS platform that provides end-to-end lending services. Our platform helps you onboard borrowers, process and underwrite applications, monitor risks, manage collections, while complying with regulatory guidelines. You can define your own workflow for every product that you want to launch, based on industry standards, company policies, and risk profile of the customers. If the borrower is applying for a loan product through a mobile application, you can decide which details will be collected and in what order. For instance, you start the customer journey by requesting for their PIN code details first. Thereafter, you can request the OTP from the borrower as consent to pull their bureau details. Similarly, you can pull other details such as identification documents, address proof, GSTN, bank statements, and many more in no time. Our API-enabled approach helps build seamless onboarding journeys by breaking the journey into multiple stages, where you get to decide the order in which the onboarding functionalities will be deployed. On the other hand, our DICE framework enables borrowers to submit and sales personnel to collect documents in a seamless manner. Our bank statement analyzer solution, Precisa, simplifies your bank statement analysis process by presenting actionable insights in the form of visually appealing, intuitive dashboards in real time. Likewise, our multi-bureau connector allows you to fetch bureau details, and GSTN Analytics module allows you to pull GSTN details for different loan products in a bespoke and effective manner. Our solutions helps lenders lower the borrower drop-offs, increase number of loan approvals, and reduce processing costs. Lend faster and smarter with our next-generation API-enabled digital platform. Automate your lending lifecycle today. Visit finezza.in to know more.
In this evolving digital world, customers want robust applications which work seamlessly on the web and mobile. The potential cost of an outage due to the failure of a key application server is significant. So is the threat of a cyber attack. Remote and hybrid work has made it harder for companies to maintain security. Array offers a complete range of delivery and security solutions, which aims at maximizing employee productivity, ensuring always-on availability, optimizing the end-user experience, and guarding business infrastructure against an attack and data leakage. Array load balancing and application delivery provide the availability, scalability, performance, security, and control essential to keeping applications running in their power band. ASF series web application firewalls provide businesses with a flexible and precise tool for securing applications, APIs, users, and infrastructure against web attacks and zero-day exploits. AG series SSL VPN gateways provide secure remote access to applications, desktops, file shares, networks, and websites from remotely located and mobile devices. ASI series SSL Intercept provides enterprises with visibility into encrypted traffic entering, leaving, and traversing their network. SSLI is an ideal solution for optimizing both security and infrastructure efficiency, You can mix and match next generation and web application firewalls, SSL VPNs, load balancers, IPS, IDS, and other network services from array or third-party vendors on a purpose-built AVX series network hyper-converged infrastructure platform. It enables intuitive instantiation and enhances service automation while providing the agility of cloud virtualization and performance of dedicated appliances. With Array's product portfolio to deliver application availability, security, access, and performance, you are assured the best-in-breed solutions for your applications.
Do your borrowers face a long wait time while you assess their applications, leading to higher drop-off rates, fewer approvals, and lower earnings? Introducing Finezza. We are an integrated SaaS platform that provides end-to-end lending services. Our platform helps you onboard borrowers, process and underwrite applications, monitor risks, manage collections, while complying with regulatory guidelines. You can define your own workflow for every product that you want to launch, based on industry standards, company policies, and risk profile of the customers. If the borrower is applying for a loan product through a mobile application, you can decide which details will be collected and in what order. For instance, you start the customer journey by requesting the PIN code details first. Thereafter, you can request the OTP from the borrower's
Multiplication of laws and regulations, leading to endless instructions and guidelines, has made compliance cumbersome, time-consuming, and inconsistent, which may lead to penalties. For a large-sized organization, multiplication of laws and regulations, leading to endless instructions and guidelines, has made compliance cumbersome, time-consuming, and inconsistent, which may lead to penalties, loss of trust, brand image, or even business. For a decade now, we've changed this by building an action-based, centralized compliance registry, automating the compliance reporting, bridging the knowledge gap, ensuring increased visibility for the management, thereby promoting a compliance-oriented staff, approach, and culture. What's next? Reintroducing Sermo. Now we are Sermo Next. Much like advanced. New look, new user experience, intuitive dashboard with charts. More flexible and customizable and reporting hierarchies. Improved performance with enhanced scalability.
In this evolving digital world, customers want robust applications which work seamlessly on the web and mobile. The potential cost of an outage due to the failure of a key application server is significant. So is the threat of a cyber attack. Remote and hybrid work has made it harder for companies to maintain security. Array offers a complete range of delivery and security solutions, which aims at maximizing employee productivity, ensuring always-on availability, optimizing the end-user experience, and guarding business infrastructure against an attack and data leakage. Array load balancing and application delivery provide the availability, scalability, performance, security, and control essential to keeping applications running in their power band. ASF series web application firewalls provide businesses with a flexible and precise tool for securing applications, APIs, users, and infrastructure against web attacks and zero-day exploits. AG series SSL VPN gateways provide secure remote access to applications, desktops, file shares, networks, and websites from remotely located and mobile devices. ASI series SSL Intercept provides enterprises with visibility into encrypted traffic entering, leaving, and traversing their network. SSLI is an ideal solution for optimizing both security and infrastructure efficiency. You can mix and match next-generation and web application firewalls, SSL VPNs, load balancers, IPS, IDS, and other network services from Array or third-party vendors on a purpose-built AVX series network hyper-converged infrastructure platform. It enables intuitive instantiation and enhances service automation while providing the agility of cloud virtualization and performance of dedicated appliances. With Array's product portfolio to deliver application availability, security, access, and performance, you are assured the best-in-breed solutions for your applications.
Do your borrowers face a long wait time while you assess their applications, leading to higher drop-off rates, fewer approvals, and lower earnings? Introducing Finezza. We are an integrated SaaS platform that provides end-to-end lending services. Our platform helps you onboard borrowers, process and underwrite applications, monitor risks, manage collections, while complying with regulatory guidelines. You can define your own workflow for every product that you want to launch, based on industry standards, company policies, and risk profile of the customers. If the borrower is applying for a loan product through a mobile application, you can decide which details will be collected and in what order. For instance, you start the customer journey by requesting for their PIN code details first. Thereafter, you can request the OTP from the borrower as consent to pull their bureau details. Similarly, you can pull other details such as identification documents, address proof, GSTN, bank statements, and many more in no time. Our API-enabled approach helps build seamless onboarding journeys, by breaking the journey into multiple stages, where you get to decide the order in which the onboarding functionalities will be deployed. On the other hand, our DICE framework enables borrowers to submit and sales personnel to collect documents in a seamless manner. Our bank statement analyzer solution, Precisa, simplifies your bank statement analysis process by presenting actionable insights in the form
Ladies
of
and gentlemen,
visually
now that
appealing,
you've
intuitive
taken lunch,
dashboards
you've
in
got
real
adequate energy. Adequate energy. So there has to be energy when we say energy. So can we have a big round of applause for ourselves? Sir, yes. Sir, a bigger round of applause. All right, so how was lunch? How was lunch? Good? Very few people who had lunch. The rest of them didn't? What? How many of you had lunch? Sir, how was lunch? अरे तो बोलना ना. You should say then. Lunch was good. Anil sir, how was lunch? Yes. Very good is what I was waiting for. Thank you, sir. Thank you. Okay. All right. So, ladies and gentlemen, for everybody who's outside, all our amazing leaders outside, still having the lunch or not having the lunch but outside, we request you, this should be your announcement, your cue to kindly come on in because we've got an extremely interesting session exclusively tailored for you. We're just starting off. All right. So, our amazing audience members, our next set of leaders are the very best and they'll help you rethink business with a digital edge. Leaders, you know how the drill at Banking Frontiers is. We take your introduction, we take your name, you come on in. One small question, sir. Manoj sir, now, yes, everyone. One small question, waiting for a super duper short answer from your end, and we have to. Sir, you make me nervous. Let's start with the man with the toughest stars. Let's call on Mr. Manoj Agarwal, Group Editor, Banking Frontiers, to kindly come on up. Manoj sir, सवाल ये है, one question, and man with the toughest stars because moderators, rest everybody gets at least 10 to 15 seconds. Same question, they can come up with an answer. So Manoj sir, सवाल ये है, what is that one thing in life that we should constantly think of when having a bad day or a tough day? What is that one thing we should most definitely think of or keep in our prayers?
So the best tool that our mind has to get out of any unpleasant situation is to imagine something that you really like. Whether it's a vacation in Switzerland, whether it's driving a Ferrari, whether it's winning Miss Universe, all those options are available for the mind at zero cost. Guaranteed solution to any problem that you are finding yourself, unfortunately.
Sir, I was going to say thinking of ice cream, and you said vacation in Switzerland. That's how they're different. I think I should think bigger. Fantastic. Thank you, sir. Thank you so much. Our next leader is Mr. Pankaj Sharma, Chief Business Officer, Lentra. Sharma, sir, same question. The question is, what is that one thing that we should most definitely think of and rethink of when trouble times? That one thing. Super short answer from your.
Trouble times.
Yes. Okay. Anything.
I definitely say Hanuman Chalisa.
Okay, Hanuman Chalisa. From imagination to Hanuman Chalisa to Mr. Mrinal Sinha, the head digital lending and third party products, retail loans, HTB Financial Services. Sir, imaginary scenario, wonderful scenario is taken. Hanuman Chalisa has taken. Last bit from your end.
I'll put it very simply. I think tough times, if you're going through tough times, remember the good times. Since the good times didn't last, tough times won't last as well.
Wow, that's so ironic and diabolical, but completely makes sense. So what amazing answers, leaders. Absolutely amazing. Stage is all yours. Ladies and gentlemen, a bigger round of applause because after lunch, this is our very first segment. Thank you so much. Thank you so much. Stage is all yours.
Uh, Good evening, good afternoon, ladies and gentlemen. I'm really pleased to have this conversation with Pankaj Sharma, who is the Chief Business Officer at Lentra. Pankaj, on my right. And Mrinal Sinha, he's at HDB Financial, the head of digital lending and third-party product. Welcome, Pankaj. Welcome, Mrinal. So, HDB, we understand, hardcore NBFC, right? As typical as it can get in a positive way. Lentra, a hardcore IT company, a leading IT company, focused IT company, focused on the needs of the financial sector. So let's see if we can have what kind of conversation we can have with these two gentlemen who represent the opposite sides of the same coin, right? Because ultimately they together serve the common man, the common business, the common borrower, the common trader, the common citizen. Mrin, I'd like to start with you because you're front-ending this entire population of customers. So I'm sure HDB started off as a very traditional lender, and you can even tell me when it started doing business. And you can maybe tell me what was the business model then, and what is the business model now, and what exactly has digital changed since you represent digital lending as the line of business. What's changed over the years with a focus on the recent change?
Sure. So, good afternoon, everybody. First of all, I think it's a difficult session for most of you, I'm sure, because the session after lunch is always the toughest. And I was telling Pankaj earlier that I'm reminded of one of my colleagues who used to say that this is a session in which you can grow ginger in the graveyard. So, so welcome to this session, and I hope we don't add to the woes. We'll try not to. So to answer your question, HDB started off sometime in late 2007, early 2008. And as you rightly mentioned, we were a very traditional company, and to a certain extent, I believe we still are. We are a very good balance of tradition and the modern way of doing business. We started with a complete model, which is a knock on the door model, where our sales force, and fairly large sales force, visits the prospective customers on a day-to-day basis, knocks on the door model basically, and that's how we do business, and that's what we've been doing for the last as many years as we've been in the business. To answer the second part of your question, that how did we transform digitally? I think what we did with our sales force is the first thing that we did with our sales force is that we made them use the mobile applications which we developed when they meet a prospective customer. Now, earlier what we were doing is they were just the old school, meeting customers, collecting cards, understanding the customer, coming back to the office with his papers, and then deciding whether what you can do with the customer. Now, with what this mobile app did was that the salesman sitting in front of the customer can just feed in some basic details that we asked for, and those details through the app comes to our internal servers or the internal backend, where we analyze the customer on whatever parameters we need to, and we look at his, let's say, the bureau score, we look at, let's say, for example, the EPFO scrub, and we arrive at an internal scorecard for the customer.
Okay.
And within 15 to 20 seconds, we are able to tell the salesperson sitting in front of the customer whether this prospect is good to go or not.
That's great.
Yeah.
20 seconds.
Yeah. What that has helped us is we've been able to bring down our turnaround times for providing financial solutions to the customers. In addition, it also has helped us improve the productivity of our salespeople. And overall, I think all that is getting reflected in our internal customer satisfaction scores, which are improving all the time. So I think that's the way we use technology to transform our regular business.
So beyond using the mobile device, what else? Some more meaningful transformation, digital approach.
We have different lines of businesses. So this particular model that I mentioned was about our core business, which was on the personal loans and the loan against property sourcing that we do. But in our other consumer products, for example, the consumer durable loans that we do, we have much more advanced systems where we are able to disburse loans in maybe flat 15 seconds. So that's the other line.
Okay.
Maybe I'll cover it later once.
Okay, fantastic. So Pankaj, coming to you, how did the engagement with HDB Financial start for Lentra? And what is the real value addition Lentra brought in to HDB when you started the relationship?
Sure. Well, good afternoon, everyone. Well, I think Mrinal touched upon how we've been able to add value to their existing processes. But I think overall, if not just specifically HDB Financial Services, but overall, if you look at the NBFC segment, how Lentra has been able to add value to the way NBFCs used to function earlier, their traditional ways of sourcing business, and also processing loan applications. I think that is the space where we've added tremendous value to the NBFC segment, where Lentra has built a digital platform which actually has brought together all the key stakeholders in the NBFC business, be it the sourcing partners, DSAs, channels, channel partners, fintechs, and during the loan processing loan application processing, also other key stakeholders like the FI agencies or valuation agencies, legal agencies, who are also key stakeholders in the processing of the loan. Lentra has been able to provide a platform, to NBFCs and to other lenders, where we've brought together all the key stakeholders on the same platform. So the sourcing of the loan becomes very seamless. The DSAs, the sourcing partners, also other RCU, FCU, FI agencies, everyone is on the same platform. Sourcing happens through it. And hence, the entire processing of the application becomes very seamless, which results in a fantastic TAT of disbursement and sanction, and eventually results into customer delight. So I think that is the space where we've been able to add tremendous value.
Okay. So, Mrinal, this sounds like maybe phase 2 of a digital transformation which goes beyond a mobile app being used by the sales force, by the sales team. If you were to dive deeper into digital and talk about, let's say, if you can put in a couple of jargons like RPA, robotic process automation, like AI, artificial intelligence, like API and open API. How has the transformation at HDB, not the transformation, how is the business expansion and business sourcing at HDB leveraged some of these underlying technologies? And what do you see as the correlation between the platform that he has just described?
Sure. So let me just answer that in maybe 2 or 3 parts. First part is on our legacy systems. We made our legacy systems API enabled. That's the first thing that we did. Secondly, all the new technology systems were put on an enterprise service bus, and this enterprise service bus was further used robustly with the help of API, right?
Okay.
Secondly, as Pankaj mentioned, we work with new digital age solutions like what Lentra provides. Like, for example, Go No Go is a platform that they provide, which we use. And that has helped us automate our underwriting processes quite a bit. We are able to, we use their platform a lot in our sales finance business, which is the consumer durable business. And we are able to disburse a loan in maybe under 15 seconds using this platform that we use with them. And that typically means I'm talking about 500,000 transactions per month, loans getting disbursed in under 15 seconds is what we do with them. In addition to that, we've also worked on low-code platforms where we have been able to, kind of bring everything under that platform, and that has helped us enhance our digital awareness for the client. And all this has been done keeping data security paramount in our process. Because any data of customer is of paramount importance to us. We use new age security norms to ensure that the data is secured at all times. We keep enhancing that all the time. In fact, we are among the top 10 percentile of the global financial institutions, which have a bid-side score of 800 plus. So I think all that has helped us, and that's how we work with partners like Lentra.
Just wanted to add over here, I think Mrinal touched upon a very, very critical part specifically of, consumer lending journey, where he said that it's very important for them to give a decision go or no go to the customers who are applying for a consumer durable finance loan, because, the consumer walks into, a store where he's wanting to buy a consumer durable, an home appliance, or let's say a mobile phone handset, and you have to give an instant decision at that point itself. Very high chances that the customer that you're dealing with or the application which you're processing could be a new to credit customer where the customer's credit history is not available in the credit bureau, or if it's a tier 3, tier 4 kind of a city, it is quite possible that the customer may not have enough information, or you may not have customers enough information to actually take an informed decision on the customer. So what do you do in those kind of situations when it's a thin file, credit history is not possible, it's a new to credit customer, or you don't have enough information? I think that's where Lentra's platform, or the kind of platform that we've built, really helps them in taking an instant decision, where we've integrated the platform with a lot of different kinds of alternate database APIs, a lot of different fintech services, which helps them to, the platform basically helps them to ingest any kind of alternate database, use it as input and as, a surrogate or a proxy for, evaluating a particular loan. And that helps them to take an instant decision. So that's how the whole platform has been built. It has the capability of even evaluating those kind of customers where information is not present by using alternate database sources, and has those kind of advanced algorithms built in the business tool engine of the platform, which is able to help them provide that instant decision in an unsecured and consumer durable finance kind of segment.
So both of you have said one very interesting thing each. One is that the decision is taken in 15 seconds, which is kind of the amount of time that an ATM takes to disburse cash. So an ATM just has to verify my account, and still it takes 15 seconds. Then to take a complex decision with an unknown entity, someone who's not yet a customer, I think 15 seconds is a massive achievement. So kudos for that to HDB team. And the way you described it, that, the data is not available, and you can pull in so much alternate data and relevant data and with all your partners. So I imagine you must have a wide range of partners with different capabilities, because just having 2-3 partners doesn't sound like it's going to be sufficient.
No, absolutely. And Manoj, everyone here in the audience would also agree that the digital lending space, the digital lending ecosystem is a very collaborative, business model. Today, no lender, no player in this space can actually claim that I can do everything on my own. It's a very collaborative ecosystem where right from sourcing, processing, and disbursement, at every step, every lender needs to collaborate with either a data service provider or somebody like Lentra, and it's a very collaborative ecosystem. And so the platform that we've built it with over some 250 different API fintech services, so that once a lender comes onto Lentra's platform, they do not have to actually move out of the platform, and the end-to-end, right from origination up to disbursement, the entire processing can be done on one platform by way of fetching, making calls through the APIs and fetching all the data that they require.
Okay, fantastic. So, Mrinal, coming back to you, what does the channel strategy for HDB now look like compared to, like, perhaps a single channel strategy that you started off with so many options and so many partners? What is the channel strategy, and in terms of sourcing and serving customers?
So I think the way the fintech revolution has taken place, is taking place in India, gives us an immense opportunity on that segment, because these are organizations which are sourcing customers in a very different manner than what erstwhile organizations used to do. They have a reach. They are reaching to the millennials. They are reaching to the new to credit customers. They are reaching to everybody. We see a lot of scope there in the embedded finance space there, and with our flexible architecture and the service bus that we have to provide, enterprise service bus that we have to provide, I think we can cater to many of these fintechs. What is also very interesting is that within the fintech space, we are seeing some very specific end-use players coming in. For example, you have edutech fintechs, or you have insurtech fintechs, and I think our systems are pretty much flexible to serve and collaborate with these people, and that's one important channel that we see coming in the future.
Okay. So, General, we are time out. Would you like to each of you make a closing remark?
Sure. Well, I think the way forward for the digital lending ecosystem is, to have platforms which are forward-looking. You can't have monolithic platforms. You can't have platforms, through which you can't collaborate with other players. So, and which is why, if you see what Lentra has been doing, is to build API-first platforms, so that once you give the digital platform to a player like HDB, on ongoing basis, they can keep integrating and collaborating with data service providers, sourcing channels, It could be anyone. It could be a marketplace. So it has to be a platform which is API first, forward-looking, and that is exactly what today most of the lending models are pointing towards. Be it be it ONDC, be it OCANE, everyone is pointing towards a platform which is open API and a model which is API based, so that all the lenders have all the flexibility available to collaborate with a very quick GTM with with a partner of their choice, and ensure that both sourcing and the processing is super fast with a quick GTM.
One thing I take is outward looking rather than traditionally inward looking applications. And Mrinar, what would you say as
Yeah, I think I
the road
agree
ahead?
100% with Pankaj that digital lending has to be a very, very collaborative process. Nobody on a standalone basis would be able to do it successfully. It has to be collaborative. The future of digital lending, I think, in our view, is very bright. Like the way technology has affected all of our lives in the last few years, lending can be no exception, and it is no exception, and it will continue to evolve. And there will be newer technologies, and I'm sure we are targeting 15 seconds today, or we're doing 15 seconds today. There will be technology where we can do it in 5 seconds in due
Wow.
course. So I think that very much exists, and yeah, there could be some issues which we may need to address on the way. That could be related to customer ownership when we work with fintech partners who's on the customer. These are some issues which will need to be addressed. And the regulatory challenges, stroke changes that keep happening or will keep happening in this domain are also the issues which we will need to address. And I think as long as those issues are addressed, we see a very, very bright scope for this particular piece of business. Thank you.
I think if you reach 5 seconds, the ATM is going to be jealous
Let's see.
of you and your system.
It was. Let's
But
hope so.
I also assume that indirectly you also said the whole system is trustworthy and secure with all those connections.
Absolutely.
Everyone is.
Security is very important. As I mentioned, our data security norms are very strong, and we kind of insist with every partner that they have to be pretty good on that, because we cannot, under any scene, put the customer information into wrong hands.
Leaders, as much as we'd love for you to continue,
Thank you.
we genuinely run out of time. Amazing session. Ladies and gentlemen, a big round of applause for our leaders. And we would request Manoj sir to kindly present our amazing leaders with a token of our appreciation. Of course, there is Mr. Pankaj Sharma and Mr. Mrinal Sinha. Pankaj sir has understood the drill now. Eyes always for the camera. Great. Thank you so much. Thank you so much, leaders. Amazing session. I mean, what else do we expect at Banking Frontiers, right? Amazing session is exactly what we have promised to you, and that is exactly what we will deliver. All right. And on that note, on to our next segment. For our next epic segment, we have an epic leaders come in to give you an epic session, because you all are very epic. I had to force fit the word epic as many times as I could. Let's give it up for Mr. Rajendra Avasthi, co-founder of Epic in DeFi. My God. Avasthi sir, one small question waiting for a very small answer from your end before we start off. All set? Oh my God. Can we have a mic given to us? Avasthi sir, your question is, what makes Mr. Rajendra Avasthi absolutely epic? One talent, one skill of yours. What is that one quality you have which makes it super duper epic?
So I got a WhatsApp forward this morning. There's a Forbes article which says that the older entrepreneurs are more successful than the younger entrepreneurs, right? So at 57, I think I will say that that's the
57?
Yeah.
What is this word? What skin regime are people using? I don't know. Sir, we need to have a discussion on that later, but
Sure.
or we can now, but there's a very growing productivity by 100x is a topic our audience members most definitely want you to talk on first.
Sure.
So Avasthi sir, stage is all yours. Thank you so much.
Thank you very much. Good afternoon, everyone. My name is Rajendra Avasthi. I am one of the co-founders of this company. Most people say hard to pronounce, called Epic in DeFi. We more call it Epic. As you will see that, I think what we are looking at, we are trying to do reimagine business And in the process of reimagining business, what we have been able to do with our customers is help them in growing in the productivity, which is the sum substance of many things which we talk about. So I'll just walk you through that what we do. I'll just quickly talk about a case study which we have done with one of our customers and how they have benefited out of it. The first thing is who we are. Basically, we are a tech fin company. I think everybody talks about fintech. We are a tech fin company. So we are platform manufacturers who is being used by the customers, banks, financial institutions, NBFCs, fintechs in India and across the globe for launching their product of B2C. That is what we are. We provide what is called enterprise grade no code platform. I was a banker when I started. I worked in a bank for 10 years on the business side. I was in the banking technology space for about 16 years before we started this journey. Being in a product like Finacle, I know the pain when you do the core banking implementation, right? So we took our learning and we said, is it a way with a given technology possible to make a product or a platform which can take away some of those problems? Long implementations, right? Pain of customization, pain of upgrade, all of that can be taken away. That is what we came out with the idea of creating a no-code platform. So we don't do anything, a word called customization. Okay. With that, we take away something called a fatigue, which is suffered by most of the CIOs. We partner with our customers and help them in creating the digital paradigms, which is, imagination is what is the only limitation, I would say. So people are using our platform in multiple directions, multiple dimensions. And finally, coming to the pace which I was talking about. So using our platform, people can launch their product maybe in 30 days, 20 days, 45 days. They can launch at that speed because we literally do not write any code. So I give an example that I think if for implementing our platform, I think the more time goes in doing the architecting or designing, building the building is very, very quick. So it's like 80-20. And if 80 is ready, 20 can be very fast. Moving forward, we are in this journey for about 4.5 years, 5 years. We have implemented 20 plus different lending solutions across 60 customers across different part of the globe. We have about 350 odd integrations, API embedded in the platform, so which are plug and play, ready to go. And we have one philosophy, which we have learned all our life: make small promises and keep it. That's the only way to build the trust. So if we come and tell our customers that we will deliver this on so and so date on so and so terms, that will happen, and that's what our 60 customers will vouch for. Moving forward, what do we do? This is our philosophy. The philosophy is we let business be the technology. I think what I was talking about, the fatigue, the technology fatigue we want to take away. And that's where all our technology, all our platforms come. We let business be the technology. And we are, as I was saying, we are a platform building player. We build multiple platforms. We have built multiple platforms. So starting from your origination in the beginning to your collection in the end and anything in between, everything we are just in the process of platform building. Every platform, whatever build, is zero code platform. Why Epic? So I think most of people would have seen the digital fifth. We are probably one of the few who appear in different boxes in this report. In the LOS LMS space, in the collection space, in the identity management and all of that. What is the special about the platform? Let's talk about it. As I was saying, it's a no code platform. So right from your defining your field to defining your screens to defining your business rules to defining your entire workflow, everything is front end. No need of writing code. So not does it just, it helps you in defining the platform, but it also helps you in tomorrow if you have to modify. For example, the regulation is changing in that you have to go and add a business rule. You have to go and add a field. You have to add a new thing. You can just go and do it. It's all in the front end. You can roll it out just like that in hours, days, minutes, whatever it is, right? Rather than writing the whole code. It's modular in nature. All of that we have designed is multiple modules, all via microservices. So you can use the modules. If you are having, invested some modules, you can choose not to use the module which are there. But if you choose to use, you can use the whole module. For example, the platform comes with a full-fledged document management system. If you want to use the platform document management system, you can use it. But there are a lot of banks, NBFC would have invested in the enterprise grade document management system. In that case, you need not use ours, and we can directly straight through, we can do the integration. So it's possible to do because it's modular in nature. In terms of scalability, that's very important because in India, the volume, right? Everywhere there's a play of volume. Scalability important from both technical as well as from the functional perspective. Because the platform is not product, because of that, there is scalability required on the functional side, both horizontally and vertically. Scalability also required in terms of the technology, both again horizontally and vertically. Let me give an example of what I'm talking about the scalability horizontal and vertical from the functional side. So you can have multiple line of business. You can start with retail, you can go to SME, you can go to corporate, and so on and so forth. So you can scale it out horizontally, and each line of business, and then you can add the products. So you can grow vertically. So you can start with the personal loan, add credit card, add the auto loan, home loan, LAP, and so on and so on and so forth. So that's how the horizontal and vertical scalability comes into the picture. There are, as I said, there are a lot of products which are ready. So it's plug and play. You can deploy it, you can use them, you can modify them and use it, or you can use it as it is. If you like it, you can take it, your blueprint, and you can build your dream journeys. Either any of that is possible to be done. And finally, it's a unified platform. This is the first thing which we did based on our experience when we were doing it, building the platform. We did a time motion study. And in the time motion study, what we found that most of the time what happens is that in the process, there will be a lot of things which will fall through the crack because decision will happen on emails, data will come by physical, paper, and so on and so forth. So we said that anybody who's working in a case has to work in this platform, inside, outside, customer, legal, DSA, whomsoever, everybody has to work. Everybody has to work digitally. There is nothing, no paper, nothing. And that's where we have created, end-to-end digital journey, so as to say. Moving forward, this is the, the customer spread. We are in spread over 8 countries, 4 continents as of now. These are some of the figures. We are, our journey has started. So, in a short time, whatever we have been able to achieve, I take a lot of pride to say that, we have, in a sense, we are a global company already with having a large footprint in an advanced country like Australia. We have a footprint in other parts of the world. These are some of our customers from different parts of the world, who speak about us. Let me move forward and talk about, the case study, what we did with one of our, customers. And this is a classic case, I think, which is being faced by many of the, the NBFCs or banks in India as well as abroad. For the simple reason that over a period of time, what has happened in the name of digital, there are a lot of point solution which has come about. And as the pace of digitalization or pace of automation has increased, I think there is a great need for a enterprise grade digital platform. If I have to give an analogy, if you go back 25 years back, if you look at the banking, think about it, what it was 25, 30 years back. It was manual, paper-based, then it started, then the branch-wise automation started, right? The Finacle came about, I worked in Finacle for 10 years. It started with the branch-wide automation, And then the branch-wide automation became, the regional, centralization till the time the central thing emerged. And all those point solution got consumed. I personally believe, out of my experience, I think we are in that journey of what has core bank has gone through. There are a lot of point solutions that emerged, but I think over a period of time, these point solutions are going to get consumed by the enterprise-grade platforms, digital platforms. Moving forward, so what was this is the customer. I think you people would have heard about it, Vistar Finance. It's a kind of a niche NBFC. They work in a specific segment, tier 2, tier 3, those kind of things. They have a large branch network, as well as they have a good number of staff. We started this project of digitizing and automating their current process, the current products, and I think the problem they were facing is that whatever system they were using, they are neither able to automate the existing system nor able to launch the new products. So while they see a lot of potential in the market, but because of the constraint offered by the system, they are not able to do it. So that is where we came in, and we did their current whatever product is there, quite complicated on the SME lending. We did complete automation of it, and now we are in this process of launching series of new products. In this one. What are the problems? Some of the problems which they were facing. The first problem they are facing is that while they were saying that they have a digital LOS or LOS solution, but that solution was actually had no automation whatsoever. So there were scenarios where, in case of LAP, different states will have different document, and based on the different document and different loan type, you will have a LTVs which will change, right? This is a kind of a matrix scenario where you will have a combination of 2 or 3 input, which will give you some 5 or 6 output in terms of, what is the interest rate and things like that. People used to sit and do it like 3 days in an Excel sheet with like 30,000 lines. We just automated it, right? The RMs which are going to the field, they were having things taken in the diary, right? A lot of information leak was there. All of that we plugged in, and everything just got in. This was the problem. Approval process, as I was saying, approval process is half manual, half mail, half paper, half digital, whatever it is, right? So it's a difficult to track it, right? And we all who know underwriting, we know it, that how easy or difficult it is, when the deviations come, and how do you track it, and especially in SME. Keeping track of in-flight applications, which place, where it is generated, where they have reached. So it is difficult to keep a track of it, and integration with the third-party system. So like data is everything, data is oil, and all we heard. How does the data come in? How do we use it? For that, we need all seamless integration. How did we solve it? We have completely digitized the journey. Completely, we have taken away paper. No paper. Anybody who goes in, from the field staff till the the CEO or the board approving, everything is digital, 100%. API integration, the platform comes with 350 integration of APIs. We have completely made that seamless integration with them. Decision making process, platform comes with a very extensive decision making and deviation process. So we have all kind of possibility which you can think it. We've done that. And finally, the omni-channel experience. So be it staff, customer, so on and so forth, everybody. What are the benefits they've got? These are some of the benefits they have realized. And as I was saying, the topic of our discussion was growing productivity by 100x. That's what it is. The proof of pudding is in eating. That's all is here. Thank you very much, ladies and gentlemen, for your time.
Ladies and gentlemen, that is and that was the absolute epic, Mr. Awasthi. A bigger round of applause, and we request Mr. Manoj Agarwal to kindly come on up and present Mr. Awasthi with the token of our appreciation. Okay. Can we have Mr. Babu Nair from Banking Frontiers, the MD himself, to kindly come on up and present? Babu sir, so from now on, we've nomenclatured Mr. Avasi as Epic Avasti. Thank you, sir. Thank you. Thank you, Avasti sir, and thank you, Babu sir. Thank you so much. All right, after that epic segment, moving on to the other, it's panel discussion waiting, an exclusive panel waiting for all of you. The topic that we're talking on is e-regulations, compliance, and technology, a peek into changing regulations and role of technologies. Starting off with the moderator himself, Mr. Sunil Sharma, President, Chief Actuary, and CRO, Kotak Mahindra Life Insurance. Can we have Mr. Sharma on stage with us? Sir, one small question, waiting for a very small answer. No explanations, just the answer. Sawal ye hai. What is that one era that you would want a sneak peek of? The era which is gone. Let's say 1930s, 20s, 10, civilization. Wow, okay, they're very recent. Fantastic. I see ma'am agrees to that as well. Our next leader is Ms. Malika Mittal, Chief Risk Officer, Mahindra Finance. Ms. Mittal, with your applause, I think we've understood it is pre-2000, 2008. What was with 2008? We'll discuss later. Ma'am, what would your answer be? Oh, wow, wow, okay. Our next leader is Mr. Siddharth Vishwanathan, the Chief Risk Officer of Credit B. Wow, Siddharth sir, what would your answer be? Oh, the year that went by. Yes, yes. Very recent. Mr. Deepak Patkar, Chief Risk Officer, Fullerton India Credit Company. Patkar sir, let's go back a little. How about you yesterday? Then I don't know. Wow, that's very precise. Now we know why. I get it. I get it. Our next leader is Mr. Milan. Okay, Mr. Deepal Singh, the Chief Risk Officer, Aditya Birla Finance. Singh sir, what would your answer be? You've got, I think, of the Lord, you've got a fair bit of time to come up with. Okay. For answers, best kept secret. Thank you, sir. Thank you, Deep sir. Our next leader is Mr. Rajaram Manian B, Chief Risk Officer, Adani Capital. Manian sir, except for 1960s. Rather live in the present. Wow. Wow. Okay. Fantastic. Our final leader for the panel is Mr. Ankur Maheshwari, Chief Financial Officer, Trio. Maheshwari sir, I can see it in your eyes. You've come up with a wow. Beautiful answers. My God, are these financial leaders or philosophical gurus of some sort? Beautiful. Panelist, stage is all yours. Thank you so much.
Thank you. Am I audible? Thank you. Good afternoon, friends. It's really interesting session, and we got surrounded by various experts here. Quite a few of them are chief risk officers. We got CFO, and the CROs with a lot of expertise in the information technology. I think the NBFC sector has just gone through various challenges over the last few years. Pandemic period was the most difficult period for most of the NBFCs, wherein obviously the entire economy was affected by the pandemic, and obviously resulted in a lot of slowdown. There was some credit risks. There were some defaults which happened during that period, but I think it's bounced back to close to normalcy now, and is looking forward to a significant growth in the NBFC. The industry is going through obviously various challenges. The expectations of the regulators are relatively getting higher and higher as the overall NBFC sector is growing. And looking at the importance and the criticality of the sectors, I think the more and more regulations are coming in to see how could really the interest of the investors or perhaps the customers can be protected, and also ensuring that all the NBFCs are sufficiently capitalized and are solvent to really make sure they meet the needs of the customers. So in all this backdrop, I think this the topic is quite interesting, and I really feeling great to be among various experts here. So I think if you look at the whole model has gone through various changes, resulting from pandemic, and also the corresponding response that has come from the regulators with regards to protecting the customers, etc. I would like to really ask, I think probably we can just open discussion in terms of how will the role of chief risk officers and also Rankur for you, CFO, has evolved over this period. What are the various challenges you faced in your businesses, and what helped you to manage those challenges? And we can have each of the speakers to really comment on this.
Sure. So I guess I can put these things into perspective when it comes to digital lending / banking over a period of time. So I guess when I look at the things, I classify the entire financial life cycle of a customer into a single word, which is called BIS. It's my term, of course, which is BISS, B, borrow, I, invest, S, spend, and S for saving. These are the four broad spectrum of a customer's life cycle in the financial terms. And India, over a period of time, has evolved a very, very innovative fintech system, including the digital financial inclusion, where it has placed itself amongst the third in the entire world as a fintech ecosystem. If you talk the entire US population, the number of people who are doing the digital transaction in India is more than that. And in fact, if we talk more, I guess everyone knows about the UPI. The last month crossed 6 billion transactions, 11 lakh crore worth of rupees denominated transactions. I guess, of course, the power of the technology across all these four spectrum is quite interesting. So no one can deny that what future is there for technology-driven businesses. And then, of course, many verticals gives a lot of opportunities. But I talk about the core challenges. See, along with the growth, of course, over a period of time, there are a lot of regulations came in, and it's an evolving sector as such. So, of course, many things are not there, which, of course, over a period of time will come and fill the vacuum. But the key challenges what the entire sector in the digital domain have faced is, first and foremost, is the entry of the non-serious players in the market. So few people who are actually not focusing on the core funda of the business, they are kind of spoiling the entire industry, and the reputation, etc., is also at stake. Second is, it's a conventional transactions versus the modernization of the business. So typically, when you look at the conventional players, they always offer probably what is their inside. So I call it inside in versus outside in versus inside out. So in the conventional thing, what is there inside with the organization is being offered to the customer rather than considering the evolving preferences of the customers. Wherein the outside in, where with the help of technology, you actually give what is desired and needed by the customer. So that is something, the thinking change, the thinking mindset change should come into play. And the third is, across the digital landscape, all the entities and the players need to invest more in the corporate governance, processes, and also the control aspects of the business.
Thank you.
We were talking about the CRO, right? So,
yeah, I think so. I think the challenges over the last 2.5 years in your role as a CRO. What challenges and how did you deal with that?
I think COVID is a once in a time, once in ever event. But I think it has brought a lot of opportunities, and with the challenges that brought a lot of innovation. So I always believe that innovation is another of all challenges and diversities. Well, about the lending landscape of the country, it's actually it's gone leap and bound over a last actually about, I would say 3 years, or it has been evolving over a period of 5-6 years. But we are still trying to scratch the surface. We are far ahead to go. Uh, well, of course, when we're talking about digitization and also talking about risk management, so I think it has become extremely easy for a risk manager to assess and evaluate the risk that is involved in lending. I mean, it starts from the time the customer actually decides to take a loan or even decides to apply for a loan till the loan is closed. I think technology has helped in the process of application, processing, monitoring, and as well as innovating new products. I think today the risk managers have the ability to monitor risk real time without any lag in time or the kind of people that they have. It has improved the efficiency of the monitoring system, reduced the complexity of the processes that we have. But yes, the challenges, of course, data is always the double-edged sword. I mean, I always believe that data is something which is so powerful that it needs to be nurtured, it needs to be understood by the organization. The way it is, the data is collected, the data is maintained, and also the data is actually put into use, for different kind of analysis. I think the biggest challenge that today the CRO has is the balance between ease of business and while we're talking about the simplicity of lending uh, and also the quality of the portfolio that we need to maintain. I think that's the right balance that we need to strike. Plus, also, while we're talking about the compliance and the regulatory framework, yes, of course, the CRO today has to put in, the compliance hat first, then, design your processes, design your business, and design your risk management. So I think that's the biggest challenge today that we have. Of course, while we have some clarity in terms of the regulations of digital and other things, I'm sure we will still do better.
Thank you, Raghavan. We will hear from you.
So thanks, Sunil. So let me give it a sort of a different spin. So the canvas for the CRO was always quite wide. Now what COVID has done in the aftermath of COVID has been that some of the risk side, or the principle of risk side, has gotten more prominent what traditionally would be a CRO. Credit risk was always there. It was bang in the center of our CRO, which takes care of everything, the journeys, the portfolio monitoring, all of that. But now what has taken center stage, more so because of the digitalization and the digitization post-pandemic, things like information and services, that was for some center stage. You have the operational and the technological risk, that again has come center stage. You have things like capital and liquidity risk, that again has come center stage. And then you have your typical, you have your reputational sustainability. Sustainability, which is ESG, is again something which is gaining more and more prominence. Reputational risk, your data privacy, your data breaches, how to do, when to do, how to onboard customers, how to contact the customers, how to service the customers. The traditional things of credit, your compliance, your conduct, they are still important, but they perhaps are not the be-all, end-all of what a CRO is. So I just think that perhaps the canvas for a CRO has become that much more. Okay, so I'll just give that different perspective into what a CRO's role has become and how it is evolving.
I have a small take and he has requested to be released immediately.
Okay.
So, if it is okay with you, we can continue the conversation post his address because he has requested us to, immediately allow him to be address the session. If that is okay with all our
Well,
honorable speakers.
That's absolutely fine.
Huh?
It's okay.
Thank you so much. Thank you so much for your cooperation.
Yeah.
There is no possibility of avoiding political risks. Ladies and gentlemen, I take pleasure in announcing the arrival of Honorable Minister of State for Finance, Mr. Bhagwat Karad. Please give him a standing ovation. May I request Mr. Manoj Agrawal to be here? May I request all the jury members present here also to come on the stage? All the jury members, whoever have been here, please do come on the stage. So, ladies and gentlemen, I am really honored to present before you the Honorable Minister of State for Finance, Mr. Bhagwat Karad. We had the pleasure of having him in our session last year in the Frontiers in Cooperative Banking Award when we spoke to him about what we are doing in the cooperative sector. So, the same way, जैसे cooperative banks have not got the desired status in the banking sector, and slowly and steadily in with your current government and Mr. Amit Shah ji coming into the cooperative ministry and trying to give a growth to the cooperative sector, same way our NBFC sector has also been doing a lot of work in the financial inclusion side and doing a lot of work in growing the sector. And that is the reason we instituted this award called as NBFCs Tomorrow and DNA Awards for the sake of the cooperative, for the sake of the NBFC sector. So इसमें भी commercial lending है, housing finance sector है, you have microfinance sector and a whole lot of other lending sectors which have come together. We are going to award 20 good companies who are doing outstanding work in the area of financial services. With Ernst & Young has decided a process, and these honorable members of the jury, they are chairmen of federations from NABARD, from NPCI and various other such kind of organizations. They have selected 20 interesting innovations and we are giving them awards here. So this is the essence of the program, and I just invite you to join us and give us a small address with your thought. You have always welcomed us to share whatever innovations and suggestions to the ministry. We will keep sharing that with you, and you can go ahead, and I invite you to please honor us with an address.
Today, I am here to address
group of NBFC from all over the country. On this occasion, Mr. Babu Nair, who is a group publisher for Banking Frontiers magazine, Manoj Agrawal, group editor for Banking editor, Mehul Dani, all the juries, all the award winners, and all the NBFC members, directors from all over the country, and friends. I am really happy today to be with you for addressing a group of NBFCs which are doing very well in the country. It gives immense pleasure to connect with all of you in person today, and for that I would like to congratulate the Bank Frontiers for organizing this program along with a meaningful discussion. Our government, under the dynamic leadership of the Prime Minister Sri Narendra Modi ji, has been very responsive and proactive to address the needs of all the sectors of the economy and requirements as well as aspirations of the people of the country. Non-banking financial companies have established themselves as an integral part of the financial landscape and strong drivers of the economic development. As we enter the foundation year of Amrit Kal, I want to make the opportunity to applaud the NBFC sector for contributing in the financial inclusion of the country by emerging as a visible lender to many deprived sections of the society. This fulfills two of the government's major agenda, that is serving to the underserved and funding to the unfunded. The NBFCs have done commendable job in recording higher credit growth as compared to the scheduled commercial banks over the past few years. They have made unique developments by customizing products by understanding the requirements of the customers. Credit delivery growth of NBFCs in terms of the share of GDP has grown from 8.6% in the financial year 2013 to 13.7% in the financial year 2021. Similarly, the credit growth to services has improved significantly from 4% last year to 12.8% in the June 2022. Similarly, credit growth to micro and small industries has accelerated from 11.65% last year to 29.6% in June 2022. The NBFC sector has assets worth more than rupees 54 lakh crore as of 31st March 2021, equivalent to about 25% of the balance sheet size of the banking sector. This has grown from 12%, which was 12% in 2010. Means there is an increase about more than 200%. The profitability of the NBFCs sector has been improving. The NBFCs continue to maintain adequate provisions and their capital position remaining very strong. So in short, just I have given the figures. The NBFC sector is increasing in all sectors. One of the most critical aspects about the sector is fund flow into the NBFC. We understand that NBFCs have faced operational hurdles during the pandemic because of the lockdown. This was worsened by the lack of loans given out during this period. Our government came out with liquidity measures such as moratorium of loan recovery, repo rate cut, target long-term repo operations, special liquidity scheme, and partial credit guarantee schemes to support NBFCs in overcoming these hurdles. To support NBFCs through the liquidity crunch, public sector banks infused funds by NBFCs to the tune of rupees 14,667 crore by buying commercial papers and non-convertible debentures. In fact, our government has consistently worked on measures to strengthen the presence of NBFCs in the financial ecosystem. Along with government support, I think it is also commendable how NBFCs are proactive and efficiently embracing digitalization in order to continue delivering quality customer services. Today, NBFCs are setting new benchmarks by using technology for business development. Their partnership with the fintech sector has made user journey easier. For instances, digital customer onboarding and credit loan disbursement. Today, I am happy to see that so many NBFCs are investing in artificial intelligence, big data, and machine learning. Data from customers' usage is the efficiently harnessed to get insights about customers' behavior. This provides more incentive financial products. Some NBFCs are adopting distributed ledger system for different use of cases, especially cybersecurity. I believe in that light of the developing regulations, the NBFC sector has scope for growth in the future. I believe the NBFCs will bridge the financial inclusion gap in the country in the coming years, especially considering the big advantage they offer, such as low transactions cost, agility, innovations, and customer orientation. I assure that the government at the center will support the entire spectrum of NBFCs in their endeavor to achieve greater heights in the years to come. I am sure each of the NBFC stakeholder will contribute towards strengthening the policies, initiatives, and efforts of the Finance Ministry, Union Government, as well as RBI. I express my gratitude and best wishes to each one of you present here, and I am glad that I could share my ideas and interact with you all today. You all know that our economy is growing very fast. We are the fifth largest economic country. America, China, Japan, Germany, we are the fifth. After COVID-19, our economy, our recovery is good, and that is all because of good work done by different financial sectors and particularly NBFCs. I am here that you are going to discuss different problems of the NBFCs. And after discussing different problems of the NBFCs, you make a note and you please hand over to me. We will discuss at the government level and we will try to help you. I'm sure that the 20 NBFCs which are selected by the jury are really doing well. And particularly NBFCs who have done the startup. And these startups are, some of the NBFCs are in the unicorns also. And this is what the government of India wants. Under the guidance of the Honorable Prime Minister, our economy is becoming strong, and there are certain lacunae which are in the financial sector that we are going to remove. And I am sure that the NBFCs is a part where they will play a very important role to help and to develop the economy of the country. And I'm sure the dream of our country is to make our economy $5 trillion. And with your support and your valuable suggestions, we all Indians will achieve the goals. But one thing is sure that one has to do very smart work during in the financial sector. And you people, we are adopting new technology, new digital transactions, financial literacy, and to include the priority sector, which is very important in our country. We want to improve the financial sector in the priority sectors, because unless and until we improve in the priority sector, our economy will not reach the target which we achieve. I am sure such discussions in different part of the country by any NBFC organization will help to develop the economy. And with this short speech, I end here with giving best wishes to you from the government of India, and I promise you that I am always with you to improve the NBFC sector. You can always call me. You can always come to Delhi, or you can discuss the problems and try to solve the problems. Thank you very much.
Ladies and gentlemen, the leader that you see in front of you, right, is a national treasure and a national hero. And many of you know this. कराड़ साहब पर हम दोबारा से refresh करवाना चाहेंगे the memory. Sir recently made national news and won hearts of billions by saving the life of his fellow passenger by giving him first aid, that too mid-flight. Mid-flight, ladies and gentlemen. So, of course, a big round of applause and a standing ovation for Chief Guest, Dr. Bhagwat K. Karad, Honorable Minister of State, Ministry of Finance, Government of India. Karad sir, बाबू सर की परमिशन से एक छोटा सा सवाल सर, आप हमारे लिए हीरो हो, बट डॉक्टर कराड के लिए कौन हीरो है? Wow, absolutely fantastic. And we would now request Mr. Babu Nair, the MD of Banking Frontiers, to kindly present the Honorable Dr. Bhagwat K. Karad with the token of our appreciation.
Sir, you have been an inspiration in this entire conversation you have had, and you have spoken about how the sector has to go in for financial inclusion. We are all trying very hard to bring in the amount of financial inclusion and penetration of financial services into the sector. The fintechs of the sector have also worked quite a lot into empowering this fintech revolution, by which financial services can reach to every heart of India, into the rural countries of the into the rural parts of the country, and bring the rural population into it. And you have thoughtfully spoken about how we can actually empower every Indian with financial services. And NBFCs are one of the most integral part of this, thanks to the and some forward-looking regulations that have come in, where the NBFCs are allowed to co-lend with the regulator, with the banks. That has also empowered the banks to reach into the integral parts of the country. At the same time, NBFCs also to get a better muscle power to feed the population with credit. I think some of the great things that your government has also done by capitalizing the NBFC sector, which was initially in doldrums, and trying to handhold them during the crisis of the pandemic. I think these results are showing with the kind of reduction in NPAs that the sector has shown in the recent past. And we are really grateful that we have visionary leaders like you, Modi ji, and others who are actually trying to bring this sector into the forefront. So thank you very much, sir, for being a part of this session. And before you depart for the day, we would also like some of the winners, if there are any of the winners, they can also come and take a picture with you. They can have a privilege of, they will all come together in the front, and we can have a picture with you, the jury members and the winners. So at least we can do that much. So that should basically make good the short visit, but a very sweet visit and a great memory from yourself.
Karar sir has been kind enough to specially fly down from Delhi to Mumbai for this specific function to be with all of us. Thank you so much, Karar sir.
Some of you can actually take the stage in the front side also, so that we can all be accommodated.
A big round of applause for Dr. Karad. Dr. Karad, Dhanyavad. Thank you so much for your presence and your time.
Requesting the panel to please reassemble. We can have the rest of the discussion.
Panelists are blessed. Our amazing panelists are absolutely blessed. Panelists, not an issue. We've actually stopped time. And from where is it that you have to? Oh, 15 minutes. Okay, so the new timer states 15 minutes. And we request all our amazing panelists to kindly come on up and continue while we set the timer. Panelists, the time starts now, and yeah, we will let you know when.
Okay, welcome back. Interesting break. I think we're just warming up, and then we warmed up. Okay, unfortunately, Deep had to go. He managed the political risks, as you were mentioning, and now he's managing some compliance and operational risks. He'll put some attention to he had to leave. So maybe I think we can continue. I think we were just talking about, the NBFCs has gone through significant amount of challenges over the last 2.5 years, resulting from pandemic and the response by the regulators in terms of various regulations that came in. How has the role of CRO changed over the period, and what are the biggest challenges that you face, and how do you deal with those?
Okay. Let me start off with giving a little bit of perspective from the point of view of, let's say, a new gen fintech NBFC, right? So when we started off in 2016, the idea was to come up with a completely digital flow, as against, I think, the traditional scheme of things wherein it was all offline and then people are trying to move online. And I think a lot of success has been achieved over there. I think our journey was probably the exact opposite of that, wherein the thing is we started off completely online, and then 2018, 2019, I think it was a complete digital journey. The decisioning and all was done in real time. We pretty much used a lot of traditional and alternate data sources. There was a decisioning engine which pretty much used to kind of spew out a lot of rules, which used to run a lot of rules on the data sources which were there for each and every customer which was getting picked up. And the scorecards were kind of run in real time, and the decision was pretty much done. Two decisions. One is go no go, and second one is a credit line. And this probably was one of the smoothest journeys which was there. Let's say in 2018, if you think about it, I don't think there were too many people who were kind of doing this. We fortunately were able to build something which at least was something interesting for the users, which at least was a trendsetter with respect to setting up of the expectations from the customers as well, in terms of what can be achieved using technology in decisioning. And this was unsecured retail is what we are talking about in terms of product suite. Now, I think that is when 2020 hit, that COVID pandemic and so on and so forth. So till March, I think everything was great. We were kind of continuously optimizing everything digitally. The advantages are brilliant. You are centralized. Any kind of regulatory change or systemic change, whatever you need to do, it is very centralized, and hence it's a lot more easier to do, by the way. And considering that the entire technology suite was homegrown, we pretty much could have a lot of control with respect to how we could kind of take these things. But March 20 is when more or less the lockdown started and so on and so forth, which is where I think the story starts becoming interesting, right? In the sense that the status quo was changed. And when the lockdown started opening up, there were a lot of things with respect to resolutions and so on and so forth. Collections kind of was one of the key things that everyone was thinking about, and these likes, right? And by the way, pre-pandemic, the idea was most of the focus was doing digital collections only. But now I think the idea is that you need to start really thinking about from the point of view of practicalities in terms of how to achieve your means, which is like maximum collectible. And that's where you start thinking about the good old offline way of doing things. And that's when things kind of start becoming interesting in the sense that we started thinking that offline collections is something that is a capability that has to be built and developed, and completely digital is probably not going to fly as well. And that was one of the eye-opening scenarios which kind of came out in the field, in the sense that probably completely analog or completely digital is maybe not the way to go. But you really need to come to this digital or hybrid models to make things work. You can be on either side of the spectrum, but you have to pretty much kind of have a middle ground which works out best for you. So post that, we pretty much got into the offline collections capability and so on and so forth. And right now, it's kind of working in a hybrid mode, both from the point of view of sourcing underwriting as well as from the point of view of collections. And even underwriting, even underwriting, by the way, has got some manual components, video KYC helps, and so on and so forth. But definitely, there are additional manual interventions which kind of come into the picture. So all in all, this is how I kind of see the spectrum of, let's say, the growth trajectory in the last 4 years, wherein I think things have become really dynamic, both from the point of view of compliance, the technology, and so on and so forth. But I guess the biggest realization really is a phygital way is the way to go, and that's how I think we have evolved.
Thank you. Mallika, what do you? I mean, some of the points covered there. What do you think? From your business perspective, what are the challenges and how tried you cope with that, and how your role has changed, over the last few years? Because I think, some of the risk we never anticipated. It's one or two. I mean, we call it 1 or 200 years event. And some of the risks which were not anticipated at the time, we saw them for the first time. At least I'm from the life insurance industry, and I've seen the claims in one of the quarters, which is 5.5 times the normal claims. That sort of so many people died. And similarly, in the financial services. So, how challenging it has been? What are the new risks that has emerged, and how did you cope with those?
Sure. I think so. Very valid points raised here, and Siddharth, you elaborated very well on how technology has been changing, and especially because of the pandemic time, we moved digital, and the whole world moved digital. It brought in its own kind of risks, and that's. I think I like to step back a little bit as to how the role of risk has been changing. Okay. Let me, and I'm also going back to the initial question as to which era was the best era. Okay, I'm a very, very hardcore risk person at my heart. So why do I like the pre 2008? I just want to touch upon that. Being a risk person, I don't want to waste any crisis. Okay, so the first crisis as a risk person that I faced was 2008, and the retail boom that we were seeing pre 2008, right? And what happened in 2008, and it's very, very important for risk professionals here, because all over the world the entire regulatory landscape changed. Okay,
it was the growth. It was especially in India, we had the retail boom, but all over the globe also, if you see the economies, they were growing really fast. Okay. Now what happens is when you have an uncontrolled growth, okay, something probably you had to manage a little bit better, okay, and maybe it didn't get managed, and that's why we got into a situation like that, okay, and then we had the new regulatory guidelines. We had the entire Basel III Accord coming in. Okay, this is why I like the 2008. Okay, because that was a crisis, and why I'm talking about it right now, because we got into, I won't say exactly second, but probably the second largest, similar kind of a crisis during the pandemic time. Okay, crisis always teaches a risk person. Okay, so again, my learnings here, and which were elaborated well by our panelists here. So yes, digital was one big change that happened. We all were forced to work from home, etc. We went digital. Amazing benefits coming out of it. But we have to now learn the new ropes. And that is why you see the whole lot of gamut of new technology, new regulatory requirements, etc. Okay. Now I'm also stepping back a bit of on the just pre-crisis, actually pre-pandemic. We had the regulator ask, it's the first time for the NBFCs they mandated the role of CRO, the Chief Risk Officer. Okay, again, this I think is a big step. And again, this is coming from the regulator. And why? NBFCs today have become so big in the system, they pose a systemic risk. Right? What happened in 2008 was banks had become so big, and probably what they were doing was not enough regulated, and so there were a set of norms. In 2019, when the role of CRO was mandated, in a way, regulator is saying that give the same kind of significance to the NBFCs. They are probably also posing a similar kind of challenge to the system. Okay, and thus the larger NBFCs, they were supposed to be having the CRO. Okay, so that's another big change according to me from the CRO's role point of view. The third change, which I see as a very big change, and it's again coming from the regulatory angle, is the Basel III guidelines applicable now to larger NBFCs. Okay, according to me, it's a very big change. I'm again going to link it to 2008 because that's the time when it came into being. And what it requires is that whatever risks that you're taking, be it in whichever area you're in, you're taking credit risk, you're taking operational risk, you're taking market risk, whichever risk you're taking, tie it back to your capital adequacy. Okay, that's again now it's extended to the NBFCs. Okay, I see it as another third big change for the role of CRO or of a role of risk management in the NBFC area. The fourth change that I would like to talk about is when you have n number of these changes happening in terms of compliance, etc., even technology. The role of risk takes a very, very critical seat, according to me. You have to lead from the front. You are no more, as a risk person, you are no more just a governor or from the governance point of view, you're no more just doing a governance role, you're no more doing just the analytical role. You are also doing a front role wherein you have to guide business, you have to guide the organization that this is your risk appetite. Okay, have your business strategy aligned to it. So, and how do you do that? You can't just say that follow the guidelines, follow the compliance. You have to give a way out, and this is what I see is another big change. We are moving from merely from a watchdog point of view. From there we are moving actually to an enabler. We are actually helping and facilitating the business.
Yeah.
So I think that's for mine.
Thank you. Deepak, would you like to add anything to what other speakers covered already with regards to the challenges and how did you cope up with that in your particular business?
Yeah, so one of the risks of being the last one to speak is everybody's spoken what you've thought of, right?
Yeah.
So yes, the life of a CRO has changed a lot over a period of time. And so at the very beginning, it started and ended with credit risk. Today's people spoke about the intensifying regulatory regime. So it's now moved to regulations. You have technology coming in. So there's cyber security risk. There's data security risk that has come in. But there's one thing in the life of a chief risk officer that hasn't changed. Okay, and it is this one question that every board member, director, any of the conferences that you speak at ask you. What keeps you awake at night? And that hasn't changed at all. So really, my sympathies with all the risk managers, including the ones on this dais. We've had very little sleep in our careers as risk managers.
Interesting. No, I think, I mean, just to address, maybe we can just go now from left to right. So I think this brings me to this, very topical as of now across the financial services industry. If you look at, yeah. So I'm saying, if you look at the whole, the expectation of the customers are rising, right? The customers are looking for the instant gratification. The whole e-commerce platforms, your Amazon of the world, they have completely changed the whole expectations of the customers. And they're looking for instant solution or instant outcome from whatever they're buying. So no, it could be, it's just not buying, things, like you're buying on the Amazon, but financial services, the products cannot be seen. There are contracts, your insurance or, your NBFC loans, etc. They just want instant gratification. So I think the question is, you will have to really align yourself to probably perhaps be close to what the customer is expecting. But then at the same time, you will face challenges because it's not something you can sell it. It's a cost price and you buy it, make profit, but there is a lot of underwriting and other risks that you have to take.
Leaders, as much as we'd love for you to continue, you know that for a fact, we're just hard pressed on time. And so we will have to wrap up this conversation. Thank you so much, sir. Thank you so much, leaders. Thank you so much. All right, ladies and gentlemen, a big round of applause for our amazing panelists. And you know what, as much as I love anchoring, the only part I hate is doing this because the leaders are talking, they're sharing their words of wisdom, but time is something that we have to be extremely cognizant of. I would request Mr. Babu Nair, the MD of Banking Frontiers, to kindly present our amazing panelists with a token of our appreciation. And for that, we would request Deepika.
Thanks.
Ladies and gentlemen, if there is anybody who's been instructing me all day, is Deepika. So, Deepika, yes. So, audience members, while this takes place, just letting you know, there's a very interesting segment starring Mr. Babu Nair himself and, wow, the founder himself of Simple CRM. So, yes.
Thank you so much.
No, thank you.
Thank you so much for being a part of the panel.
Mr. Indranil.
Oh, wow.
Oh, wow. I see that Mr. Indranil is all set. So another 10 seconds. And thank you so much, leaders. Thank you so much. An absolute pleasure to have all of you with us. Thank you. Thank you, ma'am. Thank you, ma'am. We request Babu sir to kindly stay on stage with us. Okay. And to accompany Mr. Babu Nair, we have none other than Mr. Indranil Phuke, founder Simple CRM, to kindly come on in, and these two industry giants will be discussing on new landscape, new CRM. On stage, of course, is Mr. Babu Nair, the MD of Banking Frontiers. If there is anybody who shared as much screen time as me, is Mr. Babu Nair. So, sir, of course, the trend has
You
to
are
come.
competing with me.
No, I am your
I am
co-host.
competing with you, rather.
I am your co-host, sir. I am your co-host, sir. Of course,
See,
that
you
trend.
have an advantage. You are so presentable. Nobody would like to see you.
Nobody's
So
agreed to that.
I stand no chance against you. So I only have to talk.
Sir, if
I
I
have
have
no
to
other thing.
compete with you on beauty, then what is this? What is the use of it? Sir, we have to continue with the trend.
Great.
Small question, awaiting a very small answer from the two of you. Thinking back to all the beautiful places that you've visited, starting with Mr. Phuke. Mr. Phuke, what is that one landscape that you suggest everybody sees? Just the name of that landscape.
So for me, that would be Pamukkale in Turkey.
Wow.
Yeah.
Wow.
It's all ice and blue waters, so
Ve-
it
fa-
leaves impact on you.
Fancy, fancy. Mr. Nair, what would your answer be?
Landscape.
Yes.
I love the landscape of Kashmir. That is one of the best place. And the next best landscape I have seen is a place called as Annecy in France. If anybody ever gets to go to Europe, you should go to that village called as Annecy. It is a lovely landscape.
These are the landscapes of the riches, but one day, sir, I will one day.
You should.
Fantastic, fantastic leader. Stage is all yours. Thank you so much.
Absolutely.
Thank you.
Thank you so much. So let us just get into this interesting conversation with Indranil. We have a very quick one where we are going to talk about how the experience has been changing in the NBFC sector. So joining me is Mr. Indranil, who is the CEO of Simple CRM, and he is going to share a lot of interesting things related to experiences. So Indranil, there are innumerable areas where the financial sector has engaged and tried to transform the experiences of the people. Uh, I don't think CRM is something which is a new thing for any of the NBFCs and all today. And most of them have got the best of the CRM solutions in the country. But what is that lacuna in the area of transformation of experience? And what are people missing today based on whatever you have been engaging with the audiences? And how do you think the organizations can actually achieve this?
First of all, it's great to be here. Thank you for inviting. So if you look at this, in the last few years, the customers have significantly accelerated their digital behavior. And if you look at a lot of the published case studies, research papers, you will see that about 73% of the customers or consumers prefer that their service providers offer them personalized journeys. About 53% of the consumers are not satisfied with the digital solutions provided by their service providers. About 40% of the consumers are admitting that they are spending more time now on online rather as compared to what they were doing before. So be it buying something online or interacting with your financial services providers, the consumers today expect that the brands be digitally present. They expect to get uniform and superior customer experience across all the channels. They expect personalization, speed of delivery, and also a certain human tone of interaction. Now, if you look at this, it is very important for the customer engagement platforms to provide an end-to-end customer experience from your marketing to sales and onboarding to account management to retention, servicing and retention. So that is where, as per me, the gap is. We at Simple CRM, we are actually, it's a customer engagement platform. It's more than a CRM solution, which digitizes, decodes, and delivers on all the customer journeys.
Interesting. So when you talk about journey, CRM is all about data, or any kind of experience is all about data. Okay, and customer insights and data has expanded vastly, and it holds deep inside. Have you find a simple way to help these organizations to discover insights out of the data that they have been getting? and how you have been working with NBFCs in this area?
That's a great question. So if you look at this, today, data analytics and machine learning is almost becoming ubiquitous in all the sectors, right? So machine learning is now, it's based on data. And CRM by its very definition is a repository of customer data. So if you look at it, machine learning and CRM is actually a perfect match. So we realized this a couple of years ago, and we have incorporated or kind of baked AI into our solution a couple of years ago. So to give you an example, for some of the insurance providers, we have deployed customer churn predictors. So where we have trained machine learning models on their policy and customer data, and these models are able to predict when which policies are at a higher risk of lapsation. And this information is crucial for these insurers to be able to prevent lapsation and improve the premium paying period of the customer. We are also working with NBFCs and some of the banks as well for deploying your product recommendation engines, where the machine learning models are trained on the existing customer demographic data, psychographic data, the buying behavior, and it's able to identify cross-sell and upsell opportunities for these NBFCs. We have also deployed certain sentiment analyzers for our NBFC and banking customers, where these NLP models are capturing information, capturing customer interactions for a wide variety of channels, and try to identify the customer sentiment, try to calculate the CSAT score, and in some cases also try to identify the buying intent of the customers.
Interesting. So one of the most interesting things that we have been seeing is a heavy reliance on videos and voice analytics videos. These are some of the new trends of thing in the growing world of mobile. Okay. Along with this, there are a lot of other interesting features that are also being added. How are you working in around all these areas, the new features as well as the video and voice analytics area?
So yeah, you're absolutely right. The use of video conferencing has skyrocketed in the last couple of years, and companies like Zoom are reporting over 300% increase in the revenue in this period, right? So let me take an example. So we have a customer who is one of the largest investment and insurance broking company in India. They engage about 10,000 prospects through Zoom webinars every month. There we have deployed a solution where our solution actually extracts the Zoom data. Okay, it identifies the prospects, it identifies where they are from. It also identifies the sentiment and the buying intent and generates qualified leads. So for example, this model would create, okay, there's one individual from Jaipur who is looking for maybe retirement investment plan. And these qualified leads are then pushed through a workflow where they are assigned to the relevant salespeople. So right from the moment the Zoom webinar ends to dropping well-qualified leads into the buckets of salespeople, that entire thing takes 2 to 3 minutes. Another example would be, it's kind of I think many of the people here would know about it, is liveness detection. It is one of the models that we have deployed for one of banking customers in Middle East, where the solution actually extracts the video data coming from the customer mobile app. It analyzes the video, it detects whether eye movement or lip movement, and based on that, there's a liveness detection. It is also able to predict the basic emotions based on the video with a fair degree of accuracy.
Interesting. So one of the important thing is data is definitely the king, whether it be voice data, whether it be sound data, or whether it be digital data, right? Another interesting thing, if you note, is the kind of regulations that are coming in, with the governments looking into areas like Privacy Act, GDPR, and even some of this will definitely come to India, and this account aggregator thing will also come into India in a big way. So in all this midst of regulations, organizations are required to comply. Now, do you think that CRM can actually look into the compliance part of it, or the compliance is best left to the core banking or the core softwares that the organization use?
Well, if you look at well-implemented CRM solution in the financial services sector, is typically integrated with and pulls data from 5 to 10 core systems. And CRM also captures a lot of personally identifiable data of the customers through its sales, marketing, and service operations. So yes, CRM certainly comes under the purview of data regulation and compliance. And CRM solutions need to ensure the data is secure both in transit and in storage. So yeah, so I'm to give an example here. For example, we offer our solutions on all deployment options. Okay, we give complete data residency choice to our customers. So some of the customers are using our solution on our cloud. Okay, some of the customers are using our solutions on their own private cloud, which could be on AWS, Azure, Google Cloud, or whatever. Some of the customers are also deploying our solutions on premise. And we give them option to start with any of the data deployment options and then change their strategy at any point of time, and we support that.
Wonderful. And before we end this conversation, technology is changing rapidly, and today is a age where you are pivoting with a lot of other technologies also. So with AI, with ML, whatever it is. How have you been working at pivoting with certain technologies that are there in the market? What combinations do you think you have been working on?
Sure. I mean, the technology itself evolves in response to the evolving business needs. So from our perspective, if you look at marketing automation 4 to 5 years ago, it used to mean running email campaigns. But today, it means running social media campaigns across emails, your WhatsApp, your Facebook, Instagram, and so on and so forth. It also means tracking your customers right from the moment they land on your website as an unknown visitor, and track them, collect information about them, and follow up with them through nurture campaigns. On the sales automation side, it used to mean a simple lead management. But today you have product recommendation engines which identify cross-sell and upsell opportunities for you. On the service automation side, it used to mean, let's say, call center CRMs, right? But today you have this omni-channel customer service automation solutions, which capture or engage the customers across a variety of channels and serve the customers and provide a consistent experience to the customers across all the channels. So as per the business needs, the technology also is evolving.
Wonderful. And we are dot on time.
Oh.
The beauty is Nikita is happy. So thank you so much, Indranil. I think we have had a nice conversation in that rapid fire round, whatever we could have. And we could also achieve a lot of interesting insights on how the CRM is transforming. So thank you very much.
Thank you, Babu.
Thank you. And we would request Mr. Nair to present Mr. Indranil with a token of our appreciation. Ladies and gentlemen, a big round of applause, especially team Simple CRM standing right here. Yes. Thank you so much. Thank you so much, Mr. Indranil. And thank you, sir, Babu sir. Okay, from one exciting session to the other, ladies and gentlemen, we move on to application security and availability is the name of the session. And we have Mr. Sanjeev Kumar Chauhan, the technical director of Array Networks, here with all of us. Chauhan sir, I sense so much fear. So since morning, RA Networks, small question, of course, sir. RA Networks has been super kind in giving caricatures to everyone. That seems like a hidden talent. So what is that one hidden talent that Mr. Sanjeev Kumar Chauhan has? Just like your amazing company. Just one hidden talent, sir.
Playing cricket, being technical.
Oh, playing cricket. Wow, sir. By the way, Simple CRM team, that's a certified umpire right there, sir. Please plays cricket. One
Welcome.
Conversation supposed to happen. Fantastic, Chauhan sir. Thank you so much for sharing that. The stage is all yours, sir. Thank you.
Good evening. Just before starting, do you remember when you paid cash to your taxi drivers or in the shopping? I think hardly, very long. Generally, we are paying either with the different mobile apps like Google Pay, Paytm, UPI, everything. Even don't have the cash in the wallets these days. Sometimes face the very hard times. You don't have the cash with you, right? Because of that, even today UPI is cost around 2,000 transactions per second. That means it's digital transaction is happening, and because of that, real payment transactions in India, we are leading worldwide, around 48 million, whereas the number 2 is China, is around 18 million. And how do you achieve that? You need a very, very robust infrastructure to achieve this. And how you can do that? The challenges, because because when you host your applications in any data center, that these are the challenges comes. It has to be available 24/7, 365 days. Because if I am doing a digital transaction, I cannot afford any downtime, because my transaction will break, my financial problems will start, it is not completed. Things, so whatever the things I'm buying at the shop or I'm paying to the taxi driver will not be completed, and it will create a lot of problems. And then means next time you will go to cash back to pay in the cash. Then the security, definitely. The security is also the next very important aspect, because it has to be very secure, and the performance and the scalability. So if you look at the security wise, this is a little bit more technical session compared to the what I heard before. That is more financial things, like how you do the financial platforms are working. This is the backend. We are in the backend. How we make the things happen to the end users or consumers. So these are the some kind of a very top challenges or top vulnerabilities are there in any application, like cross-site scripting, SQL injection. So how you can handle that? So this is one of the example how the hackers with a simple command can extract your information from any secure application. This is called SQL injection. So generally these days, these are the 3-tier architectures. You are giving the information like some kind of application form to fill up your credentials. That means username and the password. Everybody, when you log in into your banking sites, you give the username and the password to any site these days, right? If I putting instead of here, if I put the simple SQL query instead of your name, like as Sanjeev Chauhan or something, I just put a one statement here, or 1 is equal to 1. The magic will happen. So it will go, this query will go to the database, your database in the backend, and it will fetch all your records, all your financial transactions, whatever the customer details or the financial details you have in your database, and it can go up to the attackers. So this is a very simple command. Instead of giving my name, I will just put some query here, and it will be executed in a database, and it can bring you the end results for you. So how you can avoid that? So for that, there are the certain technologies are available. One is called web application firewall. So that means all your malicious request will be stopped here directly at the web application firewall, and then only the good request will be processed by the application. So this looks very simple, but in the backend it is very, very complicated, or very comprehensive approach are here. So you have the multi defense systems you will take care of at the network layer, then the application layer, then you do a lot of application verifications, then how is the payloads is happening, and how the response is coming, and based on that you will decide, or this particular technology will decide, okay, this request is legitimate request, the response is legitimate response, and then it can be transferred to the end user. Second is the DDoS attack. I think some of you heard about that. So how I can bring down your applications, whatever the infrastructure you have. So instead of sending small legitimate queries to your applications, if everybody trying to come to the same application at the same time at 10 a.m. in the morning, so each application has a certain limitations in terms of the how many requests you can process, or how many transactions you can process. So if let's say my application capacity is, let's say, 1,000 requests I can handle at any time. So if I can, all attackers can just do the programming in such a way that all over the world I put a request in such a way that all the requests are coming to this particular application. So that means you will see immediately a lot of requests are coming to your website, and then your websites will be down. It will not be work for your legitimate users. So how you can protect that? So these are the certain challenges, but there are the technologies how you can handle that. So generally how you will handle this? So you will, instead of going to the application directly, you can go to the clouds here, to the cloud providers instead of going directly. So we can put the security in place. That means at the cloud, I will clean up completely this particular attack and will give the legitimate request to the end users also. So next thing is, I think everybody talk here, the data security, the transaction security, how it happens. So there is a protocol, protocol used is the HTTPS. So whenever you go to any banking sites or any secure sites, generally you have to write HTTPS : and then your banking site, because it has to be secure. When I say S means it's a secure. So there is a protocol behind. We call this SSL encryption. So this means I have to encrypt the data from the client till your servers. It has to be encrypted. If even somebody attacker capture that transactions in between, he cannot find out the information under this session. So that means this is completely secure. Even if you get hold of this information, you cannot do anything unless and until you have the key to decode that, to open that particular packet. So this is a lot of processing you required at the application level, at the network level, and to enhance that capacity, you need some kind of a SSL interceptors are there. So that means you can do better SSL processing for them, and you can do the more processing on that. So if you look at the firewall, these days firewall, if you do this SSL transactions by firewall and you try to decrypt this session by SSL by the firewall, generally you need a lot of processing for that, and it will not help that even your CPU utilization will go high. So there are the certain dedicated technologies is required to process this particular traffic, and you can put the security aspects of that particular traffic with this one. So that means by putting this SSL interceptors, we can decrypt this traffic, and then we can do the more security analysis on that particular transaction, whether it is secure or whether it is legitimate. There is no attack information is there, and later we can give it to the applications, and then we'll give it to the client. The next thing is very important requirements has come in during the pandemic happened. So nobody was able to go to the office, like go to the data centers or go to the enterprise network to your offices. So what was the option? You have to work from home, right? But it is so critical networks you have to access from your home. So you cannot access through internet, right? But still you have to access. So it has to be very secure. So this is called the more zero-day architecture. So that means by sitting at home, I can access my internal application, my secure applications, which is in the data center, to do the my operational works here. So just you open a secure connections from your home, or if you are traveling somewhere, you are in hotel, then just you open a session, open a tunnel from here, and then goes to your internal applications, and then you do your like sitting at your office. So this is the one of the very critical technologies, and it helps a lot to the organizations during the pandemic thing. The next thing is, this is from the security perspective. Next thing is the availability is the one of the challenge also, right? We discussed the 4 challenges in the beginning: security, availability, performance, and scalability. So how it will happen? So let's say if you have the multiple ISPs, because you cannot have the single point of failure in anywhere. So instead of single ISP, I have to connect the multiple ISPs from your data centers, and then you have to make sure that these 2 different ISPs are works in the active, or that means if any ISP went down or is going down, then immediately it will transfer to the second ISP. So that is, there is no transaction loss to the end users. There is no downtime to the application, or there is no downtime to the end users as well. Similarly, this is for the ISP side, where you connect your data centers, where you connect the applications to the outside world. Similarly, you cannot rely on the one application servers only, because for that you don't want single point of failure. So you generally plan for the multiple servers there, multiple application servers. And so by putting this complete technology like application load balancers, you can create some kind of a virtual IP, and you can avoid any single point of failures, and then you can scale very well. And that's why you can support so many transactions what UPI is doing, because we are associated with NPCI, at least with the UPI from very beginning. So we started a small device. It can handle only, let's say, maybe 100 transactions per second. and we slowly they moved the transaction because the transaction has increased, and slowly we have to keep on upgrading my devices also. So we started with a small model, then we went to the medium, and then today we are putting there the highest model what we have to handle their UPI traffic of like 1 billion transactions they are talking about yearly, this one. Second thing is, to avoid one more single point of failure is, let's say you create your data centers in Mumbai. What happened is something happened in the Mumbai, like power outage, some natural calamities happen, some terrorist activities might happen, and then your data center is completely down. So what you will do? You want to switch over to the other side, like maybe Chennai to another geographical location. So by putting this server load balancer or global server load balancer, we do the migration or switch over from one location to the another geographical location. Second is the optimization. Everybody talk here a lot of data about a lot of data. So you are creating a lot of data in one of the data centers, but how I can replicate this data to the DR in the real time? So these are the one of the WAN optimization device. Then it makes you that both data centers are real time updated the information between the two data centers there. And second is everybody is talking about the virtualization. So this particular platforms helps you to do the consolidations of the solutions there, and it helps you to create the multiple network functions in the data center so that you can work out this. So this is just to summarize what I just discussed. So these are the multiple technologies provided by the array networks to help you, the financial sectors, especially to avoid all challenges there, like link load balancing, application load balancing, global server load balancing, web application firewall, DDoS, SSL VPN, SSL interceptor, and the WAN optimization helps you to build up your data center or your financial services in such a way that you can address the huge requirements of the customers. You can provide the high availability, security, performance, and things. Thank you.
Can you hear me? Yes. Fantastic, Chauhan sir. I mean, hidden talent is cricket, and one of the talents is giving amazing presentations and sessions. An absolute privilege to have you with us. Ladies and gentlemen, a big round of applause for Mr. Sanjeev Kumar Chauhan, the Technical Director, Array Networks. Thank you, sir. Thank you so much. Thank you. All right. Oh. This seems to be. We request to Mr. Babu Nair, the MD of Banking Frontiers, to present Mr. Chauhan with a token of our appreciation. Thank you, sir. And thank you, Babu, sir. So, moving on to our next session. For our next session, we have Mr. Gautam Shankar, the General Manager, Sales, Civil CRM, Sales. Wow. Mr. Gautam, what is the barter that is going on? No idea. So yes, by the way, ladies and gentlemen, just letting you know, right before the session, if there is anybody who walked up to me and randomly sprinkled facts about themselves and their lives, is Mr. Shankar. Randomly threw in, I speak Mandarin, randomly threw in a couple more skills, and that is what makes you a great leader. So the question is, Mr. Gautam Shankar, that is according to me, what makes you a great sales leader?
Great sales leader. Thank
Yes.
you. Actually, I take that as a big compliment.
Welcome. Welcome.
I think sales is about representing yourself more than anything else. I think 50% of the work is done when you represent yourself and be proud of who you are, and just rest is trust in the process.
Oh my God. Wow. Mr. Shankar kept asking Nikita, what will you ask me? And I did not give out the question, but fantastic, fantastic.
Thank you for catching me off guard.
Thank you so much, Mr. Gautam. Stage is all yours. Thank you so much.
Thank you and good afternoon, everybody. Namaste. Wow, where do I begin? I think, so here is we at Simple CRM. Firstly, I'm deeply humbled to share the stage with you guys here. Among even the Honorable Union Minister of Finance, Dr. Bhagwat Karad, as well as the guest of honor, and all the myriad of banking and non-banking experience, the wealth of experience of people here who have complete experience in technology as well as in financial services. It's a proud moment for me to stand here and represent Simple CRM, right? So today, customers, yeah, thank you. All right, I was just wondering what I was missing. All right, so today the customers are digitally native and they have a big expectation when there is an instant gratification towards their products and services that they consume, and also to the financial services that they look to interact with the brand without actually going into visiting the branch. So I'm just gonna go in here, right? And what we want from our customers today is that what customers want from today is that usually they would, traditionally it was accepted that they would, just dial in a toll-free number and expect them to kind of respond with their service request. But however, right now they expect the service providers to be a lot more responsive in multi-platforms, such as your instant messaging, social media, and as well as on the traditional voice and email, right? And great. Okay, so great power comes in great responsibility in providing responsiveness and hyper-personalization, and also the speed of delivery. And more than anything else, I think you would understand that hyper-personalization would also expect that there's a human on the other side of that voice of interaction, and hence, they would expect something more human, right? So here we have is an AI-powered end-to-end customer engagement platform that takes care of the entire interaction and touch points of how a customer engages with the particular company. So right from prospect identification to lead qualification, from customer and digital customer onboarding to service management, and as well as to loyalty programs as well. Right? Meet Nayan Rana. He is one of your regular customers who have been into the business and who's been a banking partner for the longest time. He has, his family that is also investing, also planning retirement planning, as well as various other banking opportunities. And he would have certain cases with him. He would have, he's turning 37 years old. There's an entire snapshot of this particular person, Nayan Rana, in one single platform. So how does an agent actually be able to serve a kind of person like this, right? Here you can also see that the agent is also able to interact with him on his preferred choice platform, which is on WhatsApp. And right on top, you would see the toggle where he would be able to interact, and the agent is able to quickly generate leads and cases and opportunities for Nayan Rana based on his interaction. And right here, you would see that in one single snapshot, the RM is able to address in his platform of choice, where he'll be able to address Nayan Rana's questions and queries, right? And here we have also a telephony integration where you would be able to get, or pick up a call or make an outbound call. And from there, there's a single snapshot that gets appeared based on his registered email or phone number. And through his dispositions of Nayan Rana, an RM agent would be able to provide customized service to Nayan Rana, and also AI suggestions, such as where they would be able to recommend what products are tuned for his interest. So let us show you one of our customers, which is a large insurance broker, where they would use Zoom to engage around 10,000 prospects into in their Zoom webinar. And what we have done is that we have been able to track the entire lead from all the attendees and be able to integrate it with the Zoom platform and have an NLP intent analyzer, and as well as a sentiment analyzer, for be able to track the entire attendance record, and as well as be able to convert their particular lead into a customer, right? So there have been a 30% reduction to lead to cash cycle in the same. And another customer as such, where we have enhanced their customer service offering, is when we are able to automate their 300 plus service and onboarding workflows, and thus also been able to improve the efficiency of the agents and reduce their customer service TAT by 67%. So partners is also another really integral part of a financial services industry. What we have done for this certain bank, where they have put partners being a very pivotal role that play, such as your DSA and BSAs, where the solution has helped in onboarding, lead management, and also converting those leads into prospect customers, and also have a transparency in their commission calculators. And this helped onboarding time by 60%, and also disrupt the market with their partners ecosystem. So here we are with Simple CRM's deployment flexibility. This low-code platform can be deployed and is also platform agnostic. So it can be deployed in AWS, on various other SaaS platforms, AWS, Azure, Google Cloud, and also on your business private cloud, as well as on premise. So especially when data residency, data integrity, and as well as integration to legacy platforms. Here is how we can integrate, and various other call center integrations as well as social media integrations that Simple CRM is capable to. Some of our customers here, I'd like to also point out that this type of solution, an articulated solution like this, where we have addressed top skills that's required in the fintech industry. Sometimes it primarily dwells in the operational compliance, automating the operational compliance, also the data integrity, also some of the other customer engagement strategies using NLP. And finally, to summarize, I think the NBFC folks, I'd like to thank that we appreciate and commend the kind of efforts you take to automate and provide customized solutions to your customers. And here are some of our AI-powered solutions that we take, right from digital marketing to sales automation, eKYC and onboarding, service automation, and also multilingual and multi-channel chatbots. And that's about it. Thank you so much for your time and patience today. Andy?
Ahead of time. So that is something that is really lovely, and you helped us to go ahead of the time. So a special gift to you for that.
Thank you so much. Thank you.
Thank you so much.
I appreciate it. Thanks.
And a big round of applause to Mr. Babu Nair. Mr. Shankar, great presentation. Thank you so much. And if Mr. Nair remembers you, you rest assured next session, slot is fixed. Great, great. Thank you so much. Ladies and gentlemen, just a bit of operational work happening. Fantastic. Okay, all right. So we are on to the, not only is it the last panel discussion, this also happens to be the last session of the evening before the reason why we are all gathered here today. That is the award. Oh, there's a huge pressure on all our panelists, but not a problem. We're sure they're going to kill it, absolutely kill it. Fantastic. So, ladies and gentlemen, on to our last segment. It's all about crystal ball gazing and imaginative peek into the vision for the future. the CEO panel. Oh, okay, that's the CEO panel. I mean, the creme de la creme, the absolute best. We've got a moderator, Mr. Manoj Agarwal, Group Editor, Banking Frontiers, to kindly come on up. Sir, we start off with the moderator. So because this is the last session, we will also do something very, very different. Sir, one cheer for our audience members. So you have to prepare, panelists. Be ready to prepare something. Next, thank you, sir. Thank you so much. But thoda yes, ye aisa we can add in. Let's see how varied everybody is. Our next leader is Mr. Rachit Chawla, MD and CEO of Fenway Capital FSC. Mr. Chawla. Mr. Chawla, something for the audience members. Fantastic, fantastic. Thank you so much. Our next leader is Mr. Sanjeev Kumar, co-founder and CEO of Spice Money. Mr. Kumar, you've got 20 more seconds to come up with something. Great. Our next leader is Mr. Manoj Ravi, CEO of KLM Exiva Finvest. Mr. Ravi, all set? Oh, wow. Enthusiasm, sir. What will you do for our audience members? Something, sir. Oh, great, great. Thank you. And of course, our leader, Mr. Vivek Tiku, co-founder of Sing HR. Vivek, sir, what would it be? That's how you stand out. Fantastic. Gentlemen, stage is all yours. Thank you so much.
Thank you so much. Welcome, panelists. And good afternoon. Should I say good morning, audience? Taking a clue from Vivek. We're going to have a half an hour discussion today on the future, on the vision, on the critical issues, on the perspectives that leaders think about in terms of planning or shaping a vision for the future. And we have some very eminent people on the dais with us. So let's jump into the discussion. And towards the end, I'd like to open up the floor for a Q&A with our fellow NBFCs here in the room. So, gentlemen, let me start with. Let's see. Let me start with Manoj. Manoj, we've seen in the last 6 to 12 months that the regulators have been very active. They've been active in two ways: in promoting opportunities for NBFCs to broaden out, to reach out, to partner, and all that. Also, clamping down on certain practices, on certain sectors. For example, the most well-known is the cryptocurrency segment, where or BNPL, if you take an example. So, given the fact that the regulator is, if I may use the word, hyperactive in the financial space, which was not the case earlier. How do you see an NBFC or the NBFC sector as a whole creating some kind of vision for itself? Not just by saying we'll grow 20% every year, but what shape will that growth be? You want to share your perspective on that?
Sure, Mr. Manoj. So let me just introduce myself, Manoj Ravi, CEO KLM Exiva. I'll just give you a perspective about our business model as well. So we are into gold loans. We are basically from Kerala, predominantly there in southern states, Tamil Nadu, Karnataka, Andhra, Telangana, and currently we have entered into Maharashtra as well. So this is a real conventional model which has evolved from down south. Mostly you might have seen many of the big daddies in the gold loan. And about 50 years of business saga, which they have actually, given to many, and many NBFCs are following the same pathway. Regulators, to an extent, so we are very fortunate that many regulations from RBI into this last 10 years have given a lot of helping hands and life for gold loan NBFCs, I'm saying. So the point which I'm making is, there were no much of regulations in the LTV aspects, loan to value aspects earlier, and about 7-8 years before they have stipulated to 75%, wherein the regulation has given a lot of impetus towards the growth saga for all the NBFCs, including big gold loan NBFCs and smaller. So we are a medium level NBFC, 1400 crores of AUM we have, and about 20 years of business experience. Now there are a lot of fintech companies evolving, and so they are also having different models. Now RBI has regulated much on that, and they are also coming under this umbrella of RBI restrictions. Now what we see is, even though we are having a lot of technologically driven aspects there in the gold loan space, our conventional model is working very well there in gold loan business then for us. So that so we need to really emulate the aspects, and we do have our own methods and methodologies to cater to such kind of old methodologies. So mostly we are into rural space, and the people, the customer base which we have, it is the common people, those who have small amount of gold ornaments, they will come to us, and for an immediate purpose they take about 50,000, 25,000 rupees from it. It's small and micro loans. So they need to keep their gold ornaments safe there. So the regulations which RBI has come out with right now was very much good for us, and it will give a lot of impetus for the next 3 to 5 years more. That's what I'm saying.
Do you expect the regulators to continue
with
the same
that kind
supporting,
of proactive
supporting role?
supportive for such kind of
Okay, fantastic. Let me come to Sanjeev. Sanjeev, you can begin with giving your introduction. And then the question to you is that, given again this regulatory scenario, that the regulator is becoming more increasingly active, and then given the fact that your business is much more into the rural sector, okay, and rural sector is where there is maximum number of unserved and underserved customers. And given the fact that for many rural customers, it's not just financial service they need, because if they have to travel 20 kilometers to visit a branch, that's a bigger pain than giving a photocopy of your Aadhaar card, for example, or filling in a form. So given the non-financial services aspect, which you can tell us whether you think that comes under regulation or not, whether that should come under regulation or not, because for NBFCs, it's a bundle of financial and non-financial services. So keeping this in mind and keeping the rural landscape, how do you envision the sector shaping up?
Thanks, Manoj. So for everyone in the room, let me just introduce Spice Money and maybe then come to answer your question, Manoj. We are a rural fintech platform. We serve, we are about 1 million entrepreneurs across 18,000 pin codes. And what we do is we serve about 2.5 crore consumers every month on our platform. We do about $2 billion throughput every month. What are we trying to solve? We're trying to solve the problem of access. So I'm coming to what you were saying is, if you go to rural India and we're talking of genuinely, you're talking of blocks and villages, the problem statement is lack of access.
Mm-hmm.
A rural consumer has lack of access to a banking branch. He has lack of access to a lot of services, including credit, and credit is another big thing. That is something that we are trying to solve today. One. Second, let me add, I think when you talk of regulations, the objective of the regulator is very different. I think the objective of the regulator is not to degrow business. I think it's about protecting consumer interest.
Okay.
Right? Keeping that at the center is all where all regulations come emanate, and I don't think that has ever changed and should change. One. Having said that, when you talk of the future of this business in rural, I firmly believe that the opportunity, I mean, all of us know the opportunity. I think question is, what is it that we can enable toward? And when you talk of credit, there are two problem statements. One is you need capital, because rural India is deprived of capital. Second is collections. And credit cannot work without collections. We try to solve that problem. We're building the collection network today wherein a consumer can come to our outlet at every village and deposit the money. Now that kind of infrastructure, so come back to the point of till the time you don't have infrastructure which can enable access from a consumer and a product manufacturer, you'll not be able to increase the business. And I think that is exactly what we're trying to do. So that is what I would say is the vision, is the future for credit in rural India.
So by collecting, are you talking of physical and digital opportunities?
Yes.
And when you talk of vision from 18,000 pin codes, where do you want to go?
So as of now, we cover 2 lakh villages.
Okay.
And we want to go deeper into those 2 lakh villages and come to about the 6 lakh villages. In the next 3 years, we will cover
6 lakhs is the entire country.
That is the segment that we'll operate in. That's the 80 crore of Indian population, which is deprived and has lack of access to every service, including financial services.
Okay. Rachit, if I may come to you, NBFC is a new concept in the country. For all these hundreds of years, we had banks, and banks have established a brand for themselves. Banks have established an identity for themselves. Okay. How does the NBFC sector compete with bank in terms of brand and identity? Can you share some thoughts on that? And you could perhaps give 2 perspectives. One is a small NBFC and other a larger, because you have these larger NBFCs from the house of Tatas and Birlas and Adanis and whatever else. So how do you see a conglomerate NBFC and a independent NBFC, the brand building opportunities for them?
Sure. Thanks, Manoj. Very relevant question. Before I get onto the question.
And your introduction.
Yeah, my introduction. I'm Rachit Chawla. I'm the founder and CEO of Fintech Financial Services Company. We are a RBI registered NBFC, and we cater to the half of the population that is left after Sanjeev's territory, which is the main metropolitan city. So we are present in all the metropolitan and mainly, some of tier 2. To answer your question, Manoj, there is one clear distinction which the consumers are aware of and how we portray ourselves. A big bank is bound by too many regulations. Generally, they don't listen to the customers. They don't understand the problem that the customer is facing, because there is a complete process-driven systems that they have to follow, due to which the turnaround time is too long. I mean, I'm sure everybody in this room have faced this problem. The bank will lend you money only when you don't need it. But when you are desperately looking to raise money, there is a lot of challenge, and that's where we come into picture. You'll be amazed to know that 70% of the loans that are passed in our NBFC are actually just bridge gap funding. People come to us for 6 months maybe. They then probably take over the loan by a bank. The reason they come to us is because we are able to give them money digitally when they need the most. They are willing to pay us an extra ROI also, because they understand that banks will not come to their rescue at this point in time, but an NBFC will be. So that's the kind of edge that we work around. The good thing is, because a lot of churning happens, we are able to make ground level good relationship with the customers, so that they come back to us again and again. And more churning, Manoj, makes the NBFC more profitable also, even when the ROI is on a higher side than compared to a bank. Because every time the customer takes money from us, there's a processing fees involved. When the customer exits the loan, again when they come back, there's again processing fees involved. So higher churning and lowest turnaround time is the USP. And I think a lot of people have now embraced NBFC. There is no negativity around it. Earlier, people used to feel, I'm very credible, why should I go to NBFC? I should rather go to a bank. It's not the case anymore, because everybody started to understand that you have to get money when you need the most, rather than taking money when the bank is willing to lend.
So in a sense, you're saying that NBFCs that are giving customer an excellent personalized service, that's where the relationship building starts. and that is perhaps more important than the brand identity which an SBI or an ICICI or whatever
Yes,
could be having. So it's a
absolutely.
personal relationship and rapport.
Personal relationship and completely transparent. When I say transparent, we have a proprietary in-house technology wherein the customers can access to all the tools that customers get when they take a loan from any bank. So you have access to your statement of accounts, you have access to whatever you need real time through a mobile app. Now the consumer is also happy because everything is transparent and they don't end up getting what's the correct word, I mean, they don't end up paying us extra. They pay us only
Okay.
that which they are legally bound. And with the regulatory body coming in again and again with all the regulations, I think RBI has done a great job. I mean, people who were not taking care of the regulations are shutting down. There was a big shutdown of mobile apps, the Chinese
Yes.
company that were operating, and that's because the regulators are doing an amazing job, which is giving us the edge to cater to more and more customers.
Correct.
And in fact, right now in my NBFC, there's a lot of co-lending opportunities also we have tied up with. That also gives an edge because bank also understand that they cannot compete when it comes to the turnaround time with the likes of a small NBFC. So that's
Absolutely.
also a USP that we enjoy.
Fantastic. Good. So that gives the clarity to an NBFC that it doesn't necessarily have to be a big brand, but it has to have that engagement and transparency and turnaround time to build, to grow the business. Vivek, coming to you, my first question is, you've heard the NBFCs, and we know what, and you have kind of probably got an idea of the culture that these NBFCs have. And of course, I'm sure you know how banks operate and what kind of culture is there. Do you want to touch upon the cultural aspects of NBFC sector, the people cultural aspects, as compared to an organization where, and just to give you an example, a job in a bank basically was and probably still is considered as, okay, अभी lifetime job मिल गया. अभी I can work here as long as I want till I retire. So given this perspective, then obviously that's not the case in an NBFC, right? It probably is a very competitive environment. How do you see HR strategies, policies, solutions playing out for the NBFC sector in the landscape of banking and insurance?
Thank you.
And your organization's introduction as well.
Good morning, everybody. My name is Vivek Tiktu, co-founder of Zing HR. I think we today are perhaps one of the largest cloud HR SaaS operators in India, and of course we are also in the select global locations in the world. We have I think over 200 customers, very large and very small as well, SMBs and medium enterprises and large enterprises in the SMB sector. Now the point is across the board. I mean, so we'll have customers who are 200,000 employees, and we would have customers who are probably 50 employees and 100. Apart from the NBFC sector, of course, we are in manufacturing, we are in every single sector that we service. But talking about NBFC sector here specifically, I think the point is that the simple value proposition that NBFCs would seek from a people perspective is their rapid ability to be compliant, to be able to scale their businesses in a manner where their fundamental business objectives of CSAT, their fundamental business objectives, also internally backwards of employee satisfaction, alignment with business goals are actually met. So from our perspective, I think we today have an opportunity inside our platform to be able to align these business goals of NBFCs and the changing landscape. See, there is this constant government directives of higher levels of quality and compliances that is coming in. And what that basically means is that you have to be not just agile, but you also have the ability to implement and execute this real time, not just on the business side, but on the people side, internally for the organization. And to make that execution happen, it is really about cultural perseverance of your core values that the NBFC itself stands for. So whatever is the NBFC's value proposition with the key components of speed, agility, the quick turnaround time that the NBFC gives versus the traditional banks for last mile inclusion and stuff like that, whenever the customer needs it in the real time, the fact is it has to be successfully met by people and people teams inside the NBFC, and that's where the critical link today comes. If the NBFCs in the country have to really scale up their business, and NBFCs, as we saw, are doing a great job, NBFC organization structures will have to be able to build those competencies and performance cultures to align that beautifully and achieve those business objectives.
That interesting. Yes, that makes sense. If I may come to our NBFC friends, going ahead with what Vivek just described, let me phrase my question in two parts. One is I'm surely you're onboarding new employees, right? As business grows, as you replace people who are moving out, are you what kind of HR challenges are you finding with new employees? Does it take you 1 month, 3 months, 6 months for them to be stable within the organization? And overall, since we talked around faster response, Vivek talked about faster response. Like earlier, maybe monthly monitoring may have been okay. Is that now weekly or daily or something? You need more closer monitoring to be able to manage business, to manage compliance, to manage risk, those kind of things. So one is new employees, and other is the speed of or the frequency of monitoring. Would you like to comment on these two aspects? Yes, Sanjeev.
So let me start. So fundamentally, I think see the new generation is very different than when we were growing up in our careers.
Okay.
And today, I think the entire HR practices and the way you want to build a culture is very different than what we saw. So the expectations of the people coming on board is also different today. We're living in a global world. We're living in a digital world. We're living in people where they want, at their own terms and conditions, they want to work. It is not the 9 to 5 which is necessary, but you know what? Give me my space. I'll give you the work. So question is, I think the way you, second, apart from professional, it's also emotional well-being, which is also becoming a very, very important factor, right? How do you as an organization, how do you see to be emotionally connected with your employees? So today the expectation of the youngsters, at least the young generation which is walking in, is very different than at least when we walked in. We were looking at stability as one of the big reasons to walk into organizations.
Correct.
I don't think that is what people are looking at. People are looking at the kind of culture. What am I going to learn there? Am I going to enjoy working there? Right? Who all are going to work with me? Right? What is the social connect that this organization brings? So there are a lot of other facets to work which is defining the culture today, which is not what it is. And that's something which is changed, which hence I think the HR process need to be very, very futuristic and more agility than what it was earlier.
Well, do you have to maintain two kinds of process? There might be some employees, might be a good number of employees who are in their 40s, 50s. Their mindsets may not have changed. I'm guessing so.
So let me answer
and
that.
There are those 20-year-old.
Absolutely, Manoj. So answer to that question is, sorry to say, but all the 40 and 50 years have to change.
They have to change.
Yes, there's not an option. You cannot say.
Okay.
So I think the answer to that is you cannot change the young generation. You got to change to that world that is coming in, because that is the future. Right? We cannot say that, you know what, you got to change yourself to suit my practices. I don't think that organization is. So we need to change. The answer to that is we need to change for the future and not them.
And do you other gentlemen kind of agree or have a different opinion?
Yeah, so I totally agree to Sanjeev. So my father is an entrepreneur, and he jokes with me saying, you guys really take good care of your employees. I remember running an organization when they were still working fine without even taking care of them. But nowadays, employees has actually become a family, because we understand that we are spending most of our times in the offices. Like if I spend 9 hours a day, that actually becomes a family. It wasn't the case, when my father was an entrepreneur. It was more of a, they needed the job, they wanted to earn their bread and butter. Whereas right now, it's not about bread and butter. Everybody, I think, has grown to that level wherein it's become more aspirational. They want everything to be super transparent, no bureaucracy, no partialness. They want everything to be documented. They want the culture to be absolutely apt, and work-life balance is must. And we do a lot of exercises, town hall meetings, evaluation grades. And to answer your second question, which you rightly pointed, earlier the reviews used to be quarterly. Now actually it's become weekly.
Quarterly to weekly.
Yeah, so it's become so dynamic, the entire business, that we cannot wait for the quarter to end. We have to take actions every month, and we have to review it every week. It's become
In
like
that
that.
sense, your employees are more demanding than your investors. Investors will wait for a quarter for you to get
But
some report.
if you invest in your employees, in your team, I don't think so you need external investors. So that's where I'm coming from.
Manoj, what
Yeah.
was your take on these points?
Yeah, I completely agree with both of this gentlemen. Where so this should be a mix of that. So the youngsters, those who are coming into our own fold, should learn very fast. On as far as our industry is concerned, it is kind of a technical know-how which people need to impart, and they need to learn to understand how to check the purity of gold, how to do all kinds of activities and the operation side, all those things, which is actually a set parameter where we are teaching, where so new people, they need to learn it very fast. There are a lot of veterans, those who have spent lot more time there in the industry for last 50 years or 40 years, are there in our own fold. So they are the real experienced people, those who can impart this knowledge. So we can't just forget or weed away these kind of people, those who are not that much of tech savvy. But into this particular business, we need that kind of an expertise as well. So
Traditional expertise.
Traditional expertise. So both these millennials as well as
You have to
those
match,
experienced
you have to keep
people,
both of them happy.
yeah, we go with both of these kind of generations to come out with a very good business model. And it is actually very successful in our own business model. We know that so this industry is very huge, and business potential is also very huge. It's $1 trillion worth gold economy is there in India.
$1 trillion.
$1 trillion. So 80% of this is still there in the household. 20% is only monetized. So the opportunity of gold loan business is very huge, and it is only there in mostly there in South and mid India, where we need to go very fast to the other geographies as well. For that matter, these people are very much necessary. Though they are not that much of tech savvy, we will catch hold of them and take people along with us for teaching the next generation as well.
Okay, thank you, thank you,
That
Manu.
way
Let me ask Vivek a follow-up question for a very quick answer. What I'm understanding from them is that earlier an HR software would be deployed to serve the needs of the management. But what I'm getting in essence from them saying is it also needs to serve the employees. It's now more like an interface between the management and the employees. In that sense, how is HR software? Is the software changing, or is it the way you deploy software changes? Can we have a very quick answer?
Probably in less than 2 sentences, I think an HR system today is no longer just a singular system. Multitude of systems, multiple indexes, the human wellness index, the emotional index, the indexes which essentially capture all the data and then convert them into business outcomes called performance and culture outcomes. These today's HR systems are able to do that, and I think we also do that.
So
in
that's
good
a big change.
That's a very, very big change. Absolutely.
Friends, Mr. Babu Nair is on the dais, and I think is pointing out to the fact that the clock is going. The clock is going faster than we are going. So, may I request, with your permission, to close this session at this point of
Thank
time.
you.
Thank you
Have a
all,
good day.
gentlemen,
Thank
very
you
much
so much.
for
Thank
an
you so much.
insightful
We
discussion.
request Mr. Babu. Ladies and gentlemen, a big round of applause for our last session. Before we get on to the reason why we're all gathered here today, we request Mr. Babu Nair to present all our amazing panelists with a token of our appreciation. Mr. Ravi is a little apprehensive about opening the mug right now. Great panelists, absolutely amazing. A group photograph before. Thank you so much, sir. Thank you. We request Mr. Babu Nair and Mr. Manoj Agarwal to kindly stay on stage. Thank you, leaders. Very exciting, a very knowledgeable session indeed. And ladies and gentlemen, the reason why we're all gathered here today, so kindly pick the best seats of whatever is remaining and brace yourselves because we start with the most exciting session of today's evening. All right, so starting off with our very first, the people, Nair sir, I strongly believe these are the people who have to be clapped the loudest because they are the people who had the toughest job, the jury. Big round of applause for our jury members, the people with the toughest task, the leaders with the toughest task, because evaluating geniuses like you is, I mean, how did they do it? We don't even know. So it is time we appreciate all their hard work and patience and geniusness, of course. So, Mr. Manoj Agarwal and Mr. Babu Nair, please, as and when we take your names, leaders kindly come on up and be presented with the token of our appreciation. We're going to start off with Dr. M. Narendra, former MD and CEO, Indian Overseas Bank. Dr. Narendra, can we have you on stage with us? Sir, what an honor to have you. Thank you so much for gracing today's session. Narendra sir, if they clap loud, can they get 1 or 2 more points? Is that a thing? If they were to clap loud now, will you give 2, 3 more points and an award as well? Oh, of course. No cheating. No, but still a big round of applause for the honesty. Done, sir, done. Thank you so much, sir. Thank you. Dr. Narendra, an absolute honor. And for our next jury, we have Mr. Ram Rastogi, the Chairman, Fintech Association of Consumer Empowerment. Mr. Ram Rastogi, come on up. Thank you so much for your time and your efforts, sir. Thank you so much. Ladies and gentlemen, a big round of applause for our amazing jury members. These are the leaders who evaluated painstakingly, all of you. Our next jury member is Gigi Mamen, ED and CEO, Sadhan. Can we have Gigi on stage with us? Not a problem. Thank you. But Gigi sir, just letting you know our deepest appreciation for your insights and for your time. Thank you. Moving on to our next jury is Pushan Mahapatra, Business and Technology Transformation Leader. Okay. All right. Our next jury member is Mr. Sridhar. Oh. We just, sir, it is very important for us to take the names, despite them being there or not. Our next
Mr.
jury
Sridhar
member.
just left. I left him just now.
Thank you, sir. Thank you.
He had a 5:50 flight. That is why we were just putting the motors on onto the session. So sorry for that.
Sir, we let the air hostesses know to convey our regards. Okay.
Absolutely.
Thank you, sir. Moving on to our next jury member. Our next jury member is Mr. Chandar Mohan Minoka, the CGM HR Union Bank of India. Chandar sir, thank you so much, sir. After repeated, thank you, thank you. Thank you, sir. Our next jury member is Mr. Sunil Sharma, President, Chief Actuary and CRO, Kotak Mahindra Life Insurance Bank. Can we have Mr. Sharma on stage? Some flight to catch. No, we completely understand, sir. Our next jury member is Shoma Narayanji, MD and Head Group. Okay, just letting you all know, the one of the jury members is Shoma Narayanji, of course, the MD and Head, DBS Bank India, and of course, our last jury member is Mr. Amol Pai, CTO, Bank State Bank of India. Thank you, sir. No flight to catch. No flight to catch. So that's a great tagline, by the way. Thank you, Amol sir. Thank you so much. And starting off with the reason why we're all gathered here today. So before we start, a big round of applause, ladies and gentlemen, a big round of applause. Because you know for a fact, when you get the award, how great it will feel to hear these roaring applauses. Okay, so we're going to start off. And of course, the constants on stage will have to be Babu sir and Manoj sir. Before you start, sir, anything you'd want to hand me in the sideline?
We cannot escape you. So you have to be there first.
Done, sir, done. Anything you'd want to say before you start off?
Yes, I think I would request Mr. Narendra, who has been there in the jury, to come and share some thoughts about the entries, and maybe Mr. Rastogi or Mr. Amol, either of the jury members or all the jury members, whoever would wish to share some thoughts, please come and share whatever you have seen in the entries. Amol has also gone through all the entries, so you can share some thoughts.
Yeah, good evening to all of you. At the outset, of course, I congratulate all the 20 winners in different categories. And of course, they are the top 20, but we must also appreciate all of the other participants in the process of NBFC awards. And we are also grateful to Banking Frontier that they have very successfully brought this model of awarding NBFCs. And whether in technology, innovation, in any areas, their Banking Frontier has have a deep, what you call, connectivity. And that is also exhibited today's a series of young and energetic leaders in the area of CTO, technology, risk managers, and strategization of our CEOs, founders, all have coming and giving because there are various wisdom and knowledge, particularly in the current changing environment. All of us will have to keep our eyes here open. What is happening globally? What is happening in India? And in order to be more competitive and more customer centric, there is a need to do quite a lot of. At the same time, they cannot forget the internal customers, the human resources of the those institutions. So in the various categories, I could see one is that during this all COVID period also, the performance of the NBFC has been exceptionally good. Everybody had a growth map and they did very well. And the second, of course, a various initiative taken on CSR. That was very appreciable. Quite a lot of them have devoted a lot of their profit for very CSR and even in taking care of the COVID patients and reaching out to the rural areas, providing health facilities, and these are also very good. The other area on HR also they had a very transformative project, and the competency and the skill development, and using the technology in that area. And other area, of course, bringing innovative products in the rural and the bottom of the pyramid, which is acceptable to them. Morning, you would have heard from NABARD Deputy Managing Director that unless we have a localized product, a generalized product will not be acceptable. That area also you have brought quite a lot of improvement. I'm sure as we go forward, there will be, because one area, of course, banks and the NBFC have a very what you call competitive, at the same time complementary area now. In a way, with the co-lending and other model, banks also need NBFC, NBFC need banks. We support the NBFC through giving liability, and you support us by giving origination and getting good assets, and that will go a long way, because another important area is capital. As and when you grow, you need to pump in capital. What I wanted to do that the next year when we will have a large number of NBFs competing equally, and we, the jury, will have tough time to select out of that. Wish you all the best in your endeavors. Thank you.
Thank you very much, sir.
Thank you.
can-
You.
Thank you very much, sir. Please do take your seat.
So
and
we would
will-
request sir to kindly, sir,
Yeah.
that was amazing. We request you to kindly stay on stage with us. And on that note, we request, so all the jury members kindly come on up. Dr. M. Narendra, former MD and CEO, Indian Overseas Bank. We have Mr. Ram Rastogi. We have Mr. Chandar Mohan Minoka and Mr. Amol Pai to kindly come on up. All our lovely jury members with a big round of applause, because this
We should have a
is
group photograph of the jury, and then we will start off with a distribution of the award. We have 15 minutes more. Yes.
awardees. Winners today is indeed a great day, because all our brilliant jury members, everybody on stage will be presenting you with the award. So we're going to start off with category sales and marketing group. The subcategory is best brand building campaign. So please come on up, sir. All the jury members said this is So, ladies and gentlemen, the very first category is Sales and Marketing Group Best Brand Building Campaign. And the winner is Team Finway FSC. Big round of applause for Team Finway. Kindly come on up. Great. Thank you, lovely audience members. Absolutely inspiring. Our next category is Corporate Groups Best Financial Inclusion Initiative. And the winner is Nab Kisan Finance Limited. Nab Kisan, kindly come on up. And before, as and when they walk, ladies and gentlemen, let us tell you, Nab Kisan is also the winner of Corporate Group Best Group Synergy Initiative, and it is a trifecta. Best CSR Initiative. Nab Kisan, you're absolutely on a roll. 3 awards for you. So that's a great display of leadership. I mean, insisting that the entire team comes in is great. Thank you so much. Many congratulations, team Nab Kisan. Moving on to our next category. Our next category is Operation Group, subcategory Best Collection Initiative, and the winner is Ambit Finvest Private Limited. Team Ambit, kindly come on up, and as they work, a very important announcement. Ambit Finvest Private Limited is also the winner of Best Fraud Control Initiative, which is of course under Operation Group. So 2 awards. Thank you so much and many congratulations. There are 2 awards. There are 2 awards. Wait a second. There are 2 awards. Team Ambit, not a problem. I'll take it. I'll take your second award. Fantastic. Moving on to our next category. Next category is corporate groups, best, and subcategories best women customer engagement
Before we initiative. do that,
Yes,
let
sir.
me also invite Amit on the stage from Kia.ai. They are our award partners for this session. A big round of applause to Kia.ai for being the award partner and making this possible. Amit, please come on the stage.
Thank you, Amit Sharma, sir. What a pleasure to have you with us. And with the blessings of Mr. Amit, we now proceed with our next winner. So the category is corporate groups. Of course, as mentioned, Best Women Customer Engagement Initiative. The winner is Satya Micro Capital. Satya Micro Capital team, kindly come on up, and ma'am, as you walk, there's a very big surprise for you. Your team is also the winner of IT and Digital Group Best Mobile App Initiative. Your team is also the winner of IT and Digital Group Best API Initiative. And the fourth award is Human Resource Group Best Leadership Development. So Satya Micro Capital wins 4 awards.
These are some of the Super Trophy winners who have gone and won more than 3 or 4 trophies. Some of the best nominations. This organization has got the best nomination out of the entire lot, and they have won 4 awards. Congratulations to them.
Thank you. Thank you. Thank you, audience members, and many
May I
congratulations.
request the jury members, Mr. Ram Rastogi and Sir, to please take the seat. We can invite Mr. Narendra into the dais.
Thank you, sir. Okay, 4 hands, 4 awards. Great. That's good. That's a good math. Okay. Yes, sir. Moving on to our next winner. The category is Operation Group Best Risk Transformation Initiative, and the winner is Seeds FinCap Private Limited. And Seeds FinCap, while you walk in, a surprise for you, you're also the winner of Operation Group Best Collection Initiative. That's 2 awards back to back. Many congratulations to you. Thank you so much. Many congratulations and thank you. Moving on to our next winner. Our next winner of Operation Group Best Risk Transformation Initiative is Tata Motors Finance. Team Tata Motors Finance. Many congratulations. Kindly come on up. Sir, photograph is a must. That too on mobile.
That was Kashmiri connection.
Absolutely. Absolutely. Many congratulations, sir. Thank you so much. Our next winner of Operation Group Best Risk Transformation Initiative is Team Anand Rathi Global Finance. Many congratulations. Wow.
Before that, I think we have one more jury member of ours who has joined from Kotak Life.
Thank you, sir. Thank you so much for.
From Kotak Life.
Oh, Kotak Life, yeah. Mr. Sunil Sharma. Mr. Sunil Sharma. Ladies and gentlemen, a big round of applause for Mr. Sunil Sharma, President, Chief Actuary and CRO, Kotak Mahindra Life Insurance. One of our earlier panelists as well. Okay. One second, I can't understand who the winner is and who the jury is at this point. Sir. Thank you so much. Many congratulations, team Anand Rathi Global Finance.
Before we announce the next award, may I request a token of appreciation for Mr. Sunil Sharma, please?
Thank you, sir. Thank you. Okay, moving on to our next winner. The category is completely changed. It is now IT and digital group, of which best big data AI ML initiative. I mean, this is futuristic now. Okay, and the winner is Team Arthan Finance. With a big round of applause, can Team Arthan Finance kindly come on up? One of our earlier panelists as well. Yes. Thank you so much. Moving on to our next winner. Our next category is IT and digital groups. It remains the same. The subcategory is Best Omnichannel CX Initiative, and the winner is Team Dwara KGFS. Thank you so much, ma'am. Many congratulations.
Thank you
so
very
much,
much.
ma'am. Thank you.
May I request Amit and Amol to take the seat, and Ram Rastogi ji, please come once again.
Today's fair bit of exercise, sir. I think you've completed 5,000 steps at least. Okay. All right. So, moving on to our next winner of IT and Digital Group Best Application for Containerization Initiative, and the winner is none other than Team Indian School Finance Company. Team Indian School Finance, kindly come on up. Many congratulations. Thank you so much. Moving on to our next winner of IT and Digital Group Best Mobile App Initiative is, of course, Credit B. Team Credit B, with a big round of applause. Kindly come on up. There was quite an enthusiasm I gave. And where is Team Credit B? Sir, how about whenever is it that they show up, we hand them their token and their
Absolutely.
award?
They were around in the morning. They came for a session. Team Credit B.
So whenever is it that they show up, we give them
No
the award.
issues. We will
And moving
proceed
on,
to
yes, sir. Moving on to our next winner in IT and Digital Group Best Big Data AI ML Initiative is Team Neo Growth Credit Private Limited. Team Neo Growth. That's quite a lot of you, and there is no enthusiasm. No, not permitted. Thank you so much. Thank you so much. Fun chatter. That's great. Good. We end on a positive note, and on that note, start on a positive note for the other winner. Our next winner of IT and Digital Group Best Big Data AI ML Initiative goes to You Grow Capital with a big roaring round of applause. Team You Grow Capital, kindly come on up. Team You Grow, the audience members seem to be more excited than you. Not, I mean, get yourself a big smile on your face. Beautiful. Thank you. And audience members, lovely, lovely audience members.
Sunil sir, I can request you to take the seat, and may I have sir please come on the stage once again.
Okay, so lovely audience members, just so you know, we're down to our final 5 awards. Okay, so brace yourselves. And on that note, we've completely changed the category. Now it is corporate groups best CSR initiative, and the winner, of course, is Team HDB Financial Services. So Team HDB, kindly come on up. Many congratulations to you. Great. Thank you. All right. Moving on to our next winner of Corporate Group's Best Financial Inclusion Initiative is none other than Team Vivify India. Can we have Team Vivify on stage with us? Sir. So the audience members seem more happy. Thank you and many congratulations. Ladies and gentlemen, just letting you know we're down to our, of course, a big round of applause. Thank you, sir. Many congratulations. Many congratulations. Ladies and gentlemen, we're now down to the final category, of which 3 subcategories remain. So 3 awards. The category is Human Resource Group. So we're going to start off with the first subcategory, Best Leadership Development. It goes to none other than Fullerton India Credit Private Limited team. Kylie, come on up. Many congratulations. Wow, that's like one entire row sitting in. Great. Thank you so much for your time and your presence. There's a full questionnaire examination happening by the jury members. Sir, never stop being a jury member. Great, sir. Thank you so much. Okay, ladies and gentlemen, down to our final 2 awards of the evening. Thank you. Firstly, before we even give away the awards, thank you so much. You've been absolutely amazing. And amazing, of course, has been Team Banking Frontiers for making today happen. So big round of applause for Team Banking Frontiers. My God, it is difficult. It is difficult collecting so many and getting so many of you leaders on the same platform. Absolutely amazing. Okay, now we begin with our final two. Human Resource Group Best Talent Diversity and Culture goes to Press Loans. Team Press Loans, kindly come on up. Many congratulations to you. Ma'am has been one of our consistent viewers. I was there right from the morning watching ma'am. Thank you so much. And for the final award of the evening of DNA 2022 of Human Resource Group, Best Talent Diversity and Culture goes to Team 6,000 steps are over. of the 10,000. Great. You got the entire jury. Okay, and the award goes to Team Light Microfinance. Team Light Microfinance, kindly come on up. Many congratulations. Not so soon, not so soon. We at Banking Frontiers are a super generous bunch. Thank you, sir. Many congratulations. There is a special award that awaits. Okay, so special award. Jury members, please come on back. There is one more award waiting to be presented by your hands. The special award goes to Swatantra Microfinance. Can we have Team Swatantra Microfinance on stage with us? Team Swatantra Microfinance. This was a special award for a special company. And ladies and gentlemen, oh, no closing remarks. Like we mentioned, Banking Frontiers is super duper generous. The awards keep coming. I've been just communicated. There are 3 more awards to be given. Till then, the jury members can take their amazing photographs. Ladies and gentlemen, 3 more awards await. And I've been told, jury members, please stay, please stay. There is a surprise 3 more awards. Okay, so all 3 awards go to the same brilliant organization, which is none other than Team PNB. Team PNB? Housing Finance, not just Team PNB. Team PNB Housing Finance, kindly come on up. All 3 awards are being won by the same organization.
This is again a super trophy where the organization is winning 3 awards in different categories. So congratulations, Team PNB Housing Finance.
Team PNB Housing Finance, we wanted to keep things a little more suspenseful. Apologies for that. Babu sir, do we have more generous awards to give or can we wrap up?
I feel you should also give me an award.
I thought you were saying, Nikita, you should also get an Okay, ladies and gentlemen, with this we come to the... Thank you so much. Thank you, sir. Thank you. Thank you, sir. Thank you so much. Wow.
before we end the award, one of the most important thing is while I have been standing here or Manoj is standing here, but the people who have been awarded, who should be awarded or ideally been recognized are the people who were behind the scene. We have a team of 18 members of the team who are here and who performed this entire activity, brought together all the nominations and organized these conversations, met up with the speakers as well as panelists and organized the jury. So I would, on behalf of all of you, like to also congratulate the team at Banking Frontiers which helped us to do this. If team members are around, we would request them to come here for a small photograph. All the team members who are around. Sudarshan, Suya, please come on the stage. Pramod, for 1 minute.
They're a little shy.
So these are some of the team members who have come on the stage. And of course, we would want our great hostess of the day also to be a part of this picture. Please join us. You should be in the center. Thank you very much. And one picture with our friend. You can come in the center. You are the center of attraction today. She doesn't know you. So great. I think with that, we would like to thank every one of you. We have a whole lot of partners who have actually made this possible. Kia.ai, Monetago, Lead Squared, Simple CRM, Data Sutram, Epic Indifi, Lentra, Zing HR, Array, Skit AI, Credility, Fineza, Secure i360, Alpha Plus, and a whole lot of companies which have actually made all this possible. I would like to thank all the partners, all the applicants, all the winners, and our jury members and team EY, which is not present here, who audited the function. So thank you very much, everyone. We look forward to meeting all of you in the next NBFC Tomorrow Conclave and DNA Awards 2023. Thank you very much.
Thank you, Babu sir. Thank you, Manoj sir. Ladies and gentlemen, with this, we come to the end of DNA 2022. You are the leaders who made it all happen. Until next time, thank you.